So let's start with the revision of your CA into May 25, right? Make sure that you are with me and if required, repeat with me. Repeat pannunga. Correct or wrong, forget about it. If required, if I am asking a question, I am expecting an answer. Now GST in India, basics. Questions are generally coming from where? As discussed, we'll only discuss A, B, C analysis like A and B part. Important, very important and important. So GST in India question, general what are the taxes which are subsumed inside GST? Enna taxes GST kulla vandiruchu. Right? This is a frequently asked. In the chapter, majority of the time, more than 50% of the time, the question is only what are the taxes which are subsumed in GST? Central taxes, what are the taxes which are subsumed in GST? First is excise duty. First is excise duty. All the types of excise duty, whether it is central excise duty or additional excise duty or excise duty on toilet and medicinal preparation. Excise duty. Next is service tax. Next is central sales tax. Central CST. Right. Though it is levied by central government, it is collected by state government. Next is customs duty. No. Customs duty is still alive. Customs duty is, but customs duty la break up andirchu. Countervailing duty and special countervailing duty. It is no more there. It is replaced by IGST. It is replaced by, so counter customs la, not customs duty is still alive, but a part of customs duty which is countervailing duty and special countervailing duty, which is nothing but duplicate of excise and duplicate of VAT, is replaced with IGST. So today customs duty is basic customs duty plus social welfare surcharge plus IGST. So you don't have CVD and special duty. Customs duty was that, it is still that. அதோட breakup plus CVD special CVD இருந்துச்சு, that is excise and VAT. அதை remove பண்ணிட்டு IGST. So what is customs duty today? BCD plus SWS plus IGST. In simple சொன்னா central taxes என்னன்னா செத்து போயிடுச்சு. One, excise. அந்த மூணு types of excise. Second, service tax. Third, CST. Fourth, part of customs duty. CVD and special CVD. CVD and special CVD. What are the state taxes that are subsumed? VAT and sales tax. Right? VAT and sales tax are opposite to entry tax or purchase tax. So VAT, sales tax is gone. Entry tax, purchase tax is gone. Taxes on advertisement is gone. Betting, gambling, lottery is gone. When I am telling it is gone, it means that it is converted to GST. Right? Luxury tax, which was there on hotels, is gone. But when you talk about entertainment tax, be very careful. Entertainment tax by state government settu poiduchu, GST la vandiruchu. But entertainment tax by local authority is still alive. So entertainment tax by local authority is still there. Entertainment tax by state government is gone. But entertainment tax by local authority is still alive. Are you guys clear with this understanding? Are you guys clear with this? What are the state taxes which are subsumed? VAT, sales tax, entry tax, purchase tax, advertisements, lottery, betting, gambling, luxury tax, entertainment tax by state government, by local authority. Ippo kuda irukku. On movies, when you go for movies, entertainment tax which is there is of local authority. So 4 plus 6. 4 plus, why is the last point not relevant? Time pass. Any surcharge or cess on it, automatically it's gone. If these taxes are not there, any surcharge or cess on the same is automatically gone. It's automatically ruled out. Right? Now, when you talk about special goods, these are asked at times. So, normal question in GST in India is, what are the taxes which are subsumed in GST na settu poiduchu? 4 central taxes and 6 state. Other indirect taxes are still alive. There are a lot of other indirect taxes. Road tax alive, motor vehicle tax alive, VAT travel tax alive, stamp duty alive, clean energy cess alive. All the other indirect taxes are still alive. These indirect taxes are gone, and there are special products on which you might not have GST or you might have GST with other taxes. What are they? First, alcoholic liquor for human consumption, permanently outside GST. From Constitution itself, it's outside GST. So when you talk about alcoholic liquor for human consumption, it is permanently outside GST. What is the tax? Which means GST irkadu. What is the tax? It is state excise duty, state VAT, CST. State excise duty to state government, state VAT, CST to state government. No revenue to central government. Then you have 5 notified petroleum products. What are the 5 notified petroleum products? Petroleum crude, high-speed diesel oil, motor spirit, natural gas, and aviation turbine fuel. Again, crude, high-speed diesel oil, motor spirit, which is petrol, natural gas, aviation turbine fuel, which is white petrol. These are temporarily outside GST, which means they can come inside GST when GST Council recommends. When GST Council, as of now, they are outside GST. But what is the tax? It is not state excise duty. It is central excise duty to central government, VAT or GST to state government. Look at the difference. Alcoholic liquor for human consumption, permanently outside, and 5 notified petroleum products, temporarily outside. Alcoholic liquor for human consumption, no role of central government, it's only of state government. State excise duty plus state VAT, CST. And when you talk about 5 notified petroleum products, central and state. Central government will get central excise duty, state government will get VAT and CST. Now there are certain items which are both inside as well as outside GST. Tobacco and tobacco products, including your cigarettes. Now that will have your central excise duty and GST, no VAT. Central excise duty fully to central government, GST shared between central and state. Central excise duty fully to central government, but GST will be shared between central and state. So tobacco and tobacco products, there's no VAT and CST. There's no VAT and CST. And finally, you have opium, Indian hemp, narcotics and narcotic drugs, where it is ulta. Now it is state excise duty fully to state government and GST shared between central government and state government. State excise duty fully to state government, GST shared between central and state government. Are you guys clear with this understanding? So these two items, tobacco products and opium, Indian hemp, narcotic drugs, it is inside GST, but there are other taxes. What are the other taxes? Either central excise duty plus GST or state excise duty plus. Unlike these two items, first two items, no GST. First two items, there is no. One is permanently outside, one is temporarily outside GST. And in addition to it, certain items will have compensations. Certain items will have, like your cigarettes is having compensations. Your motor vehicles, certain motor vehicles will have compensations. Centralized AC might have compensations. All posh items will have compensation. Says that compensation will be compensated by the central government to all the state governments, and as of now it will be that till 31st of March 2026. 31st of March 2026. So this is a repeatedly asked question, rather not the second part, first part. What are the taxes which are subsumed inside GST? 4 central taxes and 6 state taxes. Apart from that, any other indirect tax is still alive. And 4 special items. 2 are permanently or temporarily outside GST. Other 2 are, it is inside as well as outside GST. Right? Now, other areas where you get questions from this chapter, GST in India. They ask question about MCQs level. What is the article that gave birth to GST? Article 246A. Article 246A. Article 246A is the article which gives birth to GST. So GST is born by Article 246A, and it tells that there are concurrent powers between Parliament and Legislature of State. Both will sit together and make GST law. And this gives rise to CGST Act and SGST Act. Concurrent powers. Parliament and State Legislature of States both will have concurrent powers. It is not Article 246, it is Article 246 capital A. The only act which is outside Article 246 throughout India is GST, Article 246A. Article 246A. Now, this article has an exception. Article 269A. First, initially it tells that all the matters of GST will be concurrently decided by Parliament and Legislature of States, except for certain matters where only and only Parliament will have the power. Legislature of States will not have the power. Only and only Parliament will have the power. 2 points. 1, to determine where is the place of supply. Only Parliament will decide. That is the reason you discuss that in IGST Act. This is the reason you have IGST Act. You discuss that in IGST Act. And second, whenever it is IGST on interstate supply including imports. Now CGST, SGST means CGST will go to central government, Tamil Nadu SGST will go to state government. What about IGST? IGST, central government will fully keep it as a custodian, will retain 50%, balance 50%, it will give to origin state or destination state. Destination based taxation, correct? Now, how to give it, what is the formula will all be decided by Parliament. So, distribution of IGST between the central government, that is union, and the states will be decided only by Parliament. What are the two matters which will be decided only by Parliament? Place of supply, distribution of IGST. Place of supply, because IGST does not belong to central government. 50% central government. IGST will be fully taken by central government, but 50% will be retained by central government. 50% will be given to destination state. Will be given to destination state. How it will be done? Parliament. Article 246A is the reason why you have CGST Act, SGST Act. Article 269A is the reason why you have IGST Act. Why you have IGST Act. Then GST Council. Question comes from this area. Rather, question will not come from 246A, 269A. Question will come from 279A. GST Council. When you talk about your GST Council, how many members are there? There are 2 members of the center and 31 members of the state. How 31? There are totally 28 states plus DPJ. APJ Abdul Kalam, remember. DPJ. Delhi, Puducherry and Jammu. These 3 Indian territories will be treated like states. So GST la it is 28 plus 3. So 2 of central and 31 of states. Who are the 2 central ministers? One, Union Finance Minister. Other is Union Minister of State, who is in charge of finance or revenue, who coordinates between Union Finance Minister and State Finance Ministers. Who will coordinate between Union Finance Minister and, so central will have 2, states will have 31. Totally how many members are there? 33. And Union Finance Minister will always be the chairperson of GST Council. Why is chairperson? Members will decide that who is the vice chairperson. And what is the important area here? Whenever you talk about GST Council, they will decide everything in GST. GST Council is godfather of GST. Every decision in GST is taken by GST Council, and only then it becomes a act or a rule. Everything is decided by GST Council. So for a meeting of GST Council to start, how many members should be present? 50% is the quorum. 50% is the, for a meeting to start, 50% is the, so what is 50% of 33 members? 17. Simple. 17 members present, meeting will start. If 17 members are not present, meeting will not start. Meeting starts. If 17 members are there, meeting will start. If 17 members are not there, it will be adjourned. Next time it will be there only if 17 members are present. Correct. Otherwise, meeting will not start. Now, what is the pass percentage? Supposing we at GST Council, we are deciding on 10 matters. Matter 1, 2, 3, 4, 5, 6, 7, 8, 9. On all 10 matters, either it will be passed or it will be failed. The resolution will be passed or resolution is not passed. How is resolution passed for each of the matter? Meeting you have to see only once. But if pass and fail, you have to see for all the 10 matters. You have to see for all the, how to see, what is the pass percentage? Yeah, I say its pass percentages. Aggregate is 50 for each subject. Aggregate 150, 150. Correct. But pass is 40. Aggregate is 50. Likewise, they have pass percentage. Their pass percentage is very, very high. So their pass percentage is 3/4. That is 75% is the pass percentage. But wait. 3/4 is not the simple pass percentage. It is weighted average pass percentage only of the members present and voting. You don't count members who are absent. You don't count members who are absent. Members present and voting. Members present and voting. Only count them. But it is weighted average. So it is not simple 75%. So weight is given to whom? 1/3 weight is given to center and 2/3 weight is given to all the states. Right. So we are talking about a scenario where total members are 2 and 31. Present and voting is 2 and 20. In favor. Let us assume that in favor is 2 and 15. What is the pass percentage? Whether quorum is present? Whether quorum is present? Quorum is present. What is the pass percentage? Pass percentage is 2 divided by 2. That is in favor divided by present and voting 1 third, which is 33.33%, and 15 divided by 20. So this is not relevant now. 15 divided by 20 multiplied by 2 third. So what it is? 50%, correct? What is the total percentage? 83 point pass. Right? 1 third to center and 2 third is altogether given to states. So that is how you calculate the pass percentage. So when you talk about your GST council, this is how it is decided. And understand, there's a question which was asked in one of the examination that whether if at all there is a problem in GST council, whether per se it will become invalid. So they have answered no. The decision of GST council will not become invalid just because there is any defect or vacancy in the constitution of GST council, just because there is a defect in appointment of any member, just because of procedural lapses. Meeting பண்ணும்போது there are some procedures which have not taken care. All the decisions of GST council will be binding, even if these are some small defects. What are the defects? Any defect or vacancy in GST council, any defect in the appointment of any member, or procedural lapses. And what is the work of GST council? You can remember might be few times questions are asked, but technically speaking, everything is GST council's work. Right? What are the taxes which are subsumed inside GST was finally decided by GST council. What are the rates and exemption is decided by GST council. What are the special rates for special period decided by GST council. Threshold limit for registration and composition scheme decided by GST council. Special category state special limit decided by GST council. Apportionment of IGST decided by GST council. Place of supply decided by, but in these two cases only parliament, only and only parliament. Dates on which petroleum products will be inside GST, temporarily outside GST, right? They'll come inside GST decided by GST council. Any dispute between two governments, settlement by GST. Any other matter, actually technically speaking, anything inside GST is decided by GST council. Are you guys clear with this understanding? So that is all about your understanding when you talk about your first chapter important areas, GST in India. Yes, now when we talk about levy, the main thing is your supply. And when you talk about your supply is defined in section 7 that along with schedule 1, schedule 2, schedule 3. Supply is to be read as actual supply, one part, and second part, there are two parts of actual supply, plus deemed supply, again there are two parts of deemed supply, and minus not supply, again there are two parts of not supply. Once it is supply, then finally you have to decide whether it is supply of goods or supply of services. Please do understand, before understanding whether it is supply or not, do not go to the nature of supply. Nature of supply is very simple. If at all it is supply, is it supply of goods or is it supply of services? It is not about goods and services. It is about is it supply of goods or supply of services. Now let us focus on your actual supply. Actual supply, both the parts more or less convey the same meaning. For actual supply, your activity can be any activity. Supply includes sale, transfer, disposal, barter, exchange, lease, license, rental, any activity, anything. It should be in course or furtherance of business, that is B, and it should be against consideration, whether monetary consideration or non-monetary consideration, or paid by the recipient or paid by any other person, paid for an activity done or paid for an activity promised not to be done, refraining from an activity. So it is for any activity A, in course or furtherance of business B, and against consideration, which can be monetary, non-monetary, paid by recipient, paid by other person, paid for an activity done or refraining from doing an activity. So that is all about your consideration. So when you talk about your actual supply part 2, it in fact goes in the same way. It talks about, again, any activity, though business is not specifically mentioned here, but when you look at the definition of business, please understand that business includes business definition has got 9 points. 2 are the general meaning, 2 are clarifications, and rest 5 are specific clarification. In 5 clarification, it is said that any activity done by a club to a member or member to a club is business. So business, though not specifically mentioned, it is silently present when you see the definition of business and consideration. And one important point to remember, whenever you are talking about business, please understand that your intention to earn profit is not relevant. So it can be any trade, commerce, manufacture, profession, vocation, adventure, wage, or any such activity, whether or not for pecuniary benefit. Your intention to earn profit is not relevant. And put in a simple words, even if a charitable trust is selling certain goods or giving certain services against a consideration, it would be treated as business. So that is the general understanding of the term business. Pecuniary benefit is not relevant, not at all relevant. Howsoever, there should be some connection with business per se. Supposing if you guys are selling your second-hand phone or second-hand vehicle, which has got nothing to do with your business because you are students, then that phone or that your two-wheeler or four-wheeler, which has got nothing to do with anyone's, because you are not at all doing anything, any activity per se in terms of business, then it will not be subject to GST. So business, please understand your intent, you to do an activity, but your intention to earn profit is not at all relevant. Intention to earn profit is not at all relevant. In the same definition of business, there are 5 specific clarifications, out of which one clarification tells that any association or club to members or members to club is always treated as business. So once you see this, you will find very surprisingly that both actual supply part 1 and part 2 are the same. But please understand that actual supply part 1, both tells the same thing. Any activity, business, consideration. But what is the key difference is actual supply part 1 can be from any person to any person. Any person to any person. But actual supply part 2 is only and only between your clubs, association and their members. So prima facie, actual supply part 2 is a subset of actual supply part 1. But please understand it is more in nature of clarification because there was a Supreme Court judgment given in Calcutta Club Company telling that clubs and members are the same. To overrule that Supreme Court judgment, they have now clarified that even if any activity is done by a club or association to their members or members to the club or association, they will not be treated as the same person, they will be treated as distinct person. Rather, the entire effort to mention actual supply part 2 is to tell that they will not be treated as the same person, they will be treated as distinct person. They will be treated as 2 different persons. They are not the same. They are not the same. Otherwise, whatever is actual supply part 1 is actual supply part 2. Any activity present both the places, business present both the places, consideration present both the places. What is the differentiating factor is in actual supply part 1, any person to any person. Actual supply part 2, specifically they talk about clubs, association and the members to mention or to highlight on the fact that they will not be treated as the same person, they will be treated as a separate persons. So that is your entire understanding of your actual supply and a bit of understanding of consideration and the term business. Moving on to your deemed supply, please understand ICAI loves deemed supply. The question will always revolve around deemed supply, and more so over in deemed supply, ICAI loves something called as importation of services. Repeated questions will be only asked only against your importation of services. So your actual supply was given in section 71A and section 71AA. Deemed supply is given in section 71B part 1 and section 71C your part 2. Section 71B talks only about one deemed supply, which is importation of services. Importation of services. And deemed supply part 2 talks about 4 notified activities of schedule 1. So first point is activity is in deemed supply part 1 is importation of services, whereas deemed supply part 2 is 4 notified activities in schedule 1. So activity is changing now. It is not any activity. In first part it is importation of services, in second part it is 4 notified activities of schedule 1. In your deemed supply part 1, your business may or may not be present, but consideration should be there. So if you look at this deemed supply part 1 for your importation of services, business may be there, business may not be there. More focus is on business not there. So business may be absent, but consideration should be present. Whereas in your deemed supply part 2, which is schedule 1 4 cases, business is silently present. If you see all the 4 activities of schedule 1, In the first paragraph, they'll talk about business assets. In the second paragraph, they'll talk about in course of furtherance of business. In the third para, they'll talk about principal and agent. Obviously, principal agent relationship is only in course of business. And in the fourth para, again, they'll talk about in course of furtherance of business. So business is silently present, but consideration is absent. But consideration is absent. That is the reason deemed supply part 2, which we are calling as schedule 1 4 cases, is otherwise called as supply without consideration. Supply without consideration. So if you look at your deemed supply 71B and deemed supply 71C, activity is restricted. In first part, it is only importation of services. Activity is only importation of services. Business may or may not be there. So business may be absent. Consideration is there. So B may be absent, but C should be there. Whereas in deemed supply part 2, schedule 1, 4 notified cases. Activity is restricted only to 4 cases of schedule 1. Business is silently there, so business is there. Consideration is not there. It is otherwise called as supply without consideration. Now, as I said, ICAI loves something called as your importation of services. So when you talk about importation of services, it is categorically given in deemed supply part 1, which is section 7B. Also in deemed supply part 2, which is section 7C, schedule 1. The fourth para again talks about importation of services. So we are merging both. So if at all you're talking about importation of services, there are two possibilities. It may be with consideration, maybe without consideration. So your activity is your importation of services. Consideration may be present, consideration may be absent. So first let us focus only on cases where consideration is present. So importation of services activity, consideration is present. If business is also present, it is actual supply. All the three are present. If business is also present, activity is importation of services, business is present, consideration is present, it is actual supply. If at all business is not there, it is not in course of furtherance of business, then don't worry, it is covered by your deemed supply, section 71B. So here, if you look at the situation carefully, activity is there, importation of services, consideration is there, but business is not there. So activity, importation of services is there, consideration is there, but business is not there. So when C is present but B is not present, it is deemed supply, section 71B. But when you talk about your importation of services where it is without consideration, now you're moving to without consideration. If it is without consideration and it is to be covered by deemed supply, it should be in course of furtherance of business. So business should be present. In addition to business, there should be an extra condition that it should be either from related person or establishment outside India. So now there is an extra condition. If business is present and consideration is absent, for importation of service to be supplied, it should be either from related person or your branch outfits outside India, that is establishment outside India. Only and only then it would be covered by deemed supply, that is part 2, which is section 71C, para 4 of schedule 1. Look at the things carefully. If at all your business is present and consideration is absent, if at all your consideration is present, if at all your consideration is present, it is for consideration, monetary and non-monetary, but it is not in course of business, then there's no extra condition. By default, it is deemed supply. But if it is ulta, if your consideration is absent, if there is no consideration free, if at all it is in course of business, for it to be deemed supply, part 2, that is para 4 of schedule 1, it should be from related person or establishment outside India. It should be from related person or establishment outside India. Only then it would be covered by your section 71C. So there's a difference. If consideration is there, business is not there, deemed supply. See, if all A, B, C are there, activities, importation of service, business is there, consideration is there, actual supply. If activity, importation of service is there, your consideration is there, business is not there, no extra condition. Here, you don't focus on your extra condition, there's no focus on your related person, there's no focus on establishment outside India. No extra condition, it is deemed supply, 71B. But if it is ulta, if at all business is there but consideration is not there, B is present, C is absent, there should be an extra condition, it should be from related person or establishment outside India for it to be
for it to be deemed supply, section 7(1)(c), para 4, schedule 1. If in any other case, if at all, supposing there is no consideration, there is no business. No consideration, no business, not supply. Or if there is no consideration, business is there, but it is not from related person or establishment outside India. That could be one more scenario. If there is no business, no consideration, no B, no C, not supply. Ulta, if there is business but no consideration, but it is from unrelated person, then it is not supply. And when you talk about related person, please understand two important aspects of a related person. Employer, employee are covered by the definition of related person, explanation to section 15. Also, members of the same family are covered by related person. They are covered by related person. Members of the same family are covered by related person. So, members of the same family includes spouse and children unconditionally. But when you talk about your parents, grandparents, brothers and sisters, they are related person only if they are wholly or mainly dependent on you. And therefore, ICAI loves to ask this question repeatedly. If at all Lakshman from say London is providing services to Mr. Ram of say India, technically it is importation of services, right? Assume it is free of cost because they are brothers. Because they are brothers, Ram and Lakshman, assume that they are brothers, it is free of cost. Understand that it is importation of services, yes. And additionally, a fact is given that Lakshman is a well-known advocate and Ram is a well-known businessman, and this importation of services is for a business dispute. It's for a business understanding. Some business dispute is there of Ram in India and he's taking a free advice from Lakshman. So it is importation of services. Is it in course of furtherance of business? Yes. Is it for consideration? No. Why? It is free. But is it deemed supply? Is it from related person? Because when business is present and consideration is absent, there should be an extra condition. It should be from related person or establishment outside India. Is it from related person or a branch outside India? Answer is no. Why? Because when you talk about brothers, sisters, parents and grandparents, they are related person only if they are wholly or mainly dependent. Now the both are brothers but they are not wholly or mainly dependent. So though technically they are brothers but they are not related person, therefore it is not deemed supply as per para 4 of schedule 1. Why? It will not fit under the category of related person. But if I change this example between brothers to spouse, say Sita and Ram, spouse, then the answer would have been though they are independent, but still it would be related person, because for spouse and children, whether independent or dependent, they are always related person. So this is an important area and ICAI plays with this area repeatedly. Why this is not deemed supply? It is not actual supply because consideration is absent. Business is present and consideration is absent. If B is present and C is absent for importation of services, there's an extra condition. It should be either from related person or establishment or branch outside India. These brothers, Ram and Lakshman, will not be related person because both are independent. One person is well-known advocate, another person is businessman, so they are not dependent on each other. Therefore, they cannot be called as related person, therefore not a deemed supply. But if it was spouse, for spouse and children, there's no condition whether they are dependent or independent. The answer would have been it is from related person and it would have been deemed supply. So that is an important area when you talk about your importation of services. And moving on to the second part of your deemed supply, which is schedule 1 4 activities, which is otherwise called as your supply without consideration. The fourth activity we have already completed when we spoke about importation of services. So importation of services where consideration is absent, business is present, it should be from a related person or establishment outside India, and it only focuses on services. This we have completed. Now what are the other aspects? The first point is you're talking about gifts and free samples. Permanent transfer or disposal of business assets on which ITC has been availed. On which ITC has been availed. So para 1 only focuses on goods. Para 4, which you have already completed, importation of services, focuses only on services. Whereas para 1, which is basically about gifts or free samples, it only and only talks about goods. A very simple understanding. It talks only about gifts and free samples. If at all at the time of purchase I have taken input tax credit and I'm giving it as gift or free sample to someone, if I've enjoyed input tax credit, I have to pay output tax because it is deemed supply. It is permanent transfer or disposal of business assets on which I did take credit at the time of purchase. If at the time of purchase I did not take credit, or I took it but I reverse it later, then that is gift and free samples is always permanent transfer or disposal of business assets. But at the time of purchase I did not take the credit, therefore I am not going to pay output tax. Why? It will not be covered by deemed supply because ITC has not been availed. ITC has not been availed. Make it simple. If you have enjoyed the input tax credit at the time of purchase, you have to pay output tax at the time of gifts of free samples because of para 1 schedule 1. If you have not enjoyed input tax credit at the time of purchase, you need not pay output tax at the time of gifts of free samples because it is not covered by para 1 schedule 1. It is not covered by para 1 and schedule 1. When you talk about your second para, it talks about supply between related person or distinct person in course of furtherance of business. It talks both about goods and services. This supply can be of goods as well as services. See, para 1 only goods, para 4 only services, para 2, para 1 only goods, para 4 only services, para 2 between related person, distinct person, it can be goods or services. It talks about related person or distinct person. Now, what is related person? Related person is defined, though we have taken two important aspects of related person, employer, employee, members of the same family. There are all other points, legally recognized partners, that is another point, or directors or officers in one other business, or you're talking about holding company, subsidiary company, co-subsidiary companies. Control aspect is also covered there. So that is the rough understanding of your related person. Distinct person means it is the same company but having different GST number. Some same company will have different GST number normally because it is having presence in multiple states. Supposing Reliance Limited Tamil Nadu and Reliance Limited Karnataka is that they are branches, but they'll have separate GST number. So any transaction between them will be treated as deemed supply. Will be treated as deemed supply. Related person, they are two different companies, but they are related. So that would be deemed supply even if it is free. Distinct person means branches but with separate GST number. Supposing I have 10 branches within Tamil Nadu state, all will be actually under only one GST number in normal scenario. So any transaction between them is neither actual supply nor deemed supply, but any transaction between a branch in say Tamil Nadu and a branch in say Karnataka having different GST number, and any transaction between them would be treated as deemed supply. Though there is no consideration, it would be treated as deemed supply. So please understand the difference between a related person. Technically speaking, two different persons, but they are related. Distinct person, there's only one person or one company, but having separate GST number. Having separate GST number. Normally, separate GST number concept is in multiple states, but within the state of Tamil Nadu also, if you want, you can go for multiple registration. And if you go for multiple registration and if there is a branch transfer between those multiple registration, then again it will be deemed supply. Now please understand, any supply between related person or distinct person, if it is for consideration, it is actual supply. Even if it is not for consideration, it would be deemed supply. See, any transaction between related person, distinct person, if it is for consideration, it is actual supply. You need not come here. Even if it is free, the entire focus on schedule 1 is without consideration. Even if it is free, it will be treated as your deemed supply. So between related person and distinct person, that is branches with separate GST number, if it is for consideration, actual supply. No consideration, but still it will be deemed supply. The only exception here is gift to employees by employer up to 50,000 per financial year per employee. Only exception. Gift by employer to employee 50,000 per financial year per employee is not supply, is not at all supply. So if you want to understand here, gifts was corely covered in para 1, but here part of gift is also covered in para 2, part of gifts. So para 2 generally talks about any transaction of goods or services between two related person or two distinct persons, including gifts. Gifts is only one of the example in para 2, not the only case. So please understand this particular point, how things will happen for gifts and free samples. If at all you're giving gift to unrelated person, so if gifts are given to unrelated person, if ITC is availed, ITC is not availed. If ITC is availed, it is deemed supply. If ITC is not availed, it is not supply. If they are given to related person, normal related person, whether or not ITC is availed, it is deemed supply. If it is given to employees who also happens to be one of the related persons. So previous point, you can talk about holding company, subsidiary company. So related person means say holding company, subsidiary company. Whether ITC is availed or not, it is deemed supply. So here, the entire focus in the first case was para 1. Here, the entire focus is para 2. But when you talk about employees, they give a relaxation. So if at all ITC is availed, per se it is deemed supply. If ITC is not availed, but gift value is more than 50,000. Gift value is more than 50,000 per financial year, it is deemed supply. But in one scenario, it would not be supply if at all ITC is not availed, the gifts are given to employees. This entire understanding, we are talking only about gifts of free samples. If the gifts are given to employees, ITC is not availed, and the value of the gift is up to 50,000 per financial year per employee. The value of the gift is up to 50,000 per financial year per employee. Then it is not supply. So if at all you are talking about gift given to employees where ITC is not availed and the gift value is up to 50,000 per financial year, then there's a possibility of not supply. So lot of permutation combinations are there. First point, to unrelated person, it is very simple. If you have enjoyed ITC, deemed supply, para 1. No ITC, not supply. If it is a related person, again very simple. Whether you have taken ITC or not, it is deemed supply, para 2. To employees, again, whether you have taken ITC or not, it is deemed supply, but there is one exception. What is that exception? If at all you have not taken ITC and the gift value is up to 50,000 per financial year, then it would not be supply. It would not be supply. So that completes your para 1. Entirely about gifts and free samples. Para 2 is not about gifts and free samples. It is about any transaction of goods or services between a related person and distinct person. Gifts could also be covered there. Para 4 already we have seen. And the last thing that is to be discussed or revised is your transaction between principal and agent. Any transaction between principal and agent where you are only talking about goods. So para 3 only talks about goods. Para 1 only goods. Para 2 goods services. Para 3 only goods. Para 4 only services. So when you talk about para 3, any transaction between principal and agent would be treated as deemed supply, but here we are not talking about normal agent. We are talking about an agent who is authorized to transfer the title or who is having the power to raise the invoice under his own name. So if at all a customer is going and purchasing a car from an automobile showroom, he'll always think that the dealer is the owner of the car. The dealer may not be the owner, but he'll always think. So you're talking about what agent? You're not talking about normal agent. We're talking about agent who's having the right to raise invoice under his own name. So we'll be giving the invoice under the agent's name. So customer will always think that this agent is the owner. In reality, the agent will not be the owner, but customer will always think that this agent is the owner. So we call it as special agent as per Schedule 1. That special agent transaction is always deemed supply. So if it is normal agent, we are not worried. So we are not talking about normal agent. We are focused on special agent. So this is normal agent and here we are focused on special agent. For a normal agent, agent will give his supply of services to principal. He will charge commission and principal will supply the goods to customer, selling price. And by the way, both are actual supply. Agent will have consideration, commission, and principal will also have consideration, selling price. So agent's consideration will be commission and principal's consideration will be selling price. We are not talking about normal agent. In normal agent, both are actual supply. One is actual supply of services and one is actual supply of goods. Our focus is on a special agent where agent will raise invoice to the customer. Principal will not be in touch with the customer. So agent under his own name will give invoice to the customer, there will be supply of goods, and this supply would be actually actual supply because customer will give the price. So agent to customer, again agent to customer, there's no doubt. It is actual supply of goods because customer will pay something. Though that amount does not belong to agent, but customer will pay something. But what is the issue? It is all about your principal to agent. Principal to agent, it is deemed supply. This is actually covered by your para 3. Why it is deemed supply? Please understand that there is no price which will be charged. When principal is sending the goods to the agent, he is still the owner. He will not charge anything from the agent. Therefore, it is not actual supply of goods. It is deemed supply of goods. So this is what is covered by your para 3 of schedule 1. When you're talking about principal to special agent, he is not giving the ownership. He is not charging anything. There is a movement, but it is called as deemed supply of goods by para 3 schedule 1. When agent is giving to customer under his own name, invoice will be of agent. So it is actual supply of goods. Please understand that we are talking about a special agent who is authorized to give invoice to the customer, which means there would be no connection between your principal and customer. Agent will give invoice to the customer under agent's name. He may or may not show the principal's name, but he will give invoice under his own name. Principal to agent, no price, no consideration, but deemed supply of goods. Agent to customer, there's an amount charge. It is actual supply of goods. Please understand, commission will not be taxed again. Commission is already included in the final selling price. So commission, though agent will finally get commission, but commission will not be taxed again. So both are goods only. Deemed supply of goods and actual supply of goods. So whenever final price is given by the customer to agent, it is actual supply of goods, and that price will include commission. So again, it will not be taxed in the hands of the agent. So this is your para 3 of schedule 1. This completes our entire understanding of your actual supply 2 parts and deemed supply 3 parts.
Yes. When you talk about your not supply, employee to employer in course or in relation to employment. Understand that there are few circulars in this particular aspect. When you talk about those circulars, whether laborers are covered, wages to laborers, yes. Salary to normal employees, yes. Remuneration to partners, yes. Working partners remuneration is just like employees. What about remuneration to directors? Wait, if it is section 192 TDS of your income tax, if they are managing directors or whole-time directors, they are technically working like employees, just like partners, working partners. Technically, working partners are not employees, but for this, they are treated like employees. Likewise, director are not employees, but if they are managing director or whole-time director for whom company is deducting TDS under section 192, the heading of which is TDS on salary. It is like employees outside. But if they are independent directors or other directors where company is deducting TDS under 194J, professional fees, technical fees, then they are not employees, then GST is there and it is there under RCM. It is there under RCM. Clear? Clear? Difference is clear? Any perquisites given to laborers or normal employees or working partners, etc., etc. Perks is also part of salary. No GST. Any bonus given to? Any bonus or gratuity given to laborers or employees, etc., etc. That is also part of employment. That is also, though it is not in course of employment, it is in relation to employment. Gratuity. Bonus is in course of employment, but gratuity is in relation to employment outside GST. Right? What is the only one case which is subject to GST? Directors, where company is deducting TDS under 194J. That is not employer-employee. It is subject to GST and it is under reverse charge mechanism. It is under who will pay? Company. Supplier is director, recipient is company. Company will pay under RC. Company will pay under RC. But wait, another clarification. What is the other clarification? That when you talk about this employer-employee relationship, and when you talk about your specifically directors, right? If they are giving some other services like renting of immovable property or some other services, then technically they are not employer-employees. It is subject to GST under forward charge mechanism. Because now they are not acting like directors. Any director, managing director, whole-time director, any director, when they are giving other services to company in their personal capacity, it is subject to GST? Yes, because it is not by employee to employer, it is by third person to company. Is it subject to GST? Yes, but no reverse charge mechanism. Why? It is not in capacity of director, it is in personal capacity. That is the first point. Second, deemed employees. Any members of parliament or members of legislative assembly or panchayat or municipality, they are outside GST, or person holding constitutional post like President of India, Governor of State, etc. outside GST, or chairperson, member or director not in government company but in government body, not in government company but in government body like your CBDT, Central Board of Direct Taxes, Central Board of Indirect Taxes and Customs, government body, not in government company. Right? MP, MLAs, constitutional post, chairperson, member or director in government body, government department, government body or government, not in government company. Right? Next, you're talking about services by court tribunal, including Consumer Dispute Redressal Commission. Though technically it is not tribunal, it works like tribunal. Right? Court and tribunal. Court fees, tribunal fees, no GST. Advocate fees, GST. It may be exempted, but it is subject to GST. Next, any services in relation to funeral, burial, crematorium or mortuary, including transportation of deceased. Employees, deemed employees, then court, deemed employees covers all the three. Employees, deemed employees, court tribunal, deceased, then you have land and building. Sale of land, sale of building, no GST. Sale of land, no GST. Immovable property. Sale of building, no GST. Sale of building, construction of building, GST. So how to differentiate sale of building, construction of building? If there is a property which is being constructed, if you pay advance, then it is construction for you. Full advance or partial advance. Then it is construction of building. GST is there. If you don't pay advance, the building is over, then you pay the amount. The construction is over, then you pay full amount. If entire consideration is paid after completion certificate or first occupancy, whichever is earlier, then you are not paid. It means technically you are not paid single paisa advance. You are not paid single paisa, then it is sale of building, no GST. You paid full advance, construction of building, GST. You paid partial advance, construction of building, GST. You never paid any advance, sale of building, no GST. Sale of building, no GST. Right? And please understand, if there is a land on which I put a fence and sell the land, still it is sale of land only. There is a land, I put the fencing, I make the leveling, then I sell it, still it is sale of land, no GST. Actionable claims, no GST. But except few actionable claims. What are the actionable claims which will attract GST? Betting, gambling, lottery, horse racing, casinos, online money gaming. These 6 actionable claims. Betting, gambling, lottery, horse racing, casinos, online money gaming, including your Dream 11, they are all subject to GST. They are all subject to. This is clear? So 6 paras of schedule 3. Employees, deemed employees, court tribunal, deceased, land building, actionable claim. Any other action? What are the other example of actionable claim which is not subject to GST? Insurance claim, not covered in any of these 6 points, no GST. Debtors recovery, not covered in any of these 6 points. If it is covered in 6 points, it is subject to GST because the actionable claim other than. Right? If it is not covered here, there is no GST. So this is not supply part 1, which is schedule 3, 6 paras. Then other notified cases. What are the other notified cases? First notified case is a very simple case. If at all you are talking about any modes of conveyance, whether it is VRL Logistics or KPN Travels or Indigo Airline, a bus or a truck or a airline, or for that matter, railways. If it is going from one place to another place, both the places it is having branches. It is distinct person. It is distinct. But they'll pay GST. No. On the truck, whether they'll pay GST? No. On the bus, whether they'll pay GST? No. On the airline, whether they'll pay GST? Why? If this point is not there, they're finished. Para 2 of Schedule 1. Supply of goods or services between related person or distinct person. KPN Travels will have a branch in Coimbatore. KPN Travels will have a branch in Bangalore. The bus will keep going and coming. So whether that's deemed supply of bus, technically yes. But they tell no. We'll not disturb that because it will go, come back. 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 Therefore, what they tell? Will not touch it. Will not touch it. So any movement of any conveyance, including rigs, tools, spares on that conveyance or all goods on wheels, or including special machineries like tower, cranes, concrete pumps and mixtures. These items, what will happen? It will go, come back. 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 There's no GST. Please understand, it is trying to help from deemed supply. Para 2, Schedule 1. Para 2, otherwise Indigo Airline, Coimbatore to Mumbai, it will go, pay GST. Mumbai to Coimbatore, again pay GST. Obviously, you will pay output tax and you will take credit there. Again, you will pay output tax there in Mumbai. Again, you will take credit in Tamil Nadu. But it will keep happening. It will keep to avoid that. But wait, this is going to help you from deemed supply. Then they clarify something. If it is actual supply, pay GST. If you are actually selling the truck, pay GST. If you are actually selling the bus, pay GST. If you are actually selling the airline, pay GST. If there is actual repair and maintenance on the truck or bus or airline, there is actual supply. There is actual supply. Sale of truck, bus, airline, pay GST. Actual supply. Repair and maintenance of bus, truck, airline, actual supply. We are trying to help you from deemed supply, not from actual supply. Right? Then second and third are very simple. First point talks about any person. Second and third point only talks about government. If government is doing any activity covered by Article 243G, municipal related functions, or Article 243W, municipal related activities, or Article 243G, panchayat related activities or functions, no GST. Even government giving you something is supply. What are the activities of government which is not supply? Article 243G, panchayat related functions, Article 243W, municipal related functions, plus one more thing, liquor license fees. Liquor license fees, not any other license fees. Spectral license fees, subject to GST. Mineral mining license fees, subject to only liquor license fees. PML. Three activities of government which is not attracting GST. No levy. Panchayat, 243G, municipality, 243W, and liquor license fees. Liquor, having said completed entire supply, what ICAI will be interested is only in your importation of services most of the times. And second area where ICAI will be interested is your nature of supply. Is your very simple understanding of nature of supply. Very simple and basic understanding of your nature of supply. I'll make this entire thing in a very simple way. I'm not going to see all the points. I'll make it very simple. Goods, services, goods plus services, and immovable properties. Goods, services, goods plus services, immovable property. Goods, if there is goods and if there is transfer of title. If there is goods, there is no transfer of title. If there is goods and there is transfer of title, it is supply of goods. If there is goods but there is no transfer of title, supply of services. Motor vehicle is goods. I sell the motor vehicle, supply of goods. I rent the motor vehicle, supply of service. Do not mix goods, services and supply of goods and supply of, both are different. Motor vehicle is goods, full stop. If I sell the motor vehicle, supply of goods. If I rent the motor vehicle, software is also goods, though it is intangible. Intellectual property rights, patents, copyrights, trademark, it's also goods, though it is intangible. If I sell the software, supply of goods. If I sell the copyright, but if I don't sell the software, don't sell the copyright, I give license of software, supply of services. I give other person to use my copyright. I am using the touch model. I am giving others to use the same touch model. Then it is supply of. I'm not permanently transferring it. I'm temporarily transferring it. Clear? Clear? Goods. Over. Service. If an item itself is service, like coaching class is a service, it is always supply of service. If an item itself is service, supply will always be supply of services. What if it is goods plus services? Like your restaurant, outdoor catering, or write your works contract. Restaurant, outdoor catering has goods plus service. Works contract. Construction of this entire building would have goods plus services. Now some renovation activities going on in the ground floor. So it involves goods, cement, sand, bricks and all, plus labor. So what it is? Supply of service. Though both goods and service are involved, but it is supply of service. Supply of service. Immovable property, land and building. Land and building, sale of land and building is neither supply of goods nor supply of services. Just now we have discussed. Schedule 3. This entire thing is given in Schedule 2 as an example. Whatever we are discussing is discussed in Schedule 2, nature of supply. But I am not talking about sale of land and sale of building because it is neither supply of goods nor supply of renting of land. Don't tell service. Supply of service. Hiring of land. Sorry, not hiring. Leasing of land. License to use the land and building. So sale of land building, not supply, but renting, leasing, license, whatever work you do, it is supply of service. And one repeatedly asked question when it was all about goods. Sale of motor vehicle is supply of goods. Renting of motor vehicle is supply of hire purchase of motor vehicle. Supply of goods. Ownership will be transferred not now but later. There will be transfer of title. There will be transfer of. So what is better? To see these examples or to see this chart? See, this chart is very simple. What can be different categories? Only goods. Title is transferred whether now or later, like hire purchase, supply of goods. Title is not transferred, supply of services. Services is always supply of services. Goods plus service, like restaurant, outdoor catering, works contract, dominant is supply of services. Immovable property, sale is neither supply of goods nor supply of services, but anything other than sale, renting, leasing, hiring, etc., is supply of. Oh. So ICA focuses on two areas: deemed supply, imputation of service, and your nature of supply. Repeatedly asked. Comment on the following whether they are supply of goods or supply of services. Supply of goods or supply of services. Are you guys clear with this understanding? Where another important topic is there, your composite supply and mixed supply. Composite supply and mixed supply. So this question, most of the times, out of 4 question papers, you will find in 3 question paper. Most of the times, you will be having a question, 2 marks, or at times more. So when you are going to see 2 question paper, once it is being asked, and it is not for 2 marks, it is more than that. Composite supply and, so when there are 2 or more supplies given together by the same supply to the same recipient, either it is composite supply or a mixed supply. So I'll make sure that you understand in a very simple way. First, what you have to check? When the question is given, first evaluate what? Composite supply. Supply was defined in section 7. Composite supply, mixed supply is section 8. Section 8 read along with definition section 2. So first check composite supply, then evaluate mixed supply. If it is not composite supply, then it may be mixed supply. Actually, it can be a scenario where there is neither composite supply nor mixed supply. When you go to a confectionery store, when you purchase multiple items, 2 or more supplies, by the same supply to the same recipient, it is neither composite supply nor mixed supply. Why? Why? It is neither composite supply nor mixed supply. It fails both the conditions. How? We'll evaluate. If it is composite supply, there should be 2 or more. If it is mixed supply, 2 or more individual supplies, artificially bundled, 2 or more individual supplies. If it is composite supply, it is always naturally bundled. It is always naturally bundled in ordinary course of business. Mixed supply, they don't use the term artificial bundling, but it is understandable that it is artificial bundling. Why? Because one of the point of mixed supply is it should not be composite supply. So obviously it is artificial bundling. You are forcing it together. It is not naturally together. You are forcing it together. Artificial bundling. In composite supply, the pricing may be single or multiple pricing. There is no such condition. You can give one price or you can split up the price. You can give the breakup also. Anyways, it will remain composite supply. But in mixed supply, there's an important condition. It should be for a single price. Now, when I said that when you go to a confectionery store or say not necessarily say Big Bazaar or D-Mart, and you purchase multiple items, it is neither composite supply or non-mixed supply. Why? Is it naturally bundled? So it is not composite supply. Is it artificially bundled? Yes. It is not for a. It is neither composite supply nor. So each item separate rate. Each item separate rate. One item may be having 12%. One item may be having 18%. Another item may be having 5%. Correct. Now, in composite supply, there is one supply which is the lead hero, principal supply, which is predominant in nature, and all other supplies are ancillary or incidental. Principal supply. One will be principal supply, others will be incidental or ancillary. But in mixed supply, there is no single hero. All are equally important. Like a gift box, Diwali gift box. There will be chocolates, there will be sweets, there will be greeting cards, there will be silver coin or there will be gold coin. Everything is equally important. You cannot tell this is more important, this is not. There is no principal supply. There is no principal. So this is the understanding of composite supply and mixed supply. What are the conditions for composite supply? Taxable supplies, naturally bundled. 2 or more taxable supplies, they are naturally bundled in ordinary course of business. Right, they are naturally bundled, and one of them is principal supply. One of them is mixed supply. 2 or more individual supplies. It's not a composite supply, it's artificially bundled, and it should be for a single price. Actually, we are seeing the definition of it. Whatever you're reading the words, they are actually the definition of the same. Single price. Single price for mixed supply. And what is the tax treatment? If there is a composite supply, 5-6 items are there. 12%, 18%, 5%, which one will sell it? So if the main product is having 5%, everything will have entire value. So it is 1 lakh rupees plus 10,000 plus 5,000. Entire 1,15,000 will have 5%. If the main product is having 12%, entire 1,15,000 will have. Main product is having, principal supply is having 28%. Entire 1,15,000 will have. If the principal supply is 0%, entire 1,15,000, 1 lakh plus 10,000 plus 5,000 will have. So the tax treatment is of principal supply. This is given in section 8. What about mixed supply? One item 5, one item 12, one item 18. Highest means 18. In our example, 5, 12, 18 means you will select. So 5, 12 means 18, 28 means 0, 5, 18 means 0, 5, 18. You'll select the highest amongst them. Highest amongst them. The concept of your composite supply and definition is all given in section 2. All the earlier points is all given in section 2. Section 8 only talks about your tax treatment. It only talks about your tax treatment. What would be the treatment of composite supply and what would be the treatment of mixed supply? Are you guys clear with this understanding? Are you guys clear with this understanding? One exam paper, there's a question on composite supply, mixed supply. So once you see, you just recall these points. You need not remember technically each of these words. See, I say expects you to write keywords. So whenever you are writing, you have to write keywords. Naturally bundled in ordinary course of business. 2 or more taxable supplies. Naturally bundled in ordinary course of business. And one of the supplies, principal. You cannot write main supply. You have to write keywords. You have to write keywords. You cannot write main supply for principal supply. You cannot write sale for supply. And likewise, in mixed supply, you cannot write artificially bundled because there's no such thing called as what is given. It is not a composite supply. It is not a. So 2 or more individual supplies for a single price, and it is not a. So they are not written artificially bundled, but they are written it is not a composite supply. Are we guys clear with this? And that's understanding of your composite supply and mixed supply. Are you guys clear with this understanding? Are you guys clear with this entire understanding? So if you look back, what you have understood is what are the important areas of your GST in India and important areas in your levy, mainly your supply, and also understanding the concept of your composite supply and mixed supply. Composite supply and mixed supply. And we'll have a small break, 10 to 15 minutes break. Then we'll start with your valuation. We'll start with your valuation. The question is must when you talk about your valuation. Now, one of the chapter where you'll always find a question in your indirect taxes is which chapter? Valuation. Valuation, there'll be a short question for sure. 5 to 6 marks is there for sure. So when you talk about valuation, make sure that you don't miss anything and get the entire marks. Right, so valuation will have a short question. A very simple chapter. Section 15 is the valuation provision. And you have only basic valuation. You don't have valuation rules. You have only basic valuation. Now when you talk about basic valuation, when is your basic valuation applied? There are 2 conditions for your basic valuation. Supplier and recipient should not be related person, and price should be the, which means 100% monetary consideration. 100% unrelated party transaction plus 100% monetary consideration. 100% sole consideration. Then you have normal valuation. In normal valuation, the starting point is assessable value is equal to transaction value, and transaction value is nothing but price paid or payable by the recipient to the supplier, which means your selling price or service charges. So question will always start from selling price or service charges. Selling price or service. Question will give you selling price or goods means selling price, service means service charges. So basic selling price or the basic service charges, price paid or payable by the recipient to the supplier. Now plus something minus something is a challenge. What is that plus and what is that minus? First we'll see minus. What is the basic answer? Basic answer is selling price or service charges. Transaction value is nothing but your selling price or service charges. What is subtracted is discount. What is subtracted is? If the question gives you discount, 99.99% will subtract it. But at times will not subtract it, and we'll be seeing in one of the exam paper how I say twists the question. They'll twist the question and they would like you to see the point. So there are 2 discounts which are given. One discount which is given at the time of supply, one discount which is given later. One is discount which is given before or at the time of supply? Generally at the time of supply. One discount which is given after supply. Can both be subtracted or deducted? Yes. Discount which is given at the time of supply, supposing selling price is 1 lakh. Discount is 10,000. What is your final answer? Loud and clear. It is 90,000. Full stop. It is 90,000. It is clearly your 90,000. What you have to do is write the reason. If discount is at the time of supply, before or at the time of supply, make sure that it is duly recorded in invoice. Separately, I recorded in selling price 1 lakh less discount 10,000. That's it. And it will be surely given in invoice. But if discount is after supply, now this is where ICA plays with the wordings. There are certain conditions which has to be satisfied. Condition number 1, though discount is given after supply, agreement to give discount should be before or at the time of supply. Promising to give discount should be at the time of supply. Your agreement to give discount should be there at the time of supply. You can give it later on, but agreeing to give it should be at the time of supply. First condition. Second, it should be duly linked with invoice. For discount, you will always give a GST credit note. Because invoice has gone for 1 lakh. You did not know the discount. Now for 10,000 discount, you will give a credit note. You will give and that credit note should be linked with invoice. Second condition is normal. Third, important condition again. If you would have already paid GST on 1 lakh. You paid extra. Actually you should have paid on 90,000. Correct? 1 lakh minus 10,000 means you should have paid on, but you have already paid on. So what you will do? You will reverse GST on 10,000. You have already paid output tax on 1 lakh. Supposing 5% is the rate means you have already paid 5,000. Now on 10,000, 500 rupees, you will reverse it. So 5,000 minus 500 is 4,000. By the way, what is the value? 1 lakh minus? What is the value? 90,000 multiplied by 5%. 5,000 minus 500, 4,500. But difference is, earlier you would have paid 5,000, now you are reversing. But when you are reversing 500 rupees, government tells, and which is very logical, you can reverse output tax. But make sure your customer reverses proportionate ITC. The customer reverses. When you are paid 5,000, your customer has taken input tax credit of 5,000. Now you are reversing. Make sure your customer is reversing 500. Tomorrow, if your customer does not reverse ITC of 500, we will take action against your customer, but we will also take action against you. Because we are trusting you. What are the 3 conditions? Agreement to give discount should be on or before, at the time of supply or before supply. So discount should be linked with invoice. Credit note should be linked with invoice. Last. You can reverse. See, it is not about ITC. Supplier can reverse output tax, but customer should reverse proportionate, not entire ITC, proportionate. If you are reversing 500 output tax, make sure that customer is reversing 500 ITC. That's it. 3 conditions. You have to write always. So one condition was a customer is facing some financial difficulties, therefore you gave a discount of 10,000. Can you deduct it? Customer is facing financial difficulties, therefore you gave a discount of 10,000. What is the value? 1 lakh is selling price. Customer came and he is your friend, good friend, best friend. And he is telling that please help me out. I am having financial difficulties. Okay, don't pay me 1 lakh, pay me 90,000. Full and final settlement. Can you deduct 10,000? Yes or no? No, it is not recorded. Recorded on invoice is not the criteria. Is it discount after supply or at the time of supply? So first, forget about it. So can you deduct that 10,000? You'll be seeing it. No. Why? Agreement to give that discount is not at the time of finish. Forget about second and third condition. Forget about second and. Did you agree that you will give discount? The last question which will come here. What type of discount can be deducted here? Any type of discount, any type, cash discount, trade discount, turnover discount, year-end discount, or damage discount, or differential discount, or quantity discount, or quality discount, etc., 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 etc. Question can give you any type of discount.
Can you deduct any type of discount? Yes. GST does not differentiate cash, discount rate, discount, quantity discount, quality discount, damage discount, differential discount, etc. GST knows only two discounts. At the time of supply or after supply. At the time of supply, show on invoice. Simple. After supply, three conditions. That's it. But can you give discount for short payments? I said 10,000. You said, okay, you're my friend. You don't pay 1 lakh. You pay only 90,000. That is short payment. Can you give? No. Why? Agreement was not done. Can you give your credit note for bad debts? Again, agreement was not there. You are not entering, you're not selling anyone for bad debts. So if there is any short payment by the customer, whether partial bad debts or full bad debts, can you give credit note? No, you cannot give credit note. Clear? If I were to summarize this, your accessorial value is not gross selling price or net selling price? Gross selling price or net selling price? No, net selling price. It is your net selling price. Why? Because you are talking about selling price less discount. Selling price less discount is gross selling price or net selling price? 1 lakh minus 10,000, 90,000 is gross selling price or net selling price? It's your net selling price. It's your net selling price. Clear? Clear? So you know what is transaction value, selling price, service charges, what is deducted. Two types of discount. And what is added? 5 additions. 5 additions. And these additions will be surely there. 2-3 additions will be surely there in the question paper. Discount will be essentially there. But addition, not all 5 additions will be there. 3 additions, 4 additions will be there. Now, first is taxes. Simple question, simple answer. Selling price 1 lakh, municipal taxes 10,000. Assessor value is 1 lakh or 1 lakh 10,000? 1 lakh? 1 lakh? Selling price 1 lakh, excise duty 10,000. 1 lakh? Selling price 1 lakh, road tax 10,000. Selling price 1 lakh, travel tax 10,000. You type all, you add all the other taxes. You add all the other taxes other than GST. GST is not on GST. Other than GST. All the other indirect taxes are added. All non-GST taxes are added. Be it excise duty, road tax, municipal tax, or any tax. They'll give tax. They'll give at times municipal tax, at times road tax, at times tax collected by local authority, at times tax collected by state government, whatever is the tax. Yes. Yes, it is cascading effect. It is a tax on tax. Ideally speaking, GST when it was born, it was said that cascading effect will be, it is not eliminated, it is reduced. So please don't go theoretically. So when you read GST theoretical provision, you would have seen why GST is brought. What was the reason? No. You read the wordings again, even in your ICA material. The wordings is to mitigate cascading effect. Mitigate is not elimination. Mitigate is reducing. So it is tax on tax. Welcome to indirect taxes. And understand what is said and what is happening is not true. So it is actually tax on tax. It is actually tax on. And earlier tax on tax was huge. Now it is that to a smaller extent. To a cigarettes will have central excise duty plus GST, no VAT. Tobacco products, no VAT. Cigarettes will have central excise duty and so GST will be on what? Price plus central excise duty. Opium, Indian hemp, narcotics will have state excise duty plus so GST will be on what? Price plus state excise duty. Clear? Clear? But GST will not be on income tax TCS. GST will not be on. It is on other. You will add other indirect taxes. TCS is not an indirect tax. This is an income tax. And first of all, it is not even a tax. Because opposite person will get in his 26As or annual information statement. And if he is not having no income, he will file his return and get the refund. Get the. So, if at all, one question is being asked long back.
So that is selling price 1 lakh, municipal tax is 10,000, income tax cease is 1%. What is your final answer? 1 lakh? TCS, income tax ceases will not have. Income tax ceases will not. First of all, it is not indirect tax. Second of all, it is not at all tax. Forget about direct tax, indirect tax. It is not at all tax. Second addition. Payment by recipient to third party on behalf of supplier. So this circular clarifies. If it is on behalf of supplier, add it. Otherwise, forget about it. Otherwise, forget about it. Please understand who's paying. Recipient. To whom? Third party. If recipient is paying to supplier, it will be covered in selling price or service charges. Correct? If recipient is paying to supplier, it is covered by selling price or service charges. Supposing we have agreed to have a contract for 1 lakh. But while executing the contract, you have paid 10,000 to some party. Right? That some party came to your place and he asked the amount. He said that no, everything is to be executed by Vishal Jain. Why are you asking 10,000? So you called me up. I said, don't worry, you pay him 10,000. You pay me only 90,000. You pay me only. So finally, what are you paying me? 90. But what was the contract? 1 lakh. What was the contract? So payment by recipient to supplier is 90,000. But payment by recipient to rather you don't know his name. The person who came at your place and did some work, labor work, you don't know his name. You called me up and said, please pay him. So payment by recipient to on behalf of, should it be added? Yes. So GST will be on 90,000 or 1 lakh? 1 lakh. Payment by third party to, so payment by recipient to third party on behalf of supplier. On behalf is very important. I'll give another example, which has been asked in a different level. There are multiple questions that ICA has been touching all these points. There is transportation charges that the customer is paying to the VRL Logistics. Look at the question carefully. Selling price to me, I'm your supplier. For all questions, I'm your supplier. I sold you for 1 lakh. You asked me, can you help me in transportation? I said, yes, I'll show you this transporter. VRL Logistics is a good transporter. You can contact him and pay. I said, thank you. And you contacted VRL Logistics, you transported it. You paid 10,000 to VRL Logistics. What is the accessorial value for the sale of goods? You paid me 1 lakh. You also paid transporter, recipient to supplier, recipient to transporter, on behalf? No, I just gave you the contact. It is not on my behalf. It is not on. You did not pay to the transporter on my behalf. You asked me, can you help me giving a transporter name? I gave you the transporter name. Are you paying to VRL Logistics on my behalf? VRL Logistics will have contract with you. You would have negotiated the price with VRL Logistics. You would have negotiated the price with invoice of VRL Logistics will be against you. Not against me. If it is on my behalf, it would have been against me. It will be against you. Are we getting that point? Recipient to third party on behalf of supplier. On behalf is very important. On behalf of supplier. Right. First is taxes, then on behalf of supplier, then incidental. This is for sure. 100% this point will be there. Incidental expenses for anything before or at the time of delivery of goods or supply of services. 200% any of the valuation question will have it. Other additions may or may not be there. This will surely be there. Why? All the different points will come here. Packing charges here. Transportation charges here. Insurance charges here. Delivery charges here. Loading, unloading, handling charges here. Right. Any type of charges will be coming from here. Installation charges here. Erection charges here. Commissioning charges here. Special packing charges here. Protected packing charges. The question will give you different wordings. Transportation, loading, unloading, freight, insurance, handling, erection, installation, commissioning, anything. Warranty, guarantee, extended guarantee, anything. But what is the condition? Incidental expenses for anything. What is the condition? At the time or before delivery or at the time of supply of services, when the contract is executed. Projector for 1 lakh, installation 2000. What is the value? Why? Incidental expenses at the time of delivery to me. At the time of delivery. Yes, please. Yes. Correct. Everything will be added. That is warranty. Warranty is added. Everything will be added. It is an expense. It is not an expense. It is a split up pricing. The supplier will give you different pricing. Selling price, laptop so much, warranty so much. So it is an expense for me. It is an expense when I am purchasing. I am not only paying for the laptop, I am also paying for the warranty, etc., etc. Right? Incidental charges. So it is split up. Invoice will give you pricing. For purchasing, say, glass, 1 lakh is a charge. But they are telling for transportation, will charge additional 10,000. So for the buyer, it is an additional expense. It is an additional expense. What is the value for the supplier? 1 lakh price plus 10,000 transportation. 10,000 transportation. Clear? Clear. But wait, at the time of delivery, just remember this point so that you will not have any confusion. Warranty charges added or not added? Added or not added? Depends. If warranty is at the time of sale, add it. If it is after supply, after 6 months, it is not at the time of delivery, it is a separate supply itself. Initial warranty, 1 lakh plus 10,000, initial warranty added. Then, if at all you want extra warranty for 2 years, pay extra 5,000 but within 1 year. So you go at the time of 10th month or 11th month, you pay extra. Will it be added? GST will be there, but it is a separate supply. What is the difference? 1 lakh plus 10,000 is for sale of laptop. For sale of laptop. Warranty is also added with laptop sale of goods. But that 5,000, it's supply of service. Separate supply of difference. Purida. What is the condition? At the time of delivery of goods or supply of service. Right. Next, interest on delayed payment. What are the 3 additions that you have seen? Taxes on behalf of supplier, incidental. Taxes and incidental. For what? Anything. Condition, delivery. At the time of, before delivery or supply of services. Now what is the next addition? Interest on delayed payment of consideration. Interest on delayed payment of, please understand, this is not interest on loan which is exempted. Interest on loan is a separate supply, it is exempted. It is interest on, if customer makes me late payment, I have said that pay with interest. I have sold for 1 lakh rupees. I have agreed that I have said my customer to pay within 3 months. My customer pays after 9 months. So I collect 1 lakh plus 10,000 interest. What is the value? 1 lakh? Is it interest on loan? Is it interest on loan or deposits? No. Did I give any loan to my customer? It was my sundry debtors. It was my sundry. So if my customer is paying me interest, it is not interest on loans or deposits. It is interest on delayed payment of consideration. Add to the value. So what was the value? 1 lakh plus 10,000. Are you guys clear with the understanding? So it is interest collected from my customer on delayed payment of consideration. On delayed payment of consideration. Are we guys clear with this? I'll make it very clear. There's a lengthy circle. I'll make it very simple. You go to Chennai Mobiles. You purchase phone of 1 lakh rupees. Right? What is the value? Louder. 1 lakh. There is a finance company and it tells that don't worry, we'll finance you. We'll give you 1 lakh rupees. You pay Chennai Mobiles and get it. You don't have amount, don't worry, we'll help you out. So you take loan from whom? Not Chennai Mobiles, loan from the finance company, pay to Chennai Mobiles. Chennai Mobiles values. What about that finance company? It gives me 1 lakh rupees loan. I'll repay 1 lakh plus interest. So 1 lakh is not supply of goods, not supply of services, neither goods nor services, mere transaction money. But what about interest? When I'm paying interest to finance company, it is interest on loans. It is interest on exempted. It is exempted. I took 1 lakh loan from finance company. I'm repaying 1 lakh plus 10,000. That 10,000 is exempted. But what if Chennai Mobiles itself gives me finance option? Chennai Mobile tells that, why should I have finance company? You don't have money? Don't worry. I'll give you EMI option. So when you pay me 1 lakh plus 10,000. 1 lakh is the cost of the phone and you're paying an installment, pay me 10,000 interest. Now who is giving this option? Supplier itself. Supplier? So whether this 10,000 will be added? Yes. Why? Loan was never given. Credit facility was given. Credit facility was given. So 1 lakh plus 1 lakh plus Vidyasa Purida. Difference Purida. Chennai Mobiles to customer 1 lakh. Finance company to customer, that 10,000. 1 lakh is no supply. 10,000 is interest on loan or deposit. Interest on loans, it is exempted. Because separate supplier. But Chennai Mobiles itself gives finance option na? It is not finance. It is nothing but giving more credit facility. So then 1 lakh plus 10,000 you are paying to the same supplier. Chennai Mobiles is the supplier of phone plus Chennai Mobiles is giving you credit facility. So that interest is not interest on loan. That interest is interest on late payment for mobile phone. Interest on late payment for. So it is 1 lakh plus 10,000. Clear? So what are the 4 additions that we've seen? Tax on behalf of supplier. Incidental. Interest. Not on loan. Interest on delayed payment of consideration. And finally subsidy. Finally, when are you going to add subsidy? 2 conditions. Condition number 1. Subsidy should be directly linked to the price. If the question gives you general subsidy, holding company is giving subsidy subsidy of 1 lakh per annum. It means it is not related to sale. Whether you sell 1 item, 10 items, 100 items, 1000 items, 1 lakh items, you will get subsidy of not added. It should be linked to the unit, linked to the price. Second, it should not be received from government. It should be received from any other person. 2 conditions for adding it. 1, linked to the price. Second, it should be from other than government. It should be from other than, if I'm selling for 1 lakh rupees a product, I'm getting subsidy of 10,000 from government. Add it or not to add it? Louder. I'm getting 5,000 subsidy from holding company. Add it. So 1 lakh plus 5,000. I'm getting 2,000 subsidy from a non-profit organization. So 1 lakh is selling price. 10,000 subsidy not added because from central government or state government. Then 5,000 subsidy holding company added. 2,000 subsidy non-profit organization added. 1,000 subsidy government company added. Government is different, government company is different. ICS never asked it, but be careful. Government is different, government company is different. Right? 1 lakh basic price. 10,000 subsidy not added because from government. 5,000 subsidy added because holding company. 2,000 subsidy added because non-profit organization other than government. 1,000 subsidy added because it is government company. Government company separate from government. If government company is giving me subsidy, add or ignore. Add. Clear? And there is always a problem with subsidy. And almost every one of you are sitting here who have worked out the questions, always you'll have a doubt. So whether to add it or to subtract it. Whether to add it or subtract it. What was the example we took? 1 lakh. 1 lakh is the basic. 1 lakh is the basic price. And what is the subsidy? 10,000, 5,000, 2,000, 1,000. What is 1 lakh? Selling price. This is from central government. This is from non-profit organization. Sorry. Okay, we'll make it. This is from holding company. Let it be. And this is from government company. Question can be of two types. Selling price is excluding subsidy. Selling price is including. If selling price is excluding subsidy, then what is the answer? 1 lakh plus 0 plus 5,000 plus 2,000 plus 1,000. 1 lakh if it is including subsidy. 1 lakh is including subsidy. So it is already including 5,000, 2,000, 1,000 and even 10,000. So subsidy from government should not be included, but it is already. So what to do? What about 5,000, 2,000 and 1,000? It is to be included. It is already included. Don't do anything. By default, if the question is silent, always go with first option. By default, it is first option. Sir, question is not clear. Go with first option. Go with first option. So at times question wording itself is not correct. Selling price after considering subsidy. That after considering subsidy can be assumed to be first category as well as. The language is so that you can assume both. Write an assumption. IC also gives an assumption that this question could have been worked out otherwise. Clear? Clear? If it is including excluding, this is the only answer. You cannot have an assumption. If it tells excluding subsidy, only this is the answer. Including subsidy, only that is the answer. But if it is after considering or after adjusting, you can assume both. You can assume, you write an assumption. And ideally go with always first option. By default, always go with first option. Clear? Are you guys clear with this understanding? That's everything about your valuation. Everything about your valuation. Clear? One important point that is to be understood. All the additions you'll add normally, but interest you'll not add normally. Interest you'll not add normally. Two important points for interest on delayed payment of consideration. If I give a question where I'll just only make it very small question, selling price, incidental expenses and interest. Selling price 1 lakh, say incidental expenses like transportation, insurance, etc. it is 10,000 and interest is say another 10,000. Please understand, interest demanded was 10,000 because of late payment, but paid was finally only 7,000. And the rate of tax is say 18%. What is the final answer? The highest complicated question that can ever come in valuation. That's maximum complication that they can give. 1 lakh teliva irukuma? Okay. What about incidental expenses? What about interest? 10,000 that you have asked or 7,000 that is 10,000 alla na kattumara. I am not going to pay 10,000. Yes, I agree, I paid late, but I'll pay only 7,000. So assume that. Incidental expenses also you have asked 10,000. Let us make it more complicated. You have asked on the invoice 10,000, but he has paid only. You said transportation and all 10,000. You gave an invoice 10,000 and all. But if when you paid transportation, normally it is only 7,000. You are charging extra. I will not pay you. I will pay you only. Possible? No. What about incidental expenses? Incidental expenses, you'll add entire 10,000 because that is there on the invoice. You have asked whether he's paying or not relevant. Selling price, whether he's paying or not relevant. What about interest? You'll add only and only 7,000 because of time of supply. Time of supply tells that interest on delayed payment of consideration is added at the time of receipt. So what is received? What is received? What is received? Is only, what is received is only, so you'll add only, wait, that is not the final answer. Multiplied by 100 divided by, because I say always assume that interest is always including tax. Including tax. This assumption is not for any other addition. It's only for interest. I've given reason for both. 7,000 is because of time of supply. Because time of supply tells only what is receipt. But multiplied by 100 divided by 100 plus rate of tax is not because of anything. It is because of ICA's assumption, which I don't buy it. But for your exams, you have to take this. ICA always assumes that interest is including GST. Always. So always your answer will be for interest portion, what is received multiplied by 100 divided by 100 plus rate of tax. In this question, rate of tax is so 100 plus 18. If the question is 5% divided by, clear? Clear? So that is all and all about your valuation. You see your valuation. What are the 5 additions now that you have? What are the 5 additions that are now that you have? Taxes on behalf of supplier, third party on behalf of supplier, incidental expenses, which is condition is at the time of delivery of goods or supply of services. Then you are talking about interest on delayed payment of consideration, not interest on loans and deposits. Interest on late payment of consideration. And finally, you are talking about subsidy. 2 conditions. Directly linked to the price and not given by central government or state government. Right. Minus to discount. At the time of supply or after supply. At the time of supply, simple condition, invoice. After supply, 3 conditions. And you have to write those conditions while explaining. Not word by word, but yes, ideally it should be agreement should be there at the time of supply, condition number 1. Discount should be linked to invoices. Credit note should be linked to invoices. ITC, proportionate ITC should be reversed by the receipt. So you have to mention those conditions. This will give you 5 to 6 marks. This simple 1 page. And when I have discussed, I have made sure that different types of questions of ICA at different times. What were the important terms? How ICA was in different places? We have consolidated. We have consolidated. So when you see any question of valuation, you know what is the trick there. What are the possible tricks played by ICA? So when you see it, make sure that you're not being the trap to that trick by ICA. ICA will always have a trap for you. What is your job? To make sure that you are not falling in the trap. That's your job. If you do that, you are 90% clearing the subject. If at all you do that. Now, if you know a question, if you make a mistake, then actually reading, there was no problem in reading the concept. When she said concept, I said no. There's no problem in reading the concept. There's a problem in understanding what is being asked. கான்செப்ட்ல பிரச்சனை இல்லை. நான் தனியா உங்களுக்கு எக்ஸ்பிளைன் பண்ணி கொடுத்தா நீங்க கரெக்டா சொல்லுங்க சார், இது ஆட் பண்ணும், இது ஆட் பண்ணக்கூடாது, இது இப்படி பண்ணும். There should be someone who's standing there and explaining, see what is the trick. So there's no problem in your concept. There's a problem in reading the question, which you will know thoroughly in both the days, because we are going to take one paper. You will overcome it. And then third day, work out 3-4 questions and the model test paper done. Close indirect taxes. Focus on other subjects. Right? So this is all about your valuation. So talking about your reverse charge mechanism, Now you have also RCM for goods. And ICI of late has started asking about your RCM on goods to a smaller extent. Earlier, you had RCM right from the day one of GST 2017. You had RCM on goods as well as RCM on, but for a very long time, RCM on goods was not applicable for exams. It was there, but not there in syllabus. Practically there, but not there in syllabus. So when you talk about your RCM, there are three categories: 9.3 RCM, 9.4 RCM, and 9.5 ECO. Right? 9.4 is given, but finally written that detailed examination will be at final level. So forget about 9.4. So the focus is on 9.3 and 9.5. 9.3 and 9.5. 9.3 is RCM on notified goods and notified services. 9.5 is not RCM. It is neither supplier who is going to pay tax, which is FCM, nor recipient who is going to pay tax, which is RCM. What is RCM? Reverse charge mechanism. Who pays the tax? So normally what happens in FCM? Supplier will collect price plus GST and pay GST to the government. That is forward charge mechanism. What is RCM? Supplier will collect only price. Recipient will directly pay GST to the government. So normal case is forward charge mechanism. A supplier will collect price plus GST and pay GST to the government. Exception is RCM, where supplier will collect only his price. Recipient will directly pay tax or GST to the government. And when you talk about 9.5, 9.3 is RCM type 1, notified goods, notified services. 9.4 is RCM type 2. It is also on notified goods and notified services, but where the supplier is unregistered and recipient is registered and notified, not there at your level. Forget about 9.4. 9.5, it is neither supplier who pays the tax nor recipient who pays the tax, that is third party. So that is supply through ECO, supply through electronic commerce operator, and it is not for all supplies through ECO, it is only supply of 4 notified services through ECO. Only services, 4 notified services. Now differentiate it. 9.3 is technically RCM for notified goods and notified services. 9.5 is not RCM. Neither supplier nor recipient will pay tax. Third person, which is electronic commerce operator, will pay tax only on 4 notified services supplied through ECO. Electronic commerce operator. Only on 4 notified services. Clear? Now, when you talk about your 9.3 RCM, it is on notified goods and notified services. So first we'll see your notified goods. Notified goods. When you are evaluating your notified goods, please remember the way of reading it. First, categorize 4 items. Then we are talking about another 4 categories. Then 2 categories. 4 plus 4 plus 2. 4 plus 4 plus 2. What are the first 4 categories? Cashew nuts, BD wrapper leaves, which is nothing but tendu, tobacco leaves, raw cotton. Remember the names. Cashew nuts, tendu, which is BD wrapper leaves. You are talking about tobacco leaves and raw cotton in the 4 categories. In the 4 categories, who's the supplier? Agriculturalist. Who's the supplier? Agriculturalist. Who's the recipient? In all these cases, supplier is agriculturalist. He is doing the basic farming activity. He is bringing out these items. Right? Agriculturalists will never pay GST on any of the items, including these 4 items. Not only these 4 items, any of the items. But what is special in these 4 items? Agriculture says anyways not going to pay, but who's going to pay? The recipient, if the recipient is GST registered person. If the recipient is not always. RCM la one common mistake is you just remember the name, which is of no use. You should know who is the supplier, who is the recipient. Who is the supplier, who is the recipient. Supposing, I just give an example to make you understand this. I'll be giving 2-3 examples, then you have done. Raw cotton, if I am selling it to a normal person, whether registered or unregistered, I am not an agriculturist. Agriculture is only individual and HUF plus doing the basic agricultural work. Individual and HUF. A company cannot be an agriculturist. Though it is doing farming, it cannot be an agriculturist. Right? Supposing I purchase raw cotton from agriculturist, which is under RCM. I am registered. When I am selling the same raw cotton, it's no RCM. Why? When I sell, I am not an simple. So for all these 4 items, cashew nuts, tendu leaves, tobacco leaves, raw cotton, supplier, agriculturist, recipient, registered. Recipient is unregistered person. No RCM, agriculturist will never pay GST. So no RCM and no GST also. Agriculturist will never pay GST. Got that? So recipient should be registered. Recipient should be GST registered. Registered under GST. Right, 4 categories. Next. 4 categories, different category. Now all these 4 items have to be read separately. Silk yarn. Silk yarn. It is not raw silk. Silk yarn. The next level. Next process. Who's the supplier? Supplier is manufacturer of silk yarn. Whether manufacturing from raw silk or silkworm cocoons. So he's manufacturing silk yarn. Manufacturer. He should not be a trader. Manufacturer. Recipient. Supposing there is silk yarn sold by a trader to another person. FCM. So silk yarn, what is the category? Supplier should be manufacturer, recipient should be GST registered. GST registered person. Next. Essential oils other than those containing citrus fruit. You need not remember all these technical names because IC will not try to test them. So they are giving the list of peppermint, of other mints, etc. etc. Just remember essential oils. Just remember essential oils other than those of citrus fruit. Just remember essential oils. Certain essential oils. Now, who should be the supplier? Unregistered person. Supplier should be, recipient should be. Look at the difference. Previous point, silk yarn, who should be the supplier? He may be registered, he may not be registered. Manufacturer may or may not be. Recipient should be registered. RCM. Right, conditions are very different. Here, supplier of essential oil should be, recipient should be. If any of the condition is not satisfied, it is FCM. It is FCM. Then, metal scrap. Metal scrap falling under chapter 72 to 81 of Customs Tariff Act. Metal scrap. Supplier again should be, recipient should be. So when you talk about essential oils and metal scrap falling under 72 to 81 chapter, condition is the same. Supplier should be unregistered, recipient should be GST registered person. GST registered person, RCM. Sir, if supplier himself is registered, CM. For metal scrap, supplier is registered, SCM. For essential oil, supplier is registered. For silk yarn, supplier is registered, manufacturer. If recipient is registered, RCM. For silk yarn, supplier is registered but trader. Supplier is unregistered but trader. Same. So conditions are different. You cannot buy hard just the item and survive. Right. Next. Priority sector lending certificate given by one bank to another bank. PSLC. Priority sector lending. One bank will give to another bank if other bank is having shortage of loans given to priority sector. So bank to bank. Bank to, it is always between one bank to another bank. Other person will not be involved. If you look at this, then you will understand. Supplier is also, otherwise you will have a doubt. Sir, here supplier is also registered, recipient is also always registered. Understand, all banks in India are always registered under. All banks are always registered. So this is the only one item in goods which you can tell that it is always under RCM. Out of 10 items that you're seeing, one item which you can tell blindly, sir, always RCM is priority sector. All other items, it can be RCM or FCM. Now you understand why it is written supplier is also registered, recipient is also, because all banks are always registered. And finally, when you're talking about last two categories, supplier of lottery tickets by state government, union territory or local authority to the lottery distributor, or he may be registered on this, not a lot. So who will pay? Lottery distributor or selling agent. Government will not pay. Government. So why is the last two categories you have given separately? Because last two categories is supplier is government. For lottery tickets, supplier cannot be central government. It can be only state government, union territory or local authority. Recipient is lottery distributor or selling agent. Recipient will pay. And for other items, used vehicles, seized or confiscated goods, old and used goods, waste and scrap. This you can find in every government department. If you imagine or picturize any government department, used vehicles, police station, right? Even in GST department, a lot of times you'll find used vehicles. Then go ahead, seize and confiscated goods. If at all a taxpayer is not paying the tax, the goods will be confiscated. They'll be kept. Then used and old items. Government will always have all the old items. The moment you go, you'll find a lot of old items. Rather, where they're sitting, you'll find old items. Finally, waste and scrap. When they are sold by government, any government, central government, state government, union territory or local authority, to whom? Registered person, it is under. Sir, if they are selling to unregistered person, FCM. It's not that no, they will pay under FCM. Rather, throughout all the 10 items, one thing that you'll find constant in recipient in all the cases is except lottery distributor or selling agent. In all the other cases, recipient is clear. Right? Though it is not at all important when you talk about ICA questions, ICA focuses generally only and only on your service sector. Very rarely they have asked about goods. Very rarely. Of late, 2-3 items only it is applicable. Very rarely they have touched goods. But if they are touching, there's no big issue. Let them touch. Right? This is goods. Section 9.3, goods. Now, when you talk about 9.3 for notified services, for notified services, you will find lot of services. Approximately, we will be seeing 20 to 21 categories. Right? Now, while seeing it, we'll also see exemptions. We'll also see the related exemption. Because if you see only RCM, FCM, it will not make sense. If a service is exempted, forget about RCM, forget about FCM. No one is going to pay GST. No one is going to pay GST. Are you guys clear with this understanding? Right. So what are we going to see is combo of exemption and RCM which is required. ICA testers. So if at all, say for example, there is a GTA service and it is of exempted category, you cannot write RCM. Why? Exempted. If you write RCM, your answer is wrong. Whether it is a conceptual question or a computation question, it is wrong. Are you guys clear with this understanding? So this ICA always merges and you have to read it together. You cannot read it as a separate chapters. Separate chapter for exemption and separate chapter for RCM which ICA gives it. If you read them separately, it will not make sense. Read it together. It is very simple and ICA always makes sure that they are asking it together. So first you should think whether it is exempted. If it is exempted, forget about RCM, FCM. If it is not exempted, then evaluate whether RCM or FCM. Right? So we'll take about 20 services. How many goods we have seen? 10. 4 plus 4 plus 2. 9.3 RCM for goods over. 9.3 RCM for services. 9.3 RCM for services. We'll be seeing about 20 services. Exemption with RCM. Right? And when we are done, once we are done with this, I'll tell you there are certain exemption entries which are there. Rather, make a note of it now itself. Apart from these exemptions, I'll be sharing in the group. Just I'm reading these services which are the most important exemption entries, because once we are done with these 2 days crash course, then you'll have a doubt. Sir, we have not seen exemption. I said we have seen exemption along with RCM, But there are other exemption entries which are not connected to RCM, purely exempted, and there are a lot of exemptions. And you will be afraid of which one to see, which one not to see. So ICI over a period of time has asked a lot of questions, out of which most of the times they have touched government services, entertainment services, entertainment. Prabhu Deva is dancing, is getting fees, and the entertainment services repeatedly asked. If it is about amount is up to 1,50,000, not acting as brand ambassador, and it is for classical art forms, then it is exempted. So repeatedly that is asked. Educational services, sports services. So that is again repeatedly small service. Sports is a very small service. So when you talk about any amount received by a player, a referee, umpire, coach, manager from recognized sporting body, it is exempted. But when it is received by any other person, commentator, correct, it is taxable. Or curator, it is taxable. Virat Kohli getting fees from BCCI for playing match against England or South Africa, or for that matter Australia, exempted. But same Virat Kohli getting fees from IPL, it is not recognized sporting body, it is taxable. Same Virat Kohli getting amount from, say, brand ambassador, acting for, say, Sunsilk or some other advertisements, lot of advertisements he is doing. So he is not getting from BCCI, he is getting from brands, corporates, taxable. Got that? So sports is one category. 12AA services, section 12AA. Charitable trust. What are the categories where these services by 12AA are exempted? 12AA services exempted. Renting of immovable property. Don't worry, renting of immovable property in government. The first item that I said, government will cover it in RCM itself. So we'll be covering it. Even when you talk about renting of immovable property, we'll be covering it along with RCM. Healthcare services. Repeatedly asked question. So room rent is more than 5,000. So that exemption is depending on the room rent. Or if there's a plastic surgery. Plastic surgery, generally taxable. But if plastic surgery is for removing genetical disorder or an accident, then it is exempt. So you have to see that particular categories and evaluate. Healthcare services. Banking services, we are going to see it. And other small services, including some questions about agricultural services, they have asked. Residential Welfare Association, up to 7,500 per member per flat is exempt. More than that, it is taxable. Business exhibition. So these are last categories. One time they have asked. So sometimes about agriculture, sometimes about your Residential Welfare Association, and one time about business exhibition. Actually, 8 services are repeatedly asked. 8 services. So this, whatever summary I have given, I am consolidating all your question papers right from 2018. So if you see exemption chapter, one way to look at this, 100 pages. Other way, forget about 100 pages. These are the services repeatedly asked. So 90% chances is it's going to be only from them. See, I'm not telling that it cannot be asked otherwise. But 90% chances is it is only from these areas. Out of 8 categories, 3 categories we are going to see. So 5 other categories you have to spend some time and cover it. Now, general pain of student with respect to indirect taxes. They'll be happy with everything else, sir. And the exemption, very lengthy. Don't know how to do it. So I have given a solution list. Out of 8, 3 will be seeing it. 5 you can easily go through it. Sir, exemption buy out panuma. Or paisa buy out panna. You have to be familiar, not buy-outing. You have to see it again and again. Oh, if it is plastic surgery, normally taxable. But if it is because of genetical disorder or development disorder or an accident or a trauma, then it is. You have to be familiar. You are not required to by-heart it. Familiarity. So your familiarity is important than that. Right? So even that exemption part which is required, I guess Given the very clear cut list, I'll be sharing it also, so that you don't have that fear of ignoring that chapter entirely. Need not ignore that chapter. You can make sure that you are going through that chapter with importance. Right? Now, starting with your RCM and exemption, first category is GTA, Goods Transportation Agency. If GTA is giving services to certain recipients, first is to pure TDS deductor, which means government having GST registration, but only for TDS purposes. Only for, and this TDS, by the way, is not income tax TDS, it is, we'll be seeing that chapter, important chapter, small chapter, TDS and TCS. Clear? For pure TDS. So if you are giving GTA services to whom? Pure TDS. Who is pure TDS deductor? Department of Government or government agency is having only GST TDS number. Then it is exempt. If it is given to specified service recipients. Now you might ask, sir, what is the list of specified service recipients? You would have seen this list which is given below. Factory, society, cooperative society, body corporate, partnership firm, AOP or GST registered person. 6 specified list. Factory, society, cooperative society, body corporate, partnership firm, AOP, whether registered or not, and GST registered person. You need not remove. If it is given to them, not exempt. If it is not given to them, so make it simple. If it is given to individual or HUF, which is not a factory, which is not a society, not a cooperative society, not a body corporate, not a partnership firm. So make it simple. So individual or HUF, which is not registered under, because even an individual or HUF can be registered under, which is not registered under Factories Act and which is not registered under. So if it is given to them, it is exempt. Individual or HUF not registered under Factories Act, not registered under GST Act, then it is exempt. Sir, if it is given to partnership firm, taxable. Body corporate, taxable. Society, taxable. Cooperative society, taxable. Individual HUF but registered under Factories Act, taxable. Individual HUF but registered under GST Act. So what is simple way to remember? Individual HUF not registered under Factories Act, not registered under GST Act, exempt. So what are the two recipients to whom GTA service will be exempted? Pure TDS deductor, only TDS number is there. No, they don't have government having normal GST number is not covered. So if government, there can be two types of government. One type of government department having normal GST number and GST TDS number. It is taxable. Other type of government which is having only GST TDS number, it is not having normal, then it is exempt. Second, individual HUF not registered under Factories Act and not registered under GST Act, it is exempt. Next, goods, transportation of specified goods. These were two recipients. If the GTA services to these two recipients, forget about the type of goods, it is exempt. If it is to other recipients, then you can think of goods. If it is to other recipients, but the transportation is of registered newspapers, agricultural produce, milk, salt, food grains including flours, pulses and rice. Milk, salt, food grains. Sugar is not covered. Milk, salt, food grains including flours, pulses and rice. Right? So why rice is again covered? Agricultural produce includes wheat, but not rice. Paddy is agricultural produce, not rice. So rice is separately exempted. Then organic manure. Then relief materials at the time of natural or man-made disasters or calamities. Defense or military equipments. Very simple way to remember. Namo RD. Our Prime Minister, Namo, being RDX for the neighboring country. Namo RD. Namo, right? So newspaper, agricultural produce, milk, salt, food grains including flours, pulses, rice, organic manure. Namo RD. Relief materials, defense materials. Clear? These items exempt. Anything else, If it is not given to these two recipients, and if the items are not these 6 items, then it is always taxable. And when it is taxable, by default it is RCM. But if GTA wants, it can go for by default is. But if GTA wants, you can go for FCM. Immediately after seeing this GTA services, I'll take you to a service which is similar to GTA, then we'll come back. You're talking about your intellectual property rights. Intellectual property rights being copyright. Temporary transfer of copyright. So you're not talking about all the intellectual property rights. We are talking about only copyrights. We are not talking about patents, trademarks and all. We are only talking about copyrights. So temporary transfer or permitting the right or use to right or enjoyment of copyright. So we are talking about copyright services. If it is related to original, dramatical work, musical work or artistic work. Very simple way to remember, MAD. Musical work, artistic work, dramatical work. By whom? The music composer, photographer or the artist. To whom? Music company or the producer. A.R. Rahman creating original composition for Sony Music. Who will pay? RCM. Sony Music giving further copyrights to JioSaavn. Why? It is not original. It is not A.R. Rahman to Sony Music. It is original musical work by music composer to the music company RCM. But Sony Music further distributing the rights to JioSaavn or Spotify, etc., etc. It is, I say, has never asked it in the history, but you have to understand the importance. Original. Clear? Now, if I change this and if I tell that it is original literature works, MAD writer. MAD comes on left hand side. Writer. Now it is all original literary works. We're talking about a MAD writer. Right? Original literary works. By whom? By the author to the publisher in taxable territory. Then by default it is RCM. By default option is RCM. But if the author wants, he can go for FCM. Obviously, he has to be GST registered, intimate the commissioner. He should not go out from FCM for 1 year, etc., etc. Conditions are there, not relevant for your exams. I'm just equating both. There are only 2 suppliers who can decide whether they want RCM or FCM. GTA author. GTA and any other supplier, they cannot decide. If it is RCM, it is RCM. If it is FCM, it is FCM. They cannot decide whether they want RCM or FCM. Who are the 2 persons who can decide whether RCM or whether FCM? GTA author. Simple. Now you understand why immediately we took author? Just to understand GTA and author, they have some connection. Right? Now, coming back here. 1, we have discussed actually 3 services. GTA services, copyright for MAD, copyright for literature. Now we are talking about sponsorship services. Please understand that sponsorship services is exempted if it is 2 conditions. If it is for a sports event and it is organized by a sponsorship is exempted in rarest of the rare cases. Not for any event. It is for a sports event. Second, notified bodies. Now, who are the notified bodies? Just give one glance. You not by heart the list. Who are the notified bodies? Notified bodies are National Sports Federation or its affiliated federation, where the team or the individual is representing a district, state, zone or country, like your BCCI and even Tamil Nadu Cricket Board. So it's not only BCCI, it's also Tamil Nadu Cricket Board, right? So that is the first category. Second, Association of Indian Universities or Inter-University Sports Board or School Game Federation of India or All India Sports Council for Deaf, Paralympic Committee of India or Special Olympics Bharat, which is for specially challenged persons. These notified bodies are Central Civil Services Cultural and Sports Board. When you're talking about your civil services, IAS, IFS or IRS, civil services. Within them or as a part of national games by Indian Olympic Association. So now you're talking about your Indian Olympic Association. And finally, any sporting event which is coming under Panchayat Yuva Krida or Khel Abhiyan, which is in terms of translation in English, promotion of sports in villages. It is under a government scheme. Right. These are the 5 notified bodies. You have to give glance, not by heart. If you start by hearting, life is over there. They are going to ask any one of the body. You have to remember whether that body was covered here or not. So you are not required to by heart. You have to just glance 1 or 2 times. Give a glance. 5 notified bodies. So when it is exempted, 2 conditions: sports event, 5 notified bodies exempt. Any other case. So what is that any other case? If it is sponsorship of sports event, but supposing there's a sports event, Coimbatore Premier League, organized by ICIA. We had cricket tournament, correct? There would be one sponsor. For sure, those who have gone for the cricket tournament, which was there in last month, there would be some sponsor. Taxable exempt. Taxable. Not by notified bodies. Clear? Or any other event. Supposing you go to Odisha. How many events are there? In that Odisha, at any point of time, 5-6 events will be running. And for every event, there will be a sponsor. Taxable exempt. So it might be an educational event or scientific event or business event. Taxable. Taxable. Clear? Clear? Now, if sponsorship services there under taxable category, when it is RCM, when it is FCM. Very important thing. It should be, recipient should be a partnership firm, LLP or body corporate. If the service recipient is partnership firm, LLP or body corporate. Supplier can be anyone. Supplier can be body corporate. Forget about it. Recipient should be partnership firm, LLP, body corporate. Supplier can be a body corporate or a partnership firm or LLP or a proprietorship concern or an individual. Not relevant. Recipient. Partnership firm, LLP, body corporate. It is RCM. Any other case? Tata IPL. Who's the supplier first? IPL or Tata? People make mistake. Who's the supplier first? It's not Tata. It is IPL. IPL is giving sponsorship service to Tata where everywhere there is Tata name highlighted. And Tata will make the payment. Person who's making the payment is not the supplier. Person who's making the payment is the so who's the supplier? IPL. Recipient. Tata Limited. Tata, is it a body corporate? Yes. FCM or RCM? RCM. Sir, IPL is also a body corporate. Say IPL Limited. Let it be. But supplier can be anyone. Recipient should be? Supplier can be anyone. But recipient should be partnership firm, LLP or supplier can be a body corporate. Recipient is a partnership firm. FCM or RCM? RCM. Clear? So, 2 mistakes people will do here. First, they will not understand who is the supplier, who is the recipient for this particular service. So, how to correct it? Who's making the payment is recipient. That you can avoid. Second, they'll see supplier and supplier, forget, supplier can be body corporate or other than body corporate, or partnership firm or other than partnership firm, or LLP or other than LLP. Supplier is not alone. Who's alone? Recipient. If he is body corporate, partnership firm, LLP, RCM. If it is not that, FCL. Here, sponsorship, services. Sponsorship, services. Right. Next, moving on to the next category services, arbitral tribunal services, advocate services. Arbitral tribunal services, advocate services. So when you talk about arbitral tribunal and advocate, answer is the same. Answer is the, we will take one category and understand. Please understand, we have discussed in supply, not supply, schedule 3. Court tribunal is neither supply of goods nor supply of. We are not talking about place where you get the justice. We are talking about person who help you get the justice. Arbitrator or advocate. Arbitrator or advocate. It is supply. Now is it exempt or taxable? If taxable, is it FCM or RCM? Now, if at all you are talking about, say, Vakil Vandamurugan, who's giving you services. Just imagine that advocate, Vakil Vandamurugan, and those who have seen that movie of Vadivel, you'll picturize him. If he is giving services, in that movie he was an advocate, right? It can be even arbitral tribunal. If he is giving services to Tamil Nadu state for Kaveri dispute, so who's the client of Vakil Vandamurugan? Government, local authority, governmental authority or government entity. Exempt. Exempt. If client is government, local authority, governmental authority or government entity. Government means central government, state government, local authority. Governmental authority, government entity means 90% control is by government. Then exempt. But if he is giving services to other than government, and if he is giving services to, say, Mukesh Ambani and Neeta Ambani for their personal dispute. Or maybe you can take an example which you can connect. Who's that spinner? Chahal. And what is his wife's name? Ex-wife's name. That and all you'll know. What is not relevant, we'll know. Chahal, we know. Dhanushri, we know. You ask section, we don't know. Right? Dhanushri. So there's a personal dispute. Assume that Vakil Vandamurugan is representing Chahal. And with that t-shirt, he is coming to the court. Right? Then, is it a business dispute or non-business dispute? Non-business entity. Taxable or exempt? So advocate who has given the services to Chahal or Dhanushri for that matter, taxable or exempt? Taxable or exempt? Exempt. Clear? Clear? Now, if Vakil Vandamurugan is giving services to business entity, supposing Vakil Vandamurugan is giving services to, say, a small company, very small company, say Muthu and Co or Muthu Limited, whose previous year aggregate turnover is up to the limit of 40 lakhs, 20 lakhs, 10 lakhs, which is required for registration. Please make it very important. This will be, we will call it as small business entity. We'll call it as small business entity. Normally 40 lakhs, 20 lakhs, 10 lakhs, you see only current year turnover. You don't see previous year. If they have to get registered, they'll only see but it is not for them. It is for the other person to see whether you're small or big. If they have to get registered, they'll say current year turnover. Now it is not for them. It is for Vakil Vandamurugan to see them. Now Vakil Vandamurugan is seeing whether his client is big or small. Can he see current year turnover? No. Current year is running. So we'll take the base as like that. So don't mix it. For taking registration, you'll always see current year turnover. If it is for that person. But it is not for that person, it is from the angle of Vakil Vandamurugan. So you'll see previous year aggregate turnover. I'll give an example. ICA plays with this example. The same is there in government. The same list of exemption is there for government. Same list. We'll be seeing the same list with extra points. So, if Vakil Vandamurugan is giving services to Muthu Limited, body corporate. Muthu, whose previous year aggregate turnover is less than 40 lakhs, 20 lakhs, 10 lakhs, as the case may be. Muthu Limited is registered. Muthu Limited is Taxable, exempt. Exempt. Though Muthu Limited is a body corporate, though it is registered, it is small. I repeat, though Muthu Limited is body corporate, though Muthu Limited is registered, are we trying to see whether it is body corporate? Is there anywhere mentioned about body corporate? No. Are we trying to see whether it is registered or unregistered? No. What is given? Business entity whose previous year aggregate turnover is less than the threshold limit. Are we clear with this understanding? Now you know where are the areas where ICA plays the tricks. They'll not necessarily now suddenly give body corporate. Suddenly they'll give he is registered. Answer is same, exempt. So Vakil Vandamurgan giving services to Muthu Limited, which is registered, but previous year turnover is say only 5 lakhs. Taxable or exempt? Exempt. Vakil Vandamurgan giving services to Ram Limited. Giving services to not Ram Limited, Ram and Co. Ram and, which is say a partnership firm or a proprietorship concern. It cannot be a company. Ram and Co cannot be a company. For a company, that should be limited, correct? So Ram and Co, whose previous year aggregate turnover is 100 crores, but it is not registered because it is only dealing with exempt items. Whose previous year turnover is 100 crores, but it is not registered. Why? It is only dealing with exempt items. What is the answer? Though it is not a body corporate, though it is not registered, but it is a big business entity. It has to take compulsory registration. As it is coming under RCM, section 24 tells that if it is RCM, take compulsory registration. Take compulsory. Are you trying to differentiate that? I say plays with it, so I am trying to help you out. When you see the questions, you don't only see the theoretical point, you understand how questions are drafted. Clear? Now, if I had to summarize, it was very simple. Vakil Vandamurgan to government, exempt. To non-business entity, exempt. Small business entity, big business entity, taxable RCM. To foreign business entity, this is all Indian business entity. To foreign business entity, see, always in RCM, you'll see one common point in all the RCM. Irrespective of the conditions, different conditions are there. One common point is, if at all we are shifting the liability to the recipient, he should be in India. If he himself is outside India, it cannot be FCM. Clear? Exempt, RCM and FCM. So, you'll see all the cases. Now, it is very simple to make you understand. Just remembering the service will not help you out. You should know who's the supplier, who's the recipient, and what is the type of service. Now, till now, whatever services we have discussed, ICAI has focused only on GTA. GTA is the favorite child of ICAI. RCM na GTA. GTA is the favorite child of ICAI when it comes to RCM. Sponsorship at times, here and there. Copyright, never. Forget about copyright. They have never touched it. Advocate, second favorite child of ICAI for RCA. Don't think ICAI is impartial. If at all ICAI was impartial, then there is no need of ABC analysis. ICAI is partial, not greater extent. Romba partiality. So GTA, advocate. So when you are focusing more, okay, advocate, careful. GTA, careful, repeatedly ask. In advocate and arbitral tribunal, I am not touching one category because it is never ever touched by ICAI. Arbitral tribunal fully over. Advocate has one more part, advocate to advocate. One advocate to, it's never asked, highly technical, forget about it. So you'll find a blank space because it is advocate to advocate, never ever asked. Otherwise, arbitral tribunal and advocate is ditto. What is difference in advocate? One advocate can give services to, so that is an evaluation when it is exempt, when it is special RCM. That's something called as special. Neither supplier nor recipient, it is overall third recipient. So that I am not touching. We will not even evaluate it. So we are going ABC also. We are not going to evaluate that. Now, insurance services and banking services. These are not special kits of ICAI. Here and there, as a separate question, they are asked very rare of the rare cases. Just like copyright. Copyright is Almost it is never being asked. So likewise, these services are never asked, or 1 or 2 times they have been tried. 1 or 2 times. They have actually been tried 1 or 2 times actually. I'll tell where it has been tried. I'll tell that particular example also. Insurance agent to insurance company. Agent to insurance company. Not always. If agent is having license, insurance agent license under section 42 of Insurance Act, then it is. If that same insurance agent where you're talking about insurance company, but he's not having the license, policybazaar.com may not have insurance agent license under section 42 of Insurance Act. Though you may think it as a agent, technically it is not an insurance agent. FCM. That is for insurance services. Recovery agent to banking company, to banks. Banking company, banking sector means banks or non-banking financial institution or financial institutions. So it is RCM. But same recovery agent, one time they have asked recovery agent to Reliance Limited. Then it is FCM. Recovery agents can be also hired by other companies. Then it is recovery agents to banking sector is RCM. Recovery agent to others, FCM. Clear? Likewise, the phone calls that you get, direct selling agents. Do you want to open a bank account? Do you want credit card? Do you want debit card? Loan facilities? They are not employees of bank. They are all direct selling agents. If the direct selling agent is an individual, then see, now we are focusing on who's the supplier. Individual direct selling agent to banking sector, RCM. If the direct selling agent is not an individual, a partnership firm or a company to banking sector, then it is. See, that is the reason you have to see here. Recipient is not important. Supplier is important. Direct selling agent is individual, RCM. Firm, company, FCM. But what was important for recovery agent? Recovery agent can be anyone, individual, firm, company and all. If recipient is bank, RCM. If recipient is other than bank, differs. If we are talking about, lot of committees are there in RBI, special committees are there. RBI has got a lot of committees to help them out in doing their day-to-day work. If members of overseeing committee are giving their services to RBI, RCM. Special committee, overseeing committee. If there are members of other committees giving their services to RBI, FCM. Giving their services to RBI, FCM. Members of overseeing committee, RCM. Other committees, FCM. Now, there are services where you are talking about business facilitator and business correspondent. Business facilitator and business, these are the terms used for banking sectors and insurance sectors. These people help banks and insurance to do their works. Business facilitator and business correspondent. They are actually called as banking mitras, insurance mitras, friends. Friends of banks and friends of insurance company. BF, BC. Who's a bigger person? BC is a bigger person. They have major roles, major responsibilities. BF, small rules, smaller rules. Now, I'll make you this entire thing understandable in a simple way. If you're talking about business correspondent or business facilitator, giving services to the banks in rural area or insurance company in rural area. And most of the times they will take services of agents. Why? Villagers will not allow to enter their home. If you are going to a village and if you want to educate them of bank accounts or insurance policies, will they entertain you? ஒரு வெட்டியான ஆள் இருப்பார்ல அந்த வில்லேஜ்ல, you appoint him as an agent, you give him some amount and he'll take you home to home. Correct? Now you are giving, BCPF is giving services to banks and insurance companies, and agent is going to get some amount because BCPF is taking the help of agent. Now understand that if at all business correspondent or business facilitator is giving services to banks in rural area,
it is exempt. And even agent to business correspondent or business facilitator in relation to banking company in rural area, that is also exempt. Main service is exempt, related service is also exempt. But for insurance, it is not true. Business correspondent or business facilitator to insurance company in rural area is exempt, but agent to business correspondent or business facilitator in relation to insurance company in rural area, technically speaking, it should have been exempted. Main service is exempt, this also should have been exempted, but this is made taxable. Why technically it should have been exempted? Because of bank. Bank is the other service exempt, the insurance too, they should have made the same. But it is not so. I repeat, final beneficiary is insurance company or banking company in. For banking sector, main service by BCBF is exempt, agent to BCBF is also exempt. For insurance company in rural area, BCBF to insurance company in rural area is exempt, but agent to, it's not exempt. This is about exemption. Sir, what if you make this rural area into, then everything is taxable. This is about taxable and exemption. This is about taxable and taxability and exemption. Now about RCM FCM. For RCM FCM, you cannot treat BEC and BF same category, you have to split it. So, business correspondent and business facilitator. Who's big person? Who's small person? So, he is giving his services to banking company, insurance company, and that is an agent who will help him. Same way, business facilitator is giving his services to banking company or insurance company. He may take the help of agent. Now understand that here for business correspondent things are very logical. Business correspondent is a big person. He needs help or he doesn't need help. Big person doesn't need help. He'll rather help others. So agent to business correspondent is RCM. And business correspondent to banking company is simple. When he is giving his services to bank or insurance company, he'll pay under FCM. He doesn't need help. But when he is getting services from agent, he'll help others. And whenever RCM comes, pay by one hand, get credit in other hand. He'll pay by one hand, get credit in other hand. He'll pay by cash, get in credit. Get in credit. Clear? So this is same. Whether it is for banks or insurance, same. But when you talk about business facilitator, he's a small person. He needs help or he doesn't need help. So he will not help others. Agent to business facilitator, agent will see himself. He tells that I cannot help you. If your turnover is more than 20 lakhs, 10 lakhs, you please take registration, you pay under FCM. If it is less than 20 lakhs, 10 lakhs, no one is going to pay GC. Forget about it. FCM. It is FCM. But agent to banking company is, so look at this scenario. When he gets the services, he will not pay. Supply will collect and pay if he is registered. When he is giving his services to banking company, so he is not having any contact with the government directly. Logically speaking, the same should have been the story for insurance company. But unfortunately, insurance, let's read the time. Even for exemption, there was an illogical point. Even for FCM RCM, there's an illogical point. Logically speaking, business facilitator to insurance company should also have been under. Correct. He needs help. But they have kept it under. So you'll see this illogical point for insurance company with respect to RCM FCM. You'll see this illogical point for insurance company with respect to taxability. Clear? Clear? So what we did when we wanted to understand exemption, we did not speak about BEC, BF separately. We spoke about them together. Business correspondent, business facilitator. To banking company in rural area, exempt. Even agent to BCBF, exempt. Business correspondent, business facilitator. To insurance company in rural area, exempt. But agent to BCBF for that is taxable. So that was an illogical point. But when we spoke about FCM, RCM, we have to look at them separately. BC separately, big person. He doesn't require help, he'll help others. So that is very logical for both banks and insurance. Very logical. Agent to BC, whether for bank or insurance, RCM. They are big person, they'll help others. BC to insurance company or banking company, they don't need help, FCM. Logical. But when you talk about business facilitator, small person, he requires help, he will not help others. Small person. Agent to BF, whether for banks or insurance, it is FCM. But agent to banking, RCM, he needs help. And bank will pay under RCM. But agent to, sorry, not agent. BF to banking company, he needs help. RCM. But BF to insurance, logically it should have been under, but it is under. Don't worry, don't stress too much. I say ask it rarely. It has been asked, but very rarely. Once or twice it has been asked. Are you guys clear with this understanding? Now, suddenly if you look, we have completed 12 services. So how 12? GTA, sponsorship, arbitral tribunal, advocate, insurance agent, recovery agent, direct selling agent, members of overseeing committee, business BCBF, and agent to BCBF. Right. So here 10, then 11, 12, copyrights for MAT, copyrights for author. Copyright for MAT and copyright for. So suddenly if you go back, rather not 12, 13, 14 is related to real estate agent sector, forget about it. Even next service you have completed. Managing director, whole time director to company or body corporate. TDS under section 192. Louder. Forget about taxable exemption. It is not at all. Forget about tax. It's not at all supply. What about other directors? Where TDS will be deducted by company under 194? J. It is taxable under. Who will pay? Who is the recipient? Company is going to pay to the director. So company or body corporate will pay. Rather, we have also seen one circular. Directors in their personal capacity giving services to company for renting of immovable property, etc., etc. So that is not covered here. It is under CM. So suddenly, when you look the list of services, it is suddenly almost we have touched everything. Now the last two categories will be seeing your security and lending and renting services. So the list seems to be lengthy, but it is not so. Now, what are the important services that I have asked you to remember? GDA, advocate, and others are so. Next important services is your security and renting. Security and your renting. So when you talk about your security and when you talk about your renting, so they have been repeatedly asked, they'll play with it. Security services is always taxable. Exemption it's always, so it's always taxable when FCM, when RCM. Actually, RCM is only very rarely. Supply should be other than body corporate, and recipient should be registered, but wait, he should be registered not under composition scheme, and not a person who's having only pure TDS registration. Sir, we have seen somewhere pure TDS. But wait, their pure TDS was for exemption. If GTA is giving services to government or government agencies having only GST TDS number and no normal GST number, then it is exempted. Here it is not for exemption, it is for FCM or. Got that? Got that? So, when it is RCM, supplier should not be body corporate. No, registration has got nothing to do with it. Supplier should not be. If supplier is body corporate, if supplier is body corporate, FCM. If supplier is not body corporate but recipient is unregistered person, if supplier is not body corporate but recipient is registered under composition scheme, if supplier is not body corporate but recipient is registered but only for TDS purposes, so when it is RCM, now link everything. Supplier should not be, if the question gives supplier is Superstar Private Limited, full stop, FCM. Don't see anything about recipient. Suppose the question is supplier is Superstar and company. So it is not body, and co doesn't mean it means it is not a body corporate. It is a proprietorship person or a partnership firm. Correct? So it is not a, then see, recipient, unregistered, FCM. Registered, composition scheme, FCM. Registered, but only TDS number. Registered, not under composition scheme, but under regular scheme, and not only TDS, it is having normal GST number. It is passing so many criterias. Rather, if I were to give examples, I would have given 10 examples. Only one would be under RCM. Rest all 9 examples would have been under RCM. Got that? Got that? Now, the moment you see this, the next service which is repeatedly asked is your renting of motor vehicles designed to carry passengers, which includes even cost of fuel. It's not only for renting, including cost of fuel. Now, here things are a bit different. When it is RCM, supplier should not be body corporate. To that extent, it is same. To that extent, it is. But for recipient, it is very different. There it was about registered under regular scheme, normal GST number, not only TDS number. Correct? Here, recipient should be body corporate. It may be registered, may not be registered. It may be under composition scheme, it may not be under composition scheme. It may be having only pure TDS number or not having, having also normal GST. Registration is not the criteria. Recipient is body corporate. Recipient is body corporate. Wait, one more criteria. Supplier should not be body corporate and not charging. If supplier is charging 12% FCM. So supplier 2 criteria. It should not be a body corporate plus not charging. Supposing it is not a body corporate, say Superstar and Go, but it is charging 12%. So if supplier is body corporate, then it is FCM. If supplier is other than body corporate and recipient is also other than body corporate, FCM. If supplier is other than body corporate but charging GST at, see, it has to satisfy all the criteria. So supplier is not a body corporate, not charging 12%, recipient is a body corporate in taxable territory, then it is. Why I am stressing so much? The reason is you will mix this and that. You know, there is a common point. Supply is not a, but things are very different. For security services, both the cases, supply should not be body corporate. Common point. Difference, for security services to be it under RCM, only criteria is recipient should be registered under regular scheme, not having only TDS number but also having normal GST number. It is all about registration. It's all about
But for renting of motor vehicle, supplier should not be body corporate. Extra condition, not charging 12% and recipient. Now recipient is not about registered and unregistered. Recipient should be, recipient is a partnership firm. Partnership firm but registered. Recipient is a body corporate but not registered. Take compulsory registration. Be very careful. Be very, very careful when and what. சும்மா வந்துட்டு எனக்கு I know the heading and it is under FCM RCM doesn't works out. ICA is not asking you questions for FCM RCM just for the sake of asking. Lot of times ICA is rather most of the times ICA will ask question to test whether you know RCM FCM. Because if you are wrong with RCM FCM, your calculation is wrong. Your entire calculation goes for a toss. Your final answer would be wrong. Maybe step marks you'll get. You'll only get step marks for the other computation. Clear? Clear? Be very, very clear with your FCM and RCM. Right. Now, other renting services. This is for renting category. One is renting of motor vehicles. Now it is all about renting of immovable property. Now, before I take renting of immovable property, I'll take this security lending scheme. This is also not renting, but it is lending services. It is not renting, but it is lending services. Lending of what? Securities. If I have shares and if I'm not going to sell in the near future, I can give my shares on lending. I'll get extra income. I may give to a short-term trader. I'm a long-term investor. I can give it to a short-term trader. So I am giving my shares for lending via stock exchange. And it is all monitored by SEBI, the Securities Exchange Board of India. So it is via a stock exchange. Who's the supplier? Lender. And who's the recipient? If you remember, I said one point in goods that it is always RCM. Priority Sector Lending Certificate, PSLC. Here it is Security Lending Schemes, and both is lending. It is always RCM. So if at all any one category which I can tell in services that it is always RCM is Securities Lending Scheme. It will always be paid by the borrower, recipient. And one more thing that we'll be discussing tomorrow in place of supply. This will always be IGST. I may be the lender in Coimbatore and Praveen may be a borrower in Coimbatore. We are there in the same city, same state, same city, same street, same building, same floor. But it will always be RCM, always IGC. Why? Lender and borrower will not know each other. I will not know my shares are being lended to whom. So he will never know that the shares that he is taken on lending and he is doing short-term trading with it is of mine. You got that? So it is always RCM and it is always, when you are not sure of CGST, SGST or IGST, always go with. So that will be there in place of supply. So it will always be IGST. Right. Out of about 20 services, there's only one services that I can tell. Don't worry, it is always RCM. Security Lending Scheme. In all other cases, we have seen FCM, RCM, FCM, RCM, FCM, RCM. Right. Now, when you talk about other renting category, it is all about immovable property. There can be two types of immovable property which can be given on rent. Correct. One is renting of residential dwelling. One is renting of property other than, and both are equally important. One is unga veedu, one is your house, one is your shop. One is your house and one is your shop. If it is renting of residential dwelling for use as residence for your residential purposes to an unregistered person, that is, you have taken your house for your family, for your stay purposes, it is always exempt. But what are the conditions? Residential dwelling for use as residence And it is given to a recipient may be a proprietary concern, right, which is registered, but that proprietor has taken his house for family on renting. So technically he is registered, but he will be treated as unregistered person only, because it is not for his business, it is for his personal use. So that is also clarified in explanation. So what are the conditions for exemption? 3. Residential dwelling used actually for residence, recipient is unregistered. If it is residential dwelling used actually for residence but to a registered person. Classic example, a company is having a guest house for their managing director or customers or suppliers. Then RC. Or a company is having staff quarters. They have staff, forget about companies, lot of small companies in Coimbatore itself, they'll have staff quarters. Correct? So is it renting of residential dwelling? Yes. Used for residence? Yes. But who's the recipient? It is RCM. It is? But what if it is renting of residential dwelling not used for residence? Lot of CA officers comes under this category. வீடு மாதிரி house இருக்கு, but it is not used for residence. Then whether it is given to any person, like CA officers, movies and serials. You see a lot of big houses taken by production houses for shooting the movie or serials. Correct? Correct. So is it renting of residential dwelling? Used for residence? It's not used for this. FCM. FCM. To any person. It is always FCM. So you see exemption, you see RCM, you also see FCM. Right. Likewise, when you talk about renting of commercial property other than residential dwelling is commercial property. If at all it is having, you are talking about accommodation services for a value less than 20,000 per person per month, and where the stay is for more than. So you can think of hostels. Many of you would be staying in hostels, and it is clarified that that is not a residential dwelling. Correct? Or a hotel property. Correct? So it is renting of a property other than residential dwelling, but you're staying there, accommodation, and value should be less. The stay amount that you're paying should be less than or equal to 20,000 per month per person. Per month. So a lot of you will be satisfying that. Almost all of you will be satisfying that. Correct? Students now, it will be obviously more less than or equal to 20,000 per month per person. And your stay should be. So you are not coming and staying for some time. Supposing I go to Annapurna, stay for 2-3 days. Or stay for a month. Where the value may be say less than 20,000. But it is not exempt. Why? Stay should be more. Amount should be less. Stay should be more than 90 days. Amount should be, you're not permanently staying there, but you're staying for a long time. So students will fit here. Students will fit here. Not only students. Supposing any person who's coming from outside, say India, to have to go for a course at say Isha Yoga, he may satisfy this criteria for a period more than 90 days, but amount less than exempt. It cannot be categorized as residential dwelling. It is a property other than residential dwelling. In other case, if it is from unregistered person to registered person, supplier is unregistered, recipient is, then RCM. But if it is from registered person to registered person, so you see exemption, you see FCM, you see. So now, if you look at both the points, residential property, renting, commercial property, renting, it can be exempted. It may be under RCM. It can also be under, depends on the question. It depends on the, now, what are the 4 services that are very important when it comes to RCM? CTA, advocate, security and renting. GTA, advocate, security and renting. And rather we are the last category of services where you are talking about your government services, and we'll find that this government services is very simple if at all you follow proper flow. The most important of all the services. Rather, if you remember the list, then before I started with your list of services, I said you 8 list. And the first item was government. First item was government. Right? So important, very lengthy, but if you properly understand it, it is actually very simple. How to understand it? First, PML. PML already we have discussed. Panchayat, Article 243, G. Municipality, Article 243, W. And liquor license fees by state government for alcoholic liquor for human consumption. All three are not at all supply. All three are not at all PML. Forget about taxable, forget about exemption. It is not at all supply. Levy itself is not there. We are not. There is one more category that we have discussed. It is not at all supply. Just now, directors, managing director, whole time. It is not at all. One more place we've seen, court tribunal. Before saying advocate, arbiter, tribunal, I said court tribunal. It is not at all. I am not even discussing exempt or it is not at all. When I tell it is not at all supply, forget about exempt or taxable. Levy itself is not there. Levy itself is not there. PML. Then PRPT. First is your PML. Then it's PRPT. PRPT. Right. So PML and PRPT. Now what is PRPT? It is post, railways, port, airport and transport. Now post. When you talk about Department of Post, services by Department of Post only when it is related to postcard or inland letter or book post or ordinary post, and the weight is less than, not equal to, less than 9.99 grams covered. 10 is not covered. Less than, so all four. What are the 4 categories? Book post, ordinary post, inland letter and postcard. Registered post, taxable. Speed post, insurance service by Department of Post, bank account operation by Department of Post. So it is only PBO services. It is only PBO services. Postcard, inland letter, book post and ordinary post. Where the amount is less than 10 grams, it is exempt. Any other service by Department of Post. Taxable, FC, no RC. Why we are discussing PRPT separately is for these categories, when it is taxable, it is always under FCM, no RCM. Then we are talking about railways, port. The first is post, then it is railways. Certain notified services by railways. Notified services by railways. So what are the notified services? Very simple. Think of your visit to railway. You will get the answer. When you are visiting to railway, that is a platform ticket. You have to get, correct? Right. At times when you are going from one train to another train, that's a services of waiting rooms or retiring rooms. Correct. At times when you are going to a station, but you will be coming back in 2 days and you don't require all the luggage. You'll be going to clock room. Nowadays, for your, if you're not able to travel, if you're not able to walk, battery operated cars. So your visit to a railway station will be having all these services normally to individual. Platform tickets, retiring room or waiting rooms for your stay, clock room for your luggage, and battery operated services for your movement if you're not able to walk. If you're not able to walk, exempt. Or service provided by one zone of railways to another zone, which means one branch to another branch of railways. Exempt. Exempt. Or services given by Ministry of Railways to special purpose vehicles. So what is special purpose vehicle? I'm sure everyone sitting here, not everyone, few of you would have heard that now certain platforms are managed by private companies. One of such companies, Adani. That platforms are managed like airports. You'll feel the difference. Everything is so much organized, very neat and clean. So how it will happen is, railways will give that area to private company for them to manage. So they'll be giving services to railways. Railways also will be giving services to them. How railways will be giving services to them? In terms of maintenance. In terms of maintenance. So Ministry of Railways giving services to special purpose vehicle for the infrastructure built and owned by special purpose vehicles. So that platform now will belong to say Adani, but they will manage that particular infrastructure. So that is exempt. That is exempt. Right? Actually, both are exempt. Adani to railways is also exempt. Railways to Adani is also. What Adani will give to railways? It will allow the railways to use that infrastructure, because see, understand, these shops which are there, they will be making the payment only to railways, and the share will be going to Adani. So it is Adani to railways exempt, railways to Adani exempt. Railways to Adani. So these notified services are exempt. Any other service, any other, or doubt, sir, any other service like enna varu sir, everything is exempt. No. No. If you are having shops at railways, you are giving rent. Is that exempt? Is that exempt? No. That is not exempt. If at all you want to transport your bike from one city to another city using Indian Railways, is that exempt? No. Any other service, it is taxable, and whenever it is taxable, it is always taxable under FCM. It is always taxable under FCM. Now, next is what was the second category? PRPT, Post, Railways, Port. Now understand that port and airports are always managed by government. Port by Port Trust of India and airport by Airport Authority of India. Correct? Correct. When they are managing the port and airport, they get lot of income from the airline companies and even from you. Not directly via airlines, via airlines or vessels. Any services by Indian government related to port or airport, I mean aircraft or vessel inside or outside the precincts of port or airport to any person. That any person can be airline company or shipping line company, or that any person can be the passengers. Can be the passengers. It is always taxable, and always, there's no exemption. Port, airport related services always taxable. Always taxable. Post, railways, port, airport, and finally transport. Finally, so when it is transportation services, they don't give a direct answer. Transportation services discussed separately in exemption chapter. What are they trying to tell? If transportation is actually exempt if it is given by a private entity, it is exempt when it is given by government also. I'll give an example. Buses circular, stage carriage. If it is non-AC, it is exempt. Whether that bus belongs to Tamil Nadu state government or private company, if it is not having AC and not for tourism purposes, it is exempt. If it is exempt for private sector, it is exempt for government. If that bus is having air condition, it is taxable for private sector, it is also taxable for government. It is also taxable for government, and whenever it is taxable, it is FCM. It is FCM. Clear? Clear? So that is this understanding. That is this entire understanding. PML, not at all supply. PRPT, it may be exempt, it may be taxable, but when it is taxable, it is only no RCM. For post, railways, port, airport, transport, no, any question dealing with all these categories, if it is not exempted, don't write RCM. That cannot be an RCM. Always it is FCM. Always it is. Now, other services. So, what are the other services? Other than PML, PRPT. Other than PML, now I asked you to remember this category when we saw advocate services. Correct? Government, now there it is Vakil Vandamurugan to government. Correct? Here it is, supplier itself is government. Tamil Nadu government giving services to Karnataka government. Government to government. Government to government. Exempt. Government giving services to non-business entity. Exempt. Government to government. Exempt. Government to non-business entity. To you and I mean normal individuals. Which are when we are not acting as business entities. Normal, our services. And this is actually very, very important. Why? I see a lot of time confuses this. Supposing you and I are going for registered post. We are acting as non-business entity. Correct? But is it in the second category or the third category? Registered post. You post your books to your friend by registered post. Second category or third category? Second category. If it is by registered post, it is taxable under FCM, though you are acting as a non-business entity. You're understanding the point? If it is registered post, it is PRPT, postal services. For postal services, only 4 are exempt. PIBO, less than 10 grams. Registered post is not exempt. Now, whether you are business entity or non-business entity is not relevant. For railways, whether you are business entity, non-business entity, not relevant. For port, airport, whether you are business entity, non-business entity, not relevant, not at all relevant. For transport, when you are going by, say, 7 number bus from Maharashtra to some other place, AC bus, whether you are business entity or non-business entity, or registered or not registered, not at all. It is taxable under. Are you getting that point? Be careful. You have to split. Government is complicated if you don't split in your mind. PML, separate story. PRPT, either exempt or taxable. When it is taxable, it is always under FCM. There, whether you are business entity, non-business entity, not relevant. Whether you are body corporate, non-body corporate, not relevant. Whether you are registered, not registered, not relevant. Got ya? Got that? So, others, government to government, exempt. Government to non-business entity, government to small business entity, and I will explain what is meant by small business entity. Government to big business entity, government to, now change, advocate to government, exempt. Advocate to non-business entity, advocate to small business entity, advocate to big business entity, taxable under RCM if it is in India. If the business entity is in, government to advocate to foreign client. Right, but here advocate to foreign client is FCM. Here there's a change. Government to government, government to non-business entity, government to small business entity, government to big business entity. It should have been taxable, but if at all, it is a scenario where you're talking about, though it is a big business entity, but for small value, where the value is less than 5,000 per service. If it is continuous supply of services, 5,000 per year. Normal service means 5,000 per invoice. If it is continuous supply of services, 5,000 per year, it is exempt. Now, government to big business entity, big value. Government to big business entity, big value. If it is notified services, exempt. See, there are 2 extra exemption. Even though it is to a big business entity, small value, exempt. big business entity, big value, notified services, exempt. So there are two extra exemptions. There are two. Then government to big business entity, big value, other than notified services, then for the first time you will find that it is taxable. What are the two extra exemptions that you find here? Two extra. Big business entity but small value, exempt. Big business entity, big value but notified, exempt. In other cases, it is taxable, but when it is taxable, you have to ask another question. Whether the service is renting of immovable property or the service is other than renting of immovable property. If the service is renting of immovable property, then if it is given to registered person, RC. If it is given to unregistered person, see, if government is giving properties on rent, if it is given to registered person, RCM. Unregistered person, HCM. If it is other than renting of immovable property, any other service other than renting of immovable property, if the recipient is in India, RCM. If recipient is outside India, clear? What are the two extra exemptions that came which were not that in advocate? To government, exempt. Non-business entity, exempt. Small business entity, exempt. Big business entity, small value, exempt. Big business entity, big value, notified, exempt. So these two are extra. Small value and notified. Big business entity, big value, not notified, taxable. Wait, when it is taxable, FCM, RCM, you have to ask another question. Renting of immovable property, other than renting of immovable property. If it is renting of immovable property, recipient is registered, unregistered, HCM. If it is other than renting of immovable property, recipient is in India. If he is not registered, get registered. Compulsory registration. Recipient is outside India. Clear? Clear? One special point here. When you are talking about small business entity and big business entity, small business entity and big business entity, you will not evaluate small and big business entity when it is about renting of immovable property, which means for renting of immovable property, you won't see whether the business entity is small or big, it is taxable. You will see all other exemption. Renting of immovable property to government is exempt. Renting of immovable property to non-business entity is exempt. But renting of immovable property, you will not see whether it is small or big. Small business entity or big business entity. Right? And all these points that I am telling you, highlighting it, have been asked by ICAI. It is not that ICAI is not. ICAI has done thoroughly all the ifs and buts, manipulating the mind of students. Students think that they are going right direction, but finally when they see the answer, it is a different answer. Why? They have not split in their mind that we have to split in three categories: PML, PRPT, others. And if you split it, then it is very simple. If you don't split it, it's complicated. Then you don't know which point, which answer. Okay, I'll make it more simple. If you don't split it, it is just like opening computer multiple windows. Always there's tech issue. Even today we experienced. If you open 10 windows in your computer system, will it work? Alt tab பண்ணுவீங்களா? You find the difficulty. Now you will be in the same position. You know that government la nariya exemption irukku, nariya FCM RCM irukku. You will open up all the windows. Your mind la ella windows open ஆயிடும். என்னன்னா exemption இருக்கு, என்னன்னா taxable irukku, what all is exempt, what all is taxable, what all is under FCM, what all is under RCM. But you don't know which window to see first. So you will go here, you will go there. So what have we done? We have just made sure that you know which window to see first, which to see next, which to see in the end. PML, PRPT, others. In others, you know a proper sequence. To government, to non-business entity, to small business entity, to big business entity but small value, big business entity, big value but notified, and others. If it is others, then it is taxable. You know that sequencing. You come with that sequencing, and even when it is taxable, you know whether renting of immovable property or others. So that clarity if you have, then you see the question, you'll be very safe. And ICI loves this, and ICI is repeatedly asked all the permutation combinations, what all is possible, everything that is possible, it has been asked by ICI when it comes to government services. Right? And if you are able to understand this lengthiest exemption and lengthiest RCM, then you're done with, you will find every other thing very simple. If you're comfortable with this, you're comfortable with any other exemption, any other RCM, and that is the reason to take this service in the end. Otherwise, if I were starting with government services, then other RCM, FCM, we would have stuck at one service. Now, for your information, we have seen 20 RCM entries, not 22, because 2 relating to real estate sector we are not seeing. So we have seen all these entries now. Now, any question of RCM, you are prepared. Right? Notified services, I'm not taking through. You can just give a glance, because in that exemption in others, there was one category of big business entity, big value, but so there are about 10 list of government services which are notified. If at all it is covered by here, it is exempt. It is exempt. So that you need to understand. Are we guys clear with this entire understanding? Are you guys clear with this entire understanding? Yes. So that completes our discussion of section 9.3 RCM for notified goods. 10 categories of goods we have seen and 20 categories of services we have seen. 9.4 is not there for you. 9.5 we'll see it after the break. But are you guys clear with this entire understanding? Are you guys clear with this entire understanding? Right. RCM la, if at all you want to make sure that you are thorough with anything, 5 items. We have gone through everything and you have understood what it is. And you would have already read through. So almost you would have been comfortable with all because you have already gone through it. But 5 important items that you should not make mistakes. First, now reverse the sequence. Government, GTA, advocate, security, and renting. And renting, most importantly, renting of that motor vehicles is asked every now and then. So you have to be very, very clear with all these entries. You can through RCM. RCM generally is not asked separately. Either club with exemption or club with ITC chapter. Club with your RCM, always remember, pay by one hand, cash ledger, immediately get in credit ledger. So we'll be having workings. We'll be seeing questions, right? We'll be seeing the workings. Pay by cash, get in credit. Pay by cash. So you'll pay it by cash ledger, but you'll get immediately in your credit ledger. Are you guys clear with this entire understanding? What had we seen was section 9.3 RCM for goods, 10 categories, and services, approximately 20 categories we have seen. 9.5. Now what is 9.5? Payment of GST is neither by supplier nor by recipient. It is by a third party. Now when it is applicable? When supply is of notified services through electronic commerce operator. Simple meaning of electronic commerce operator is apps or websites. It is an app or a website. Right. Now what are the notified services which are covered under section 9.5? There are 4 notified services. One is passenger transportation services. Classic example of which you can always remember Ola, Uber, etc. Because we are talking about such services supplied through ECO. Second is your accommodation services. Classic example is OYO, Make My Trip, etc. etc. Right. Next is your housekeeping services. One of the classic example happens to be your Urban Club. Right. Where you get plumber, carpenter, etc. etc. Housekeeping services. And finally, you are talking about your restaurant services. What more than after lunch we are discussing about restaurant services? Surely few of you sitting here would have ordered your food only via your online platforms. Correct? Swiggy, Zomato, whatnot. So you're talking about all these services via electronic commerce operator. Via electronic commerce operator via ECO. If these services are supplied, these notified services are coming through ECO, then it is covered by 9(5). Where supplier will not pay tax, recipient will not pay tax, ECO will pay tax. Please understand, for transportation services, passenger transportation services, or accommodation services, or for that matter, housekeeping or your restaurant services, supplier is, supposing we'll take one example, restaurant services. Supplier is Annapurna. You are the recipient. Your Swiggy is also supplier, but its supply is of commission. The supply of Swiggy is that of commission. Correct. But now, supposing you have ordered food via Annapurna for 1,000 rupees. And Swiggy's commission is 100 rupees. Now, you are telling that if it is covered by 9(5), Annapurna should have paid tax on 1,000. If it is not covered by 9(5), Annapurna should have paid tax on 1,000 and Swiggy should have paid tax on 100. FCM. Correct. But now what is happening? You are asking Swiggy to pay GST on 1,000 rupees, the service that of Annapurna. So Annapurna to you, Swiggy to Annapurna. Annapurna to you, 1,000 rupees. Swiggy to Annapurna, 100 rupees. But now Swiggy is paying GST on service given by Annapurna. See, between Annapurna and you, the value is 1,000. The value is, but Swiggy to Annapurna's value is only 100 commission. But now Swiggy is not paying GST on 100 rupees. Swiggy is paying GST on entire 1,000. And that 1,000 rupees includes commission. So again, Swiggy will not pay. Swiggy will pay only once. It is paying GST on service of Annapurna. Swiggy is paying GST, but not on its commission, on the service given by. Are we guys clear with this 9(5)? Because many of you knows what are the list of services in 9(5), everything else, but this basic differentiation is not being appreciated. Right? Now understand that just like RCM, you cannot just remember the services and you tell it, okay, I know what it is. I have cracked it. No. Because all these 4 notified services, even when they are supplied via ECO, it can be a case which is not covered by 9(5). It can be a case. Right? Let us see first the category, passenger transportation services. Passenger transportation service by any mode. You need not remember what is motor cab, maxi cab, radio taxi, motorcycle, omnibus, or any other motor vehicle. Why? Because all types of motor vehicle are covered. Though that has a definition of everything, you need not remember it. Why? They have practically covered everything. Right? Bus covered. Car covered. Two-wheeler covered. Cycle, everything is covered. Technically, they have got everything. So, whether it is motor cab or maxi cab or radio taxi or motorcycle or omnibus or any other motor vehicle, there should be motorized conveyance. Engineering, motor, any other motor vehicle, sufficient. It is covered. So, you need not technically know what is motor cab, 0 to 1 to 6 passengers, maxi cab, 7 to 12 passengers, radio taxi, there is centrally controlled office where that is controlled by GPS or GPRS. You need not know all this. Forget about it. Forget about this particular thing. Everything is covered. Everything is covered. But wait. There is one exception. If at all you are talking about omnibus, bus category. If at all you are talking about omnibus and supplier is company, then supplier will pay GST. This is not for radio. This is not for motor cab, maxi cab, radio taxi, motorcycle. It is only for bus. In simple understanding. I am booking, say, a cab via Ola. When I am booking a cab via Ola, whether the owner of this supplier, see, there are 3 parties: cab owner, myself, and Ola. We are talking about cab owner. Cab owner can have a company. Cab owner can have it need not work like a proprietorship concern, it can have a company. Right? Now, when I am doing that for a car, whether cab owner's firm, cab owner's business is run under company category constitution or firm or proprietorship, doesn't matters. Who will pay GST? Ola will pay GST. And we'll take the same numbers. Ride charges is 1000 rupees. Commission of Ola is 100. Commission of Ola is 100. But who will pay GST? Supplier will not pay GST. Which means cab owner will not pay GST on 1000 rupees. Who will pay? Ola, Ego will pay GST on supplier's service charges. On cab owner's service charges, which is 1000 rupees. Not only on his commission. That 1000 rupees includes his commission. That 1000 rupees includes his commission. But if I change the example, if at all I am telling that through Redbus, I am booking a bus seat. Through Redbus, I am booking a same 1000 rupees is the bus seat charges. Redbus commission is say 100 rupees. Now, we are not talking about what is Redbus. We are talking about who's the supplier. If the owner of that bus company, if the owner of the bus is a company, then 9.5 will not be applicable. What would be applicable? FCM. Bus owner will pay GST on 1000 rupees. FCM. And Redbus will pay GST on 100 rupees. Commission. FCM. Got that? If the bus owner is running his business via a company, then bus owner will pay GST on 1000 rupees. FCM. His service charges. Redbus will pay GST on his commission 100 rupees, FCM. But if bus owner is not running his business via a company, he is running his business via a proprietorship concern or a partnership firm, then bus owner will not pay any GST. Redbus will pay GST on entire 1000, not just his commission 100 rupees. Simple. Clear? Clear? This is passenger transportation services. Normally under 9.5 via Ego, but it can be outside 9.5 also, FCM category. See, when it is 9.5, only one person is paying. Ego is paying GST on the main service provider's charges. Right? But when it is not 9.5, there will be two payment of GST. Service provider will pay GST on his service charges, which means bus owner will pay GST on his ride charges 1000 rupees. And Eco, that is Redbus, will pay GST on its commission. And don't worry, there's no duplication and there's no double taxation involved. Whatever Redbus is paying GST, the bus owner will take the input tax credit. Bus owner will take that will happen. Finally, the government will get revenue only on 1000. Government is not getting extra revenue and all. Clear? Likewise, when you talk about accommodation service and housekeeping services, and they have the same exception, accommodation service and housekeeping services. Normally, if accommodation services are given via Eco will pay GST. If housekeeping services is given via Eco will pay GST. But if supplier of accommodation service and supplier of housekeeping service, he himself is liable for registration under section 22. He himself is liable for registration under section 22. What is the meaning of that? Which means the turnover of the supplier is more than 20 lakhs or so why not 40 lakhs? For service 40 lakhs is not applicable. For service 40 lakhs is so supplier's turnover itself is more than 20 lakhs or 10 lakhs as the case may be. 9.5 will not be applicable. I'll take a very basic example. Very basic example. Right. So you are talking about two actors, say maybe who are not having job now. Many two actors were very famous then but not having any job now. Any two actors? Siddharth, Jiva, Siddharth, who were at their peak at one point of time. But now you rarely find them. Correct? Right. These two actors now have started, say, housekeeping services. Right? Via Urban Club. Right? Assume that Jiva's turnover is less than 20 lakhs in lakhs. And Siddha's turnover is still more than 20 lakhs, 10 lakhs. So when Jiva is providing services through Urban Clap, who will pay GST? Jiva's carpentry charges or plumbing charges is 1000 rupees. And Urban Clap's commission is 100 rupees. We'll take the same numbers. 1000 rupees, main service charges, commission 100. Who will pay GST? So Jiva will not pay any GST on his service charges 1000 rupees. Urban Clap will pay GST on Jiva's service charges 1000 rupees, not on its commission. One person will pay GST but on another person's value. Eco is paying GST but on supplier's value. Clear? Now what if I change the question and I tell that no, it is not Jiva, it is Siddharth who's providing carpentry services or plumbing services via Urban Clap. And Siddharth's turnover is more than 20 lakhs in lakhs. Then 9.5 is not applicable. 9.5 is not. Siddharth will pay GST on his service charges 1000 rupees FCM, and Urban Clap will pay GST on its commission 100 rupees. Both are FCM. Both are FCM, SCM. So for accommodation services and housekeeping services, when it is applicable, when it is not applicable is the same. Clear? And finally, your restaurant services. When you talk about your restaurant services, what will happen? Restaurant services is a very different category. Restaurant via Eco. So if at all we are talking about restaurant services, if it is via Eco, the answer is pretty simple. It is under 9.5. But there's an exception. What is that exception? If at all the provider of restaurant is there in specified premises. He is there in specified premises. Now you may ask, what is specified premises? Premises where any one room, single room, accommodation charges, your declared tariff value is more than 7,500 per unit, means per room per day, or equivalent. Equivalent means if at all they are charging monthly basis, you please convert it to per day. So you are talking about what? A restaurant which is attached to a hotel, and one room in that hotel having value more than 7,500 per room per day. Two conditions. Restaurant attached to a hotel and any one room in that hotel declared tariff value, not the actual value, declared tariff value, they have tariff, right, is more than 7,500 rupees per room per day. Per room per day. Are you guys clear with this understanding? If that is the scenario, then 9.5 is not applicable. I'll give a very basic example. Take a normal Annapurna, Metupalayam Road. So one is on this side and other is on the other side, RS. So first we'll talk about Metupalayam Annapurna. Let us treat that as two different entities. They are two different premises for the purpose of GST in terms of this understanding. Let us assume in that way. Right, Metupalayam Annapurna. Is there any hotel attached to it? No. So if at all you are getting food from Metupalayam Annapurna, what would be the answer? You are ordering food for 1,000 rupees and Swiggy's commission is 100 rupees. What will be the answer? Annapurna will not pay GST on 1,000 rupees. Swiggy will pay GST on 1,000 rupees, not just on its commission 100 rupees. Correct? Correct? Change the question. If you're getting food via RS Puram Annapurna, where at least there are one or two rooms whose declared tariff value is more than 7,500 rupees per room per day, then what is the answer? Annapurna will pay GST on food charges 1,000 rupees. Swiggy will pay GST on its commission 100 rupees. Both are FCM. Both are. Sir, what if that RS Puram Annapurna, there are no rooms whose declared tariff value is more than 7,500 rupees per room per day? Then Annapurna will not at all pay GST on 1,000 rupees. But but Swiggy will pay GST on entire 1,000 rupees, which is Annapurna's food charges, which includes his commission also. Clear? Clear? That is the understanding. Everywhere the answer differs. It is just like RCM. The answer is always not RCM. Answer can be FCM. Here also, here technically it is not RCM. RCM means recipient is liable to pay tax. Here it is neither the supplier nor the recipient. Now you understand. Swiggy is not the supplier, not the recipient for 1,000 rupees. For 1,000 rupees, Annapurna is the supplier and you guys are the Swiggy is for 1,000 rupees. Swiggy is neither the supplier nor the clear. Clear. Just because ICAI is not using its potential to the core doesn't mean that you will not get questions. So ICAI for these are questions. ICAI has not used its potential to the core. Government services, the ICAI uses its utmost potential. What are the permutation combinations ICAI has tried to ask? So you understand the depth of government services. But when you talk about Section 9.5, ICAI is not, rather if I were drafting the question for ICAI, I would merge accommodation services and restaurant services, both. I'll give a question for Annapurna, RSO Annapurna. I'll merge both. I'll merge. The answer is not difficult. For accommodation services, is Annapurna's turnover more than 20 lakhs and lakhs? Yes. So 9.5 is not applicable. Annapurna will pay GST on its room rent, tariff charges, and ECO will pay GST on its commission, FCM. But for restaurant part, if at all there is a single room whose declared tariff value is more than 7,500 rupees per room per day, Annapurna will pay GST on its food charges, FCM, and Swiggy will pay GST on its commission, FCM. But if there are no rooms whose declared tariff value is more than 7,500 rupees per room per day, then for restaurant portion, ordered via Swiggy, because Annapurna is also serving you when you are going there. We are not talking about the entire restaurant service. We are talking about restaurant service offered via Swiggy. So Annapurnas will have huge restaurant services where people are coming there and having food or taking parcels. We are not talking about it because that is FCM. We are talking about Annapurna's restaurant category via Swiggy or via any other, say Food Panda or via Zomato, via those portals. Then Annapurna will not pay GST on food charges. It is Swiggy which will pay GST on the food charges, not just on its commission. ECO. Clear? That is everything about your section 9.5. Section 9.5. Neither the supplier nor the recipient. Chapter to crack post lunch, which is time of supply. Weightage not too much, clubbed along with different chapters. Clubbed along with RCM and said that what is the time of supply for so and so. But when it is asked, it is a bonus question. So will you find this question in all the question papers? No. Time of supply may not be there in all the question papers. But possibility is quite high. More than 50% chances are there that you will get a question of time of supply. Right? Maybe you can take it this way. 4 question papers, 2 question paper lekkala. Out of 4 question paper, you can find it in 2 question paper. And when it is asked, it is a bonus question. Simple answer. Data telivarku. There will be multiple dates. You have to just recall the provision, explain it, and select the correct date. What is the relevance of time of supply? Time of supply is the provision which will help you in finding out your due date of payment. Without time of supply, there cannot be any due date of payment. Without finding out time of supply, you cannot have. If I tell my time of supply is April month, then only my due date of payment is 20th May. Without freezing this, I cannot tell my due date of payment. If I tell my time of supply is May month, then my due date of payment is 20th June. If I tell my time of supply is December month, I may have entered into contract in April. But if my time of supply is December, then due date of payment is 20th Jan. What is the only purpose of time of supply? The only limited purpose of time of supply is finding out due date of payment. Now, how time of supply is split? Section 12, time of supply for goods. Section 13, time of supply for services. But all, whether it is goods or services, 5 categories. Time of supply under FCM, time of supply under RCM, time of supply for voucher cases, time of supply in residual cases, time of supply in case of interest on delayed payment of consideration. Interest on delayed payment of consideration. Now let us go reverse wise because things are very simple in last 3 cases. Time of supply in case of voucher, time of supply in case of residual cases, and time of supply in case of interest in case of delayed payment of consideration. Interest in case of delayed payment of consideration. Now, time of supply in case of voucher supply. What is voucher supply? Supply will be through a voucher. Voucher will be acting as money equivalent. It will be acting like consideration. It will be working like money. It will be working like, supposing Tata Limited gives you the voucher of Pizza Hut and Tata Company gives you the voucher of Big Bazaar. You are the employees of Tata Company. Who's the supplier? Which supplier are we talking about? No. Both. Not only Pizza Hut and Big Bazaar, but also from the angle of Tata Limited. If the amount given to employees is more than 50,000 per financial year per person. So it is both. So it is not only time of supply for Big Bazaar and Pizza Hut, it is also time of supply for Tata Limited, because Tata Limited to employees is also supply. If the amount of gifts is more than 50,000 per financial year per person, or where Tata Limited has taken credit. So that we have understood in your supply. Basically, yes, it is time of supply for whom? Pizza Hut and Big Bazaar. Why? Who's the supplier? Pizza Hut, Big Bazaar. Who's the recipient? Tata Limited. Tata Limited would have made the payment to Big Bazaar and Pizza Hut long back. Supposing Tata Limited today is taking vouchers and giving to its employees. So in the month of April, it is giving payment to Pizza Hut and Big Bazaar and taking the vouchers. And it is distributing to the employees. And I am Tata Limited, you are all my employees. Right? Supplier is Pizza Hut, supplier is Big Bazaar. So I am giving you the vouchers. Few employees will use it in the month of April itself. Few in the month of September, few in the month of December. So April, September and December. You will be using in different period. Now, when you talk about Pizza Hut category, whether you use a voucher in April or September or December, after all, you are going to go to Pizza Hut, have pizza or garlic bread or a Pepsi or whatever item you want, and the rate of tax on all these food items is the same. So what is the category of voucher? Where the supply is identifiable, at the time of. So when Pizza Hut has given the voucher to me, Tata Limited, and I have given the vouchers to you, and one of you have used in April, one of you have used in September, one of you have used in December. Right from the beginning, Pizza Hut knows whether these employees use it in April or whether the vouchers are used in April or September or December. The rate of tax is going to be the same 5%. So what will be the answer? What is the time of supply for Pizza Hut? At the time of issuance of voucher. Only one answer will be that. Government wants time of supply earlier or later? So the answer is April. Whether the vouchers are used in April or September or December, answer is April. Answer is. But if you're talking about vouchers given by Big Bazaar to Tata Limited, and Tata Limited has given to employees who are using, few are using in April, few are using in September, few are using in December. What is the problem? Big Bazaar deals with a lot of items. You may have 5%, you may have 18%, you may have 12%, you may have 0%, etc., etc. Different rates. So supply is not identifiable at the time of issuance. You don't know which employee is going to use voucher for what item and what rate will be that. So supply is not identifiable at the time of issuance of voucher. Though government wants revenue earlier, but revenue will not be clear. What is the answer for them? Date of redemption of voucher, when the vouchers are used. So for first category employees who are redeeming the vouchers in April, that item may be 5 or 12% or combined 5 and 12%. Answer is April. Second category who are using it in say September, 12%, 18% combined. So answer is September. Third category, you are using it in December, few items 5%, few items 12, few items 18. So respective rates. Answer will be December at the time of redemption of voucher. One answer or multiple answers? So now time of supply for Big Bazaar is April, September, December, depending on redemption of voucher. Though Big Bazaar has received entire amount from Tata Limited in April itself. But time of supply is in parts. Clear? Why are we taking voucher supply, residual cases and interest beginning? Because whether it is goods or whether it is services, answer is the same. Whether it is section 12, section 13, answer is we are not even differentiating whether it is for goods or services. Now, what is the time of supply in residual case? What is the time of supply in residual case? Sir, what do you mean by residual case? Residual case means fraud category. No records. No, you have to pay GST but you don't have records. No records. Fraud category has two types of person. One, a fraud person who's a fool. Foolish fraud. Right? He is not having records, but for some reason he is registered. He is registered. I will not have any records, but I will get registration. Second, intelligent fraud. No trial left. Audit point audit trial. Right? I will not leave any trial left. So he is not having any records. He knows that he is doing wrong and he is not getting registration. Right? When you don't have records and you are liable to pay, it will be difficult for the department. Excuse me. It will be difficult for the department to find out time of supply. But if they don't find out time of supply, you will not pay GST. Because time of supply is relevant for due date of payment. So first category is no records but registered. Technically, it is actually addressed as if returns are to be filed. When are you going to file returns? Only if you are a registered person. Only if you are so no records but registered. In that case, time of supply is due date of filing return. Due date of, supposing your supply happened in January 2020. What was the due date of filing return? What is the due date of filing return? 20th Feb 2020. What is the due date of payment? Not 20th Feb, 20th. So people will go wrong here. ICAI has not used the potential it is having. It is having great potential. If interest will start, if this point is not set, you will start calculating interest from 21st Feb. Whereas it is wrong. Time of supply is 20th Feb. And time of supply will help you find out which is 20th of. See, supply happened in January. If it is a normal case, interest would have started from 21st of February. But in this case, no. Time of supply is due date of filing of return, which is 20th Feb. And when time of supply is 20th Feb, due date of payment is 20th March. Interest will start from here. ICAI has never used the potential it is having. Right. Next category, where supply happened in same Jan 20, but you did not have any records, no registration, you are never liable to file any returns. Finally, you are caught in April 2025 and you are paying the amount in April 2025. So, time of supply itself is actual date of payment. There it is due date of return. Here it is actual date of. So, when are you going to make the payment? Supposing you are making the payment now, April 2025. So, your time of supply is April 2025. 5 years later you are paying, but your time of supply is only today. Which means your due date of payment will be 20th May. You will never ever pay interest. Why? Your time of supply itself is when you are making the payment, and you have made the payment before due date of payment. You have made the payment before. Don't worry, penalty will be there. Penalty will be there. Here, whether there will be interest? Yes, there will be interest, huge interest. But starting from 21st of March 2020, not 21st of February. Ideally 21st of February, but in this case, 21st of March. So if I were ICA and if I want to see how many of you actually understood this point, I'll club two provisions: time of supply and calculation of interest. ICA does merges two questions, right? Multiple chapters are merged and you see your question paper. 2-3 chapters will be merged. I'll merge these two questions. Right? So in merging these two questions, I will know actually whether you have understood what is this provision. Are you guys clear with this understanding? Are you guys clear with this understanding? That's about your fraud case, technically called as residual case. First category, no records but registered. That is the reason you are required to file the returns. Second category, no records, no registration, intelligent fraud, no trial. Right? Here there will be huge interest. Here you will have an emotional feeling that he is not paying interest. Don't worry, he is not paying interest, but he will pay huge penalty. Fraud case. He will pay huge. Right. Something is better than nothing. If time of supply was not given, forget about interest. Tax itself would not have been collected. If time of supply was not given, forget about interest. Tax itself would not have been collected. Are you guys clear with the understanding? So this is for your residual cases. And finally, for interest, don't worry, we have completed that discussion when we in valuation chapter itself. Just as a recall, you are making the payment late. I am your supplier, you are my recipient. Late payment, I am asking you interest. Is this interest on loans, deposits, or is this interest on delayed payment of consideration? Louder. Taxable or exempt? Though you are telling taxable, though I agree to this point, but it is neither taxable nor exempt. It depends on original supply. The main supply was having 5%, this will have 5%. Main supply at 18%, this will have. The main supply is having 28%, this will have. The main supply was having 0. So it is not a separate supply. It is addition to value. This is supply. Where have we discussed this point? Valuation chapter. Valuation chapter addition. It is not a separate supply. It is addition to value. It is addition to value of original supply. Right. So what is the time of supply? We already discussed that. When you are receiving that interest. The question might give this point as interest or late fees or penalty. Name is not relevant, whether it is called as interest or late fees or penalty for late payment of consideration. For late payment of consideration. Are you guys clear with this understanding? Now, in these three cases, whatever is given in the yellow color here, we have already discussed in your valuation. Whenever interest is added to your value, whether you add what is demanded or what is received. What is received. And whenever you receive that interest, whether the entire value will be added or you will do some special calculation. Come tax calculation. You will do come tax calculation, reverse working. Interest amount. In our example in the morning, we took 7,000 multiplied by 100 divided by 100 plus rate of tax. 100 plus. All other addition will be normally done. But this will be based on come tax calculation. Now, when you talk about your time of supply, there are totally 5 categories. We have already seen 3. What are the 3 categories we have seen? Voucher, residual, interest. Now we are seeing reverse charge mechanism. From now, in RCM and FCM, answer is separate for supply of goods and answer is separate for supply of services. For supply of goods, now you can easily correlate. How many goods categories you have seen where it is under RCM? Clear? So you are talking about whose point of view? When you are talking about RCM, you are evaluating things from whose point of view? Louder. It is from recipient's point of view. Right. So if you have that in clear, what is the time of supply? The question will give you when you have received the goods. It will not give you when the goods are supplied, because you are not talking about supply, you are talking about so goods would have been removed on 1st April, but it is received on 4th April. What date is relevant for you? Cut that. When you have received the goods or when you are making the payment in books or payment in bank, whichever is earlier. So if at all there are 2 separate dates, payment in books 4th April, payment in bank 6th April, which date you will take? Whichever is early. Payment in books or payment in bank, whichever is earlier.
or 31st day from the document of supplier. Supplier will give some document. That document may not be tax invoice because he is not paying GST. Some document, normal invoice. From that date, 31 days. From that date, so supposing the question has given you receipt of goods 4th April. The question has given you are making the payment on 6th April. The question has given you have received the invoice on 1st April, but don't take 1st April, add 31 days. It will be first day is always ignored. So April will have 29 days and 31 days will end on 2nd May. So what are the 3 dates that you will compare? 4th, 6th or 2nd May, whichever is finished. That's the answer. So the goods, it's over. What about services? Same thing, ma. Receipt of goods is possible. Receipt of services is difficult. When are you receiving coaching class services? Tomorrow? When are you receiving this crash course coaching class services? What day? It is not having any records. It is difficult. So technically speaking, it is on the last day. But that also you don't have a data. Coaching class, maybe you have a schedule and all. But that is also not reliable. You may have extra classes. Correct? So they understood that for services, it is difficult to focus on receipt of services. So they ignore that. So what is the next point? Payment in books or payment in bank, or 31 days is changed to 61 days from the document date of the supplier. Supposing payment is made on 6th April and invoice is received on 1st April, add 61 days. Yes, April will have 29, May 31 and June 1st, 61st day. So what will be the answer? 1st of June. So what are the 2 dates that you will compare? When you have made the payment, 61 days from the document date, whatever is document, normal invoice, commercial invoice, that date of supply 61 days, whichever is, in this case, 6th April. In this case, in the previous example, the answer was 4th April, whichever is. But in one category of service, one special case of service, which is importation of services from associated enterprise, which is given in section 92A of Income Tax Act, which is roughly nothing but related person. Roughly nothing but related person. In that case, what to do? In that case, when you are having transaction with related person, payment may not have been made, or invoice would not have been given. Even if you make the payment, it is between related person. Forget about invoice. So what they do, one thing is always common in all these RCM cases. It is payment in books or payment in bank. Then they doubt. When it is import of services between related person, invoice may not even come. So what they do? They take invoice, but there will be some entry, accounting entry passed by the recipient in his books of accounts. So entry, expenses entry in the books of accounts of the recipient, whichever is earlier. Please understand there are 2 things in books of accounts. One is payment entry. Payment entry is previous point. Payment in books or payment in bank. So bank statement payment date, books payment date, which was earlier. This books of accounts is not payment entry, it is expenses entry. You have recorded an expenses entry in books of accounts, whichever is earlier. Whichever is, supposing you have made the payment on 10th of October, but the expenses entry was recorded on 1st of April. Please understand, in this case, invoice also would have been given on, okay, I'll make it very clear. Invoice was given on 1st April, expenses entry is recorded on 10th April. Expenses entry is recorded on 10th April. So this is nothing but payment. This is nothing but invoice. This is nothing but recording expenses entry by the recipient. Now, if at all it was a normal case, what would have been your answer? No. In a normal case, your answer would have been payment date 10th October or 61 days from 1st April, which is 1st June, whichever is earlier. Correct? You would have gone with 1st June or 10th October, whichever is. But here, we are not focusing on invoice. They tell that forget about invoice. It may or may not be given. What is the expenses entry that you have recorded? You have recorded expenses entry on 10th April. So payment date or recording expenses entry in books of accounts 10th April, whichever is. Are you guys clear with this understanding? Right. Please understand how many RCM entries we have seen for your service sector. Technically speaking, there are 23 categories. You don't have one category for your syllabus. Importation is all taken care in your importation supply part is there, but importation RCM part is all taken care in your final level in detail. So 22 categories, out of which real estate sector 2 categories are there. So for you, we have important 20 categories. All the 20 categories come in normal case, and that 20 category includes importation of service also. Right? All the 20 in total 23 categories includes importation of service also. All the categories comes here. So it is payment in books, payment in banks, or 61 days from document of supplier, whichever is earlier. But only one case comes in special category. Which case? Importation of service, that too from what people will do mistake. If I say I'll just give you importation of service for RC. I'll not even tell anything else. And believe me, if this is not said, you'll always write answer with based on this. Payment in books or payment in bank or expenses entry date, whichever is. No, this is not the answer. If normal importation of service is given, it is normal answer. Date of payment in books or payment in bank or 61 days from the document date of supplier. Why? When normal importation of service is given, why are you assuming that it is between related person? If there is importation of service between unrelated person, it comes in normal category. It comes in. So what is covered by special category? Only one type of RCM, that is importation of services. That too it should be from associated enterprises. Out of 23 RCM services for RCM entries for services, 22 categories will always come here, general. 23rd category, importation of services will also come in general. Only if it is importation of service from associated enterprises, it will come in special. So 99% it will always be general answer. RCM for services, it will be general answer. Payment in books, payment in bank, 61 days from documented of supplier, whichever is. Only that 1% limited chance, and that too which service? Only importation of service. Condition, associated enterprise. Only then you are going to see payment in books or payment in bank or expenses, entry payment in books, whichever is earlier. Whichever is earlier. Clear? Clear? So, when you talk about your time of supply, how many categories are there? 5. Out of which how many categories we have completed? So, if you see your total list, entire list, 5 categories, 4 we have done. 1, your voucher, residual, interest. Whether for goods, whether for service, the answer is the same.
One RCM. For goods, separate answer. For service, separate answer. For goods, only one type of answer. For services, correct. And finally, what is left out is your time of supply in case of FCM. When you talk about time of supply in case of FCM, again answer is separate for goods and answer is separate for services. And one more important point. Unlike RCM, where you can get the answer in one step you will get an answer. For time of supply for FCM, where answer is separate for goods and answer is separate for, you cannot get one step answer. There are two step answer whether the question is asking you or not. The question might not ask, but you are required to first evaluate step 1, then evaluate step 2. Only then you will get a correct answer and only then you will get full marks. You cannot directly find out time of supply. So when you talk about your time of supply for FCM, first you need to evaluate your step 1, which is due date of invoice. Due date of given in section 31 of CGST. Due date of invoice. Then it is step 2, which is time of supply, which is given as per your section 12, section 13. Due date of invoice is given in section 31. Both for goods and services, it is same section, section 31. Are we clear with this understanding? You cannot find out direct answer. First due date of invoice, then time of supply. Goods are like sons and services are like daughters. The father will always have soft corner for daughters compared to sons. So that is a very basic understanding for entire GST for you to differentiate goods and services. First, you are looking at step 1. Step 1 is not time of supply. Step 1 is not, it is due date of invoice. So due date of invoice for goods. Due date of invoice for goods. Normal answer. If there is supply of goods and there is movement of goods, it is on or before removal of goods. No breathing time. Immediately. Before the goods are taken outside, raise the invoice. If there is supply of goods but there is no movement of goods. Supposing you are talking about a scenario where I have given you machinery on rent. Supply of goods or supply of service? Louder. Don't tell service. Supply of service. Supply of. After using it for 5 years, I sell you the machinery. Louder. Louder. Now there is supply of goods. Forget about supply of service. Now there is supply of. Whether there is any movement? No, you have the machinery. You have the. There is no movement. Then, on or before constructed delivery of goods, handing over the ownership. When I tell that, yes, you are the owner. Again, no breathing time. Immediately. Again, no breathing time. It is immediately. Clear? Clear? There is no breathing time. Immediately. Immediately you have to raise the invoice. Whether there is supply of goods with movement of goods before removal, supply of goods, no movement of goods at the time of giving ownership. Immediately. Service sector, what is the due date of invoice? Last day to raise the invoice. Normal case, it is 30 days. Banking sector and insurance sector. Banks, financial institution, non-banking financial company and insurance sector. So it is 45 days. After service is over, 30 days time to raise the invoice. Banking sector, insurance sector, after service is over, 45 days to raise the invoice. So there is no breathing time. Here there is breathing time. Right? And always to the general rule there will be an exception. Always there will be a exception to the general rule. Normally goods sector, whether there is any time for giving invoice, but one exception. Goods sent on approval basis. Goods sent on, you can raise the invoice at the time of actual supply, which means when the goods are accepted, or 6 months from the date of removal, whichever is, if at all no action is taken within 6 months, deemed to be supplied, invoice has to be raised. See, within 6 months, if it is accepted, give invoice. If it is not accepted, invoice was never given, it was all by delivery challan, again get it by delivery challan. If within 6 months it is neither accepted nor rejected, when the goods went, delivery challan. But when the 6 months is over, give deemed supply, because neither it is accepted nor it is rejected. Sir, after 6 months, you're telling that deemed supply, after 6 months it is actually accepted on 9th month. Don't do anything. Already you have raised the invoice. Why are you raising the invoice? You have already raised the invoice. Not a problem. But what if after 6 months, on completion of 9th month, it is rejected? So at the completion of 6 months, you raise the, now it is rejected, what to do? Credit note. Credit to nullify the effect of invoice, give a simple. Clear? So here do you have breathing time or no breathing time? Here you have breathing time. Here you have breathing time. Service law, normally there is no breathing time, correct? Sorry. Service law, normally there is breathing time, but in one case there is no breathing time. If the service is cancelled, ceasing to be there before completion, it is cancelled in between. Termination of service. Termination of cessation of service. The moment it is cancelled, raise invoice to the proportion of supply made. Supposing I was about to supply, my contract value was 10 lakhs, but service is cancelled in between and I have done work for 10%. What to do? The day it is cancelled, if today it is cancelled, today raise the invoice, but not for entire 10 lakhs, for 1 lakh, because 10% of 10 lakhs is simple. See how to look at it. It is actually very simple. Normally goods, no breathing time, immediately. But goods enter on accrual basis, actual supply of 6 months from the date of removal, whichever is, breathing time is there. Normally for services, breathing time 30 days or 45 days. But when you talk about termination of service, immediately, proportionate to the value, immediately. And for service sector, there is one more special point for breathing services. When you talk about banking sector, insurance sector, also telecommunication sector, and the supplies between distinct person, branch office, then you have breathing time, but more breathing time. So when you have to raise the invoice at the time of recording in your books or end of the calendar quarter. Here you understand that banks and insurance are already discussed. Why are we discussing again? There when you are discussing banks and insurance, it is banks insurance to the customers. Here it is bank insurance company to their branches. There was no telecommunication sector. Here it is, there is a. So what is the simplification of this? You take sectors, banks, insurance, telecommunication sector, other sector. To the customers, to the branches. To the customers, what is the due date of invoice? To the customers, what is the due date of invoice? Banks to customers. Banks to customers. Insurance company to customers. Louder. It is. But one branch to another branch of banks and insurance. Recording books or end of. Telecommunication tech sector to their customers. 30 days. To their branches. Recording in books or end of calendar quarter. Other sector to their customers, to their own branches. Simple. That's all about your due date of invoice. Due date of invoice. Are we guys clear with this understanding? This is your due date of invoice. Due date of invoice for goods 2 plus 1 for services, 2 plus 1 plus 1. For goods, 2 plus 1. For services, 2 plus 1 plus 1. But we are not over with step 1. There may be due date of invoice for continuous supply of goods and continuous supply of services. So totally for goods, how many due date of invoice are there? 3 plus continuous supply of goods. Services, 4 plus continuous supply of services. So what is continuous supply of goods and what is continuous supply of services? Same. Meaning of both is the same. That there is a lengthy supply which is happening. There is a lengthy supply which is happening. Lengthy supply. Continuously it is being supplied, or on recurrent basis it is being supplied. But invoice will be raised on periodical basis. Invoice will be raised on periodical basis. So continuous supply of goods is supply of goods where it is happening on continuous basis or recurrent basis, where invoice will be raised on periodical basis. Continuous supply of services where services given on continuous basis or recurrent basis, where the payment will be made on periodical basis. Same thing. The only difference is for services they have given one more condition, that the time period should be more than, for the goods time period can be more than 3 months or even less than 3 months. It can be more or less. I'll give you a very simple example for both together. Both together. If at all you are seeing any telecommunication towers being installed, right? It involves both continuous supply of goods and continuous supply of services. Someone is supplying the cables, fiber optic cables, correct? You guys may be supplying fiber optic cables, continuous supply of goods. You guys may be digging it and laying it. Underground digging you will be doing it, and again the ground will be leveled. You are doing continuous supply of where I am say Jio company. I will not want you to raise invoice every now. Today 100 meters of cables, tomorrow 1000 meters of cables, day after tomorrow 2000 meters of cable. Because I have agreed that I have to cover entire area of Coimbatore. So you will not be giving me invoice daily basis. So today 100 meters of cables, take this invoice. Tomorrow 1000 meters of cable, take this invoice. Then 2000 meters of cable, take this invoice. No. And same thing is with you. Today we have digged so much area and we have leveled so much area. No. There will be an agreement that every monthly basis you raise the invoice. You raise the invoice every quarterly basis. Some agreement. So what is the last date for invoice for continuous supply of goods? Let us talk about their category. Continuous supply of goods. It is earlier of issuance of successive statement. Issuance of successive statement. They will be giving statement. Supposing I have agreed with them that every month you give me a summary. Along with that, give me your invoice, successive statement. So day 1 of the month where you have supplied how many meters, day 2 where you have supplied how many meters, day 3 where you have supplied how many meters. You give me a successive statement, and along with that give me a invoice. Or receipt of successive payment. Supposing in 1 month, what is happening is they are in middle of the month, say 10th April. And they will give me statement on 1st May as per the contract. But they are in need of funds. And they have been supplying me continuously. So what they are doing? They are calling me and telling that please release 10 lakhs payment. We are in need of funds. Though we will be giving you invoice along with statement on May, but we want some advance payment. So did they give me any statement? No. But did I make them the payment? So that is the due date of invoice. So when they are getting the payment, though that payment is not final payment, but for that payment they have to raise invoice. They have to raise, supposing 1st of May, total value that comes in the statement is 50 lakhs. 50? Right. So how are they going to give me invoice? For 10 lakhs, they have to give me invoice on 10th of April because I made them advance payment. For balance 40 lakhs. Statement will contain 40 lakhs or 50 lakhs. Statement will contain 50 lakhs. But already they have raised invoice for 10 lakhs. So along with the statement, invoice will be for 50 lakhs. Normally, if the statement is of 50 lakhs, invoice will be of. But now what will happen? 10 lakhs, they've already raised the invoice. So along with the statement, the invoice will be only for. Clear? This I'll be using it somewhere. So please be very clear when we are discussing this. This IC plays a lot. Continuous supply of goods. Interesting area. Right? Continuous supply of services. It is not earlier and all. It is independent. Very independent. For them, it's very simple. Contract gives due date of payment. If the contract gives due date of payment, I have to raise the invoice as per due date of payment. Every quarterly basis, raise invoice on 7th after the end of the quarter. April, May, June, they have to raise invoice on 7th July. July, August, September, they have to raise invoice on 7th October. October, November, December, they have to raise invoice on contract tells. If the contract tells that if the payment is linked to completion of an event. So a contract tells that every 10% of the work they do, they can raise invoice pro rata basis. So 10% of the work is completed on 10th December. So they will give invoice for 10% of the contract on 10th December. Next 10% is over on 15th February. So next 10% invoice they will give it on 15th February. Next 10% is over on 31st of May. So next 10% invoice they will give it on. See, contract gives me a date either based on time or based on event. Either based on time or based on, I will follow the contract. I will follow the contract is silent. The contract is not giving any date, because new persons, whenever they are getting new works, they will not even talk about payment. Then they have to raise the invoice when they actually get the payment, raise the invoice. When they actually get the payment, why I am telling this is each one of them is independent. It is not whichever is earlier. Either contract will give a date based on time or date based on completion of an event or nothing. An answer is independent of each other. If the contract is selling every quarterly basis, after quarters over 7 days means April to June, 7th July, July to September, 7th October, so on. The contract is every 10% of the work done, raise the invoice, then and that, then whenever the 10% work is over, they have to raise the invoice. And if the contract is not even talking about payment, whenever they get the payment, on that day, they have to raise the invoice. Clear? Clear? So, what is the due date of invoice? Actually, this is part of your document chapter, an important area, therefore we have covered here itself. We did not even touch time of supply. What we have seen is only due date of invoice. For goods, how many due date of invoice is there? 3 plus continuous supply of goods, 1. For services, 4 plus continuous supply of services. Continuous supply of goods and continuous supply of services. 3 plus 1 for goods, 4 plus 1 for. Why we have to find due date of invoice for time of supply? Because everywhere, whatever case I take, my answer will be dependent on what? Invoice raised in time, invoice not raised in time. Invoice raised in time, one answer. Invoice not raised in time, another answer. Invoice raised in time, one answer. Invoice not raised in time, another answer. Invoice raised in time, one answer for service. Invoice not raised in time, another answer. Invoice raised in time, one answer. Invoice not raised in time, another answer. So, I have to first find what is my due date of invoice. I have to check it with my actual date of invoice. I have to find whether I raise invoice in time or I raise invoice after time. Because if I raise invoice in time, that is one answer. If I did not raise invoice in time, that is another answer. So what is my step 1? Due date. Whether the question is asking me or not, it is due date of invoice. Okay, I'll make your life simple. What is the time of supply for RCM? For goods, 1 category. I'm not into the answer. For services? For services, 2 categories. Right, normal and special. It is ulta for your FCM. For services, there's only 1 type of category. For goods, there are 2 types of category. For services, whether you are under regular scheme or you are under composition scheme, if you have raised the invoice in time, what is the answer?
I'm highlighting in pink shade. Actual date of invoice or date of receipt of payment in books or date of receipt of payment in bank, whichever is earlier. Whether I am under regular scheme or I am under composition scheme, answer is the same. If I have raised invoice in time, actual date of invoice or payment in books or payment in bank, whichever is. Are we discussing goods or services? Services. If I did not raise the invoice in time, then it is date of completion of services. It is not due date of invoice, because you will have due date of invoice as a first step answer. Don't make this mistake. You will find due date of invoice, but that is not the answer. Date of completion of service or date of receipt of payment in books or date of receipt of payment in bank, whichever is. See, for service, it is only one answer. No, sir, you are talking about two answers. No, it is actually one answer. Either it is this side answer or that side answer. Invoice in time, left hand side answer. Invoice not in time, there's only one answer. It is either or. Invoice time na, actual date of invoice, payment in books, payment in bank, whichever is earlier. Invoice not in time means date of provision of service, payment in books, payment in bank, whichever is. There is only one answer. There is only, though there are two sets, but answer is only one. Either it is left hand side or it is. It cannot be both. It cannot be whether you are a regular taxable person or a composition taxable person. But for goods, if you are under regular scheme, if you are a regular taxable person, if invoice is raised in time, it is actual date of invoice. If invoice is not raised in time, it is due date of invoice. There it was date of completion of service, but here it is due date of invoice. It is due date of invoice. Sir, what about payment? For goods under regular scheme, payment is not relevant. For goods under regular scheme, time of supply will never be dependent on payment. Inu simple as sonnona, today, April, I am supplying goods, I am under regular scheme. I am going to supply goods worth 1 crore. I receive advance payment of 70 lakhs. My supply happens in, say, December. And I raise the invoice in time. Before supplying, I raise the invoice. So 10th December I supply and I raise the invoice on 10th December itself. I raise the invoice in time. What is my time of supply? I received 70 lakhs today. 30 lakhs is received when supply happens in December. So April advance 70 lakhs. December supply happens and balance payment is received. April advance 70 lakhs. December supply happens and balance payment is received. What is the time of supply? Entire 1 crore. Time of supply is December. Payment is not relevant. Whether I received 70 lakhs advance or 30 lakhs, not relevant. Did I raise the invoice in time? Yes. I supplied in 10th December, I raised the invoice on 10th December. What is my time of supply? Actual date of invoice. What is my invoice date? 10 December. My invoice date 10 December will be of 1 crore. Correct? It is not of 70 and 30, it will be of entire. So my liability arises only in December. Though I have received payment in, part payment in April. I repeat, for goods, regular scheme, payment is not relevant. Advances will not be taxed. But for goods, composition scheme, if I were in composition scheme, then payment is relevant. If invoice is raised in time, it is actual date of invoice or payment in books or payment in bank, whichever is earlier. If invoice is not raised in time, for goods it is due date of invoice or payment in books or payment in bank, whichever is. Are you guys clear? So what is the difference that you see? For goods, there are two sets of answers. Regular scheme, one set of answer. Invoice in time, invoice not in time, they are two different situations, but one set of answer. For composition scheme,
one set of answer. For services, whether you are in regular scheme or answer is same. It is exactly ulta to RCM. In RCM for goods, 1. For services, 2. In FCM, for services it is only 1. Invoice in time, 1 answer. Invoice not in time, 1 answer. It's only 1. Either or, either left hand side or right hand side. But if it is goods, regular scheme, 1 set of answer. Invoice in time, actual date of invoice. Invoice not in time, due date of invoice. Composition scheme, another set of answer. Invoice in time, actual date of invoice, or payment in books or payment in bank, whichever is earlier. Invoice not in time, due date of invoice, payment in books or payment in bank, whichever is clear. So here there's a, and again repeat it. What is the net crux that we found? Whether advances will be taxed for goods and whether advances will be taxed for services. Whether advances will be taxed for goods and whether advances will be taxed for services. 70 lakhs, 30 lakhs. 70 lakhs, April, 30 lakhs, December. In April, this is advance payment, and in December, supply happens, invoices raised, and balance payment is received. I'm just differentiating. Balance payment is received. What if the question is for goods and what if the question is for services? For goods, it is only actual date of invoice or due date of invoice. We are assuming that invoice, see, even if invoice is not raised in time, the answer would be 10th December only. Why? You supplied in December, 10th December, but you raised invoice in 12th December. So what is the due date of invoice? 10th December. So answer is again December only. Correct? So here for goods, your time of supply will be December month for entire 1 crore. For services, whenever you get the payment in installment, whether it is FCM or RCM, you try to work out as 2 separate questions. 70 lakhs is a separate question, 30 lakhs is a separate question. 70 lakhs is a separate question, 30 lakhs is a separate question. For 70 lakhs, assuming supply happens in December and invoice is raised in December, supposing 10 December, right? So actual date of invoices, 10th December, and payment is say April, some date of April, say 2nd or 3rd of some date of April, whichever is earlier. So what will be the answer? April for 70 lakhs. What about balance 30 lakhs? Time of supply, again treat it as a separate question. So what is the actual date of invoice? Assuming that payment is received in the month of 31st, payment is received on 31st of December. Assume that balance 30 lakhs payment is received on 31st December. Whichever is. So what is the answer? So for balance, so goods and service differs, and we are assuming it is regular scheme, because this point is only relevant when you talk about your regular scheme. Whenever payment is received in installment, treat them as separate questions. If payment is received in 5 installment, treat it as 5 questions. If the payment is received in 2 installment, treat it as, and this is not only true for FCM, it is also true for, we are not talking about payment in books and payment in bank. Payment in books and payment in bank, it's always whichever is earlier. So it is not about payment in books and payment in, it is about installment. 70 lakhs separately, 30 lakhs. So treat them as separate questions. Treat them as, are you guys clear with this understanding? Clear? And I said something that ICAI has tried few times. Normally, we feel that for goods sector, regular scheme payment is not relevant. For goods sector, regular scheme payment is not correct. Correct. True, but there's an exception. Continuous supply of goods. Continuous supply of goods. I gave an example for continuous supply of goods, correct? Supposing total statement is of 50 lakhs and this supplier wanted an advance payment. Continuous supply of goods, the supplier wanted an advance payment on of 10 lakhs and he got the advance payment on 10th April and balance 40 lakhs he got it on May. So statement was given on 1st May. Though technically speaking, he should have raised invoice. What is the due date of invoice? We have discussed this already. What is the due date of invoice? Step 1. What is the due date of invoice? For 10 lakhs. What is the due date of invoice? 10th April. Because statement is not yet issued, but you have received the payment. Correct? What is the due date of invoice for balance 40 lakhs? 1st May, because statement is to be given on. So, for 10 lakhs, due date of invoice is 10th April, but for balance 40 lakhs, due date of invoice is. Okay, what is step number 2? Assume that invoice for entire 50 lakhs is given on 1st May itself. You had to give in 2 parts, but you gave it in 1 part itself. You had to give it 10 lakhs separately, 10th April and 40 lakhs separately, 1st May, but you did not do. You did not follow. You gave it on 1st May. Are we talking about goods or services? Goods. Did you give the invoice in time for 10 lakhs? Did you give the invoice in time for 10 lakhs? You did not give the invoice in time, therefore time of supply is due date of invoice, which is 10th April. You did not give the invoice in time. You should have given on 10th April, but you gave it on 1st May. You gave it for 40 lakhs as well as the advance payment 10 lakhs. So it is 10th April. Did you give the invoice in time for balance 40 lakhs? Yes. It is the actual date of invoice 1st May. Now, don't you think that indirectly for advance payment of 10 lakhs, time of supply becomes 10th April, which is nothing but payment date. And for 40 lakhs, time of supply becomes, which is nothing but actual invoice date. What is the point that I am trying to tell? See, time of supply even now, either it is actual date of invoice or due date of invoice. Payment is not there. Either it is actual date of invoice or, but due date of invoice depends on payment. But due date of invoice in case of continuous supply of goods depends on. I repeat, time of supply even now is either actual invoice in time, actual date of invoice 40 lakhs. Invoice is not in time, due date of invoice 10 lakhs. Same, it is either actual date or due date. Payment is not relevant for time of supply, but time of supply is dependent on due date of invoice is dependent on payment for continuous supply of goods. So, and the statement normally payment is not considered for goods sector, regular scheme. True, but for continuous supply of goods, indirectly it is considered. Indirectly it is considered. சரி இன்னும் simplify பண்ணட்டுமா? If this question was not for continuous supply of goods, for normal goods, what would have been your answer? If this question was not for continuous supply of goods and normal goods, you received advance on 10th April, but the supply was made on 1st May. What would have been your answer? What would have been your time of supply? Your time of supply would have been 1st May for entire 50 lakhs. For entire, though you have received 10 lakhs advance. Though you have received 10 lakhs. Clear? I say does make turns and twists. On the turns and twists, you have to understand and appreciate. Oh, for goods sector, regular scheme, payment is not relevant. True. But for continuous supply of goods, indirectly it will be relevant. Answer of time of supply is same. Invoice in time, action date of invoice. Invoice not in time, due date of invoice. Payment is not considered. But for due date of invoice, payment is relevant. Payment is relevant for continuous supply of. Though this has been asked only twice or maybe thrice. But when this question is asked, you should have already seen this. You could not evaluate directly this in the exam hall. Seeing the provisions, direct evaluation in exam hall is not possible. If you have seen this, then you can easily interlink it. Are you guys clear with this understanding? Are you guys clear with this understanding? That's everything about your time of supply. One small point with this is over. For which sector advance payment is relevant? Goods sector or service sector generally? Louder. So there is an exception for service sector. If the advance payment is only up to 1,000 rupees and it is received along with previous month billing. If the advance payment is only up to 1,000 rupees and it is received along with previous month invoice, then time of supply will not be advance payment, it will be next invoice date. It will be, which means they'll ignore the advance. But please understand two conditions. Petty advances up to 1,000. Second, along with previous invoice. Where there's a change problem. You go to Jio company, you make the payment of 1,000 plus 180. But you have 1,200. So you give 20 rupees advance. You did not give advance by choice. It was by chance, accidental. It was, in the case, let 20 rupees, ignore it. It will be taxed automatically in the next invoice. But if it is only advance, supposing you come to ICI and tell that I want to register for the classes. The classes may be in the next month, but you pay advance of 500 rupees. You pay advance of, and balance say 4,500 rupees you pay late. Then how many answers will be there? 2. 500 rupees. Separate time of supply, 4,500 rupees. Got that? Though it is an advance amount within 1,000 rupees, is this accidental or by choice? This is not accidental advance. This is not accidental advance. You wanted to register, therefore you paid 500 advance. So supposing you pay 500 rupees in April and classes there in May and balance 4,500 you pay in May. So what will be the answer? For 500 rupees answer will be April. For 4,500 answer will be May. Clear? So that you have to evaluate. Accidental advance, ignore it. Up to 1,000 rupees. Up to an accidental advance will not be more than 1,000 rupees. Will obviously be less than 1,000 rupees. Right? That's all and all about your time of supply. Though not very important, but it has been asked, and when it is asked, it is bonus question. The moment it is asked, you have to treat it as a bonus question. Right? I have said you one thing, what is true for FCM and RCM. Whenever payment is received in installment, treat it as separate questions. Treat it as separate questions. That is everything about your time of supply. Yes. Shall we start with the most important chapter of your GST? It is input tax credit. Input tax credit. So when you talk about your input tax credit, the main section which deals with conditions for taking the credit, section 16, read along with rule 36, 37 and 37A. Now, when you talk about conditions, you will find these conditions invariably there for taking the credit. A question of ITC will come when you talk about availment of credit. They will mix two things. One, they will check whether you are aware of conditions for taking credit. Second, they will check whether you are aware of block credit. Supposing they give 7-8 items, out of which 2 or 3 will be blocked. If they are blocked, you cannot take the credit. When you cannot take the credit, forget about conditions. For balance items, you have to see the conditions. Now, what is the first condition for you to take the credit? You should be a registered person. Only if you are registered, you can take the credit. If you are not registered, you cannot take the credit. Second condition for you to take the credit is the goods, that is input service capital goods that you are taking input tax credit on. On which items you are taking ITC, they should be used or intended to be used in course or furtherance of business. In simple language, business connection. It should be used or intended to be used in course or furtherance of business. So it should have a business connection. And third condition that you see is, you will get the credit in your electronic credit ledger just not by purchasing the goods or services. Only when you file your return under section 39. You can have crores of rupees of credit in your books of accounts. You would have purchased a lot of goods and services in a particular month. But if you don't file your return, you don't have the credit in your electronic credit ledger. Only when you file your return, you will get that credit in your electronic credit ledger. So you should have filed your returns under section 39. The main return which is spoken about here is GSTR 3B. GSTR 3B, at times it can be GSTR 5 as well for non-resident taxable person to a greater, small, very small extent importance is there, but mainly it is GSTR 3B. Right. Now, condition number 4 is, you should have received the document. You should have received the document. If you want the credit, please get the document. Now, what is the document on which basis you can take the credit? It is generally tax invoice of the supplier or debit note of the supplier. Supplementary invoice. If there is an increase in value or tax, it is debit note. So normally it is tax invoice or debit note. Rarely it could be a case where you are talking about your ISD document, head office giving credit to the branch office of common input services, input service substituted document, ISD document, which is a very rare phenomenon. Self invoice in case of RCM. If at all it is RCM case, we'll see in document chapter that there can be self invoice. Self invoice means you will raise your invoice for taking the credit. Supplier is unregistered plus it is RCM case, you have to raise tax invoice. Supplier is unregistered plus RCM. So it is not only RCM, it should be RCM and supplier is unregistered. You have to raise self invoice. Again, a rare case will be there. And for import of goods, the document is not tax invoice, you will be filing bill of entry. You will be filing bill of entry for home consumption for import of goods. Import of goods will have basic customs duty plus social welfare surcharge plus IGST. You cannot take the credit of BCD and SWS. That is added to your cost. You can take the credit of IGST part of customs duty, for which the document will be bill of entry. Bill of entry. Please understand, main documents is tax invoice, debit note. Special document is ISD invoice, self invoice in case of RCM where supplier is unregistered, or bill of entry in case of import of goods. So these are rare documents. These are, now understand that as a supplier, you may be required to put a lot of contents on the tax invoice or debit. But as a recipient, I need not be worried. So ICA will try to confuse you by telling that there is an invoice that you have received, but signature is not there. Can you take the credit? Yes. There is an invoice that you have received, but quantity is not mentioned. Can you take the credit? There is an invoice that is received, but HSN is not mentioned. Can you take the credit? Emotionally, answer no, both the answers are coming. Correct. Recipient need not worry about all these details. Recipient should only check five important elements. GST number of supplier, GST number of recipient. If at all, throughout this chapter, I will be the recipient. Input tax credit is the entire chapter from the angle of recipient. ITC, input, means receipt. Alright. So your GST number, supplier, and my GST number. If I want to take the credit. Description. What is the goods or services? HSN may not be there. Description should be there. Value, tax, and place of supply, if at all it is interstate supply. So what all points I said? Signature not there. No worry, I can take the credit. Quantity not there. No worry, I can take the credit. HSN not there. No worry, I can still take the credit. Clear? So what are the four conditions that you see? Registered, business, return, document. Fifth is receipt of goods and service. I should have received the goods, I should have received the services. Supposing I get the invoice on 30th April, but I get the goods on 2nd May. When I can take the credit? April return or May return? I get the invoice on 30th April. These are the questions asked by ICAI. The question is for April month. Question is for April month. You get the invoice on 30th April, but the goods are received on 2nd May. Can you take the credit in April return or May return? May return. I should have satisfied everything. So when I am calculating ITC for the month of April, answer will be 0. I can take the credit only in the clear? I should have received the goods and I should have received the services. There's a good news and there's a bad news. Good news. If at all, there's a case of bill to ship to. Supposing I'm purchasing the goods from you. You have billed to me, but ship to my job worker or ship to my customer. I have asked you to ship to someone else. Who can take the credit? I can take the credit or my customer or job worker can take the credit? Only I can take the credit. Because I'll be the recipient. But did I receive the goods or services? No. Receipt of goods or receipt of services by third person is equal to receipt of goods or services by me. When you have sent the goods to my job worker or my customer or whomsoever you have sent the goods, it is only I have directed you to send the goods. Correct. I said you bill it to me but send it to so and so address. So when it is being received by that address, it is equal to I have received it. It is equal to I can take the credit. I can take the credit. Though physically I have not received it, but it is deemed to be received. This is good news. Bad news. Bad news is for goods sector. If at all I am receiving the goods in installment, it is not applicable for services. If I am receiving the goods in installment, the moment I receive the goods in installment, but it is against a single invoice. Supposing a big plant and machinery is received, I am getting in lots. April month first lot, May month second, third, fourth. Finally, I am getting the last lot in December. Invoice is raised in April itself. Look at the irony. We have completed time of supply. Time of supply, GST by supply should be paid entirely in April. Actual date of invoice or due date of invoice. So supposing the machinery is worth 100 crores. GST on entire 100 crores should be paid by the supplier in April return. But I cannot take the credit in April. I can take the credit only when I receive the last lot or last installment. So government gets output tax from supplier right in the month of April, but recipient can take the credit from government only in the month of December. Last lot or installment. Clear? So these are repeated questions asked by ICAI. So if at all, the question is from the angle of April month. If in April month you are getting the first lot or the second lot or the third lot, you cannot take the credit. If in April month you are getting the last lot, the first lot could have been in Jan. If in April month you are getting the last lot. So in April month, whether you will write the credit? Yes. Look at the question carefully. First you decide that this question is for April month. Then you see whether in April month it is the first or second or third lot or it is the last lot. If it is first, second, etc., you cannot take the credit. If it is the last lot, though it would have been, invoice would have been given earlier, but you can take the credit. That is condition number 5. Condition number 6. If you're purchasing the capital goods including plant and machinery, you claim depreciation, no problem. But you should not claim depreciation on GST portion. Supposing plant and machinery is 1 crore. GST is 18 lakhs. They don't have any problem in you claiming depreciation on 1 crore. On 18 lakhs, only on the GST portion. On 18 lakhs, if you are claiming depreciation on the tax component, then you cannot take the credit. They are not telling you don't take depreciation. You claim depreciation, but only on 1 crore. If on GST portion also you are taking depreciation, you yourself are treated as a cost. You yourself has called it as a cost. Now your cost is not 1 crore, you have called the cost as 1 crore 18 lakhs and you are claiming depreciation on 1 crore, then you cannot take the credit. But if you want to take the credit of 18 lakhs, what to do? You take credit of 18 lakhs, but claim depreciation only on. Don't claim on 18 lakhs. Don't claim on. Please don't mistake that you cannot claim. You can claim depreciation on price. The question is only about the tax. Question is only about the tax. No depreciation on tax portion. And if at all you are talking about fraud case, if supplier has paid output tax due to fraud, and this has been found by the officer and officer has given order under section 74, fraud case, fraud, willful misstatement or misrepresentation of facts. So either fraud, willful misstatement or suppression of facts. Supposing you guys are the supplier, you did some fraud, you did not pay the tax. Now officer has caught you and made you pay the tax with interest and penalty. Interest and penalty is your cost. Now can you pass that tax as credit to me? No. You will tell that okay, we both are known persons only. See, I am paying output tax. I will give you the debit note. You take credit. So at least that understanding we can have. I'll give you a debit note. I'll pay output tax. You pay me that amount. Why? Because you can take the credit. So we can have an understanding. Metals, no. If at all normally you are doing so, we are fine. Supposing you paid 5%, the real rate was 18, and you paid 5% by mistake. Later on, you realize that it is 18. Without proper officer catching hold of you, you realize and you gave me debit note of differential 13% tax. You can pay tax and I can take the credit because it is not a fraud case found by the officer. Clear? So what are they trying to tell? That if supplier is paying extra output tax later on, that too not voluntarily, but after officer has caught under section 74, which is fraud, then that output tax cannot be passed as input tax credit to the recipient. Otherwise, government is, we have worked so hard, we have found that person doing fraud and he is now paying tax, interest and penalty. Interest and penalty will be a cost, but he is trying to pass on the benefit of tax. No, not allowed. Not allowed. So tax paid on fraud, no credit. Tax paid under fraud, no credit. So that is condition number 7. Condition number 8, time limit. So that's a time limit for you to take the credit. And by the way, this time limit is there in 3 chapters. ITC chapter, time limit, credit note chapter, that is document chapter, same time limit, and one more return filing chapter, rectification in return, same time limit, same. 3 chapters, same time limit. For sure, you will be having one question based on this time limit. ITC time limit, credit note time limit, and rectification of return time limit. What is the last date for you to take the credit? What is the last date for you to raise the credit note? What is the last date for you to rectify the mistake in your return? Same time limit. What is the last date? 30th November of next financial year or actual date of filing of annual return of that financial year, whichever is earlier. So if you are talking about financial year 24-25, if you are talking about financial year 24-25, so it is 30th November 2025, or supposing you are filing annual return for 24-25 on say 12th December 2025. Generally annual return due date is December of next year. So last date is 31st December and you are filing on 12th December. So when you can take the last, what is the last date for you to take the credit? 30th November. And please understand, it is the last date for you to take the credit, whether it is of April 24 invoice or March 25 invoice. You might have missed the credit of April 24 invoice, first month of the financial year, or March 25 invoice, last month of the financial year. Last date is the same. Last date is the, and when I tell 30th November of next financial year, it is, what is my last return in which I can take the credit? It is not November return. No, it is not September return. It is October 2025 return filed on or before 30th November. See, what is the last date that you get from this example? 30th November of 2025. We have assumed that annual return is filed on 12th December 2025, whichever is earlier, 30th November. So, what is the last return in which you can take the credit? Or you have to raise the credit note, or you can rectify your mistakes in return? October return filed on or before 30th November. It is not November return. So people get this wrong. I can know. It is last date. You have to correct before this date in your portal. When you want to correct in your portal, when you want to take the credit on your portal, you should have filed return. And November return, you cannot file on 30th November. November return will open only in December. Are you guys clear with this understanding? What is the last date for taking the credit? What is the last date for raising the credit note? What is the last date for rectification of return? It is all 30th November. Ignoring that actual date of annual return, for the time being, ignore it because generally it is filed only in December. People wait and file. Example வேற மாதிரி கொடுக்கலாம். That you file your annual return on 30th of, say 30th of September. So the last date would be 30th September and all. Example வேற மாதிரி கொடுக்கலாம். Practically everyone will file annual return in only December. They'll wait. They understand this provision. They will wait. But what is the last return for this example? For credit, for input tax credit, for credit note and for rectification of return. October return. You can rectify in April return of next financial year, May return of next financial year, June, July, August, September, or October return of next financial year. Any of these returns, but filed on or before 30th November. It should have been corrected. It should have been filed. So it should have been there on portal. Got that? So this is this understanding. And second important point that is always tested here. Supposing invoice is raised in 22-23. Invoice is raised in financial year 22-23. Debit note is raised in 24-25. What is the last date for taking the credit on that debit note? Invoice 22-23. Debit note, there is no time limit for debit note. Invoice is raised in 22-23. Debit note is raised in 24-25. Whether your last date will be dependent on 22-23 or 24-25. You are taking the credit on invoice or debit note. If it is on invoice, it depends on financial year 22-23, that is 30th November of 2023, etc., etc. Correct. But I am asking about what is the last date for you to take the credit on of tax on debit note. What is the last date for you to take the input tax credit on the tax portion on your debit note? Which is, will it be based on financial year 22-23 or 24-25? When is debit note received? Debit note is nothing but supplementary invoice. When is debit note received? So last date for taking the credit on debit note will be based on 24-25, which is 30th November of 2025, or actual date of annual return of financial year 24-25, whichever is. It will not be based on financial year 22-23. It will not be based on financial year. Clear? That is the time limit for taking the credit. And please understand that there is no time limit for re-availing the credit. Time limit is only for taking the credit first time. You take the credit, reverse the credit, again re-avail the credit. There is no time limit for re-availing. I take the credit, I violate something, I reverse the credit, and then I satisfy something, I re-avail the credit. There is no time limit for re-availing the credit. We will be seeing that 180 days criteria and all. So again, we will be seeing this point. There is no time limit for re-availing the credit. Time limit is only for availment, not for. And if at all there's a case where your registration is cancelled and again it is revoked. You died and you're reborn, just like movies. You're dead, but you're reborn. Revocation of cancellation. In that case, time limit is normal time limit that we have discussed. Normal time limit that we have discussed. 30th number of next financial year, or actual date of annual return of annual return of that financial year, whichever is earlier, whichever is that with first return filed within 30 days of revocation order, whichever is later. See, first point la whichever is earlier, adu or answer எடுத்துக்கோங்க. Then at times revocation will be there after say 1 year, 1.5 years. You are reborn after that. அந்த டைம் லிமிட் முடிஞ்சிருக்கும். ஆனா இப்போ கிரெடிட் எடுக்கலாமா? ஆமா, இப்போ கூட எடுக்கலாம். Compare that with your when you are reborn again you will be filing first return. For a group of months together you will be filing first return. You can take the missed out credit in your, but condition is you file your first return within 30 days of reborn. You file your first return within 30 days of your rebirth. File it soon. File it soon. The moment you are reborn, make sure that you file your first return within your 30 days of rebirth. 30 days of rebirth. Then you can take the missed credit. So normal time limit, which is 30th November of next financial year, or actual date of annual return of that financial year, which that time limit would have gone. Don't worry. When you are reborn, and the time limit மறந்துக்கோங்க. உங்களுக்கு எக்ஸ்ட்ரா டைம் இருக்கு. என்ன எக்ஸ்ட்ரா டைம்? 30 days from revocation order, and you should take the credit only in your first return. That two conditions. First return la நீங்க credit எடுக்கலாம் when you are reborn, but that first return should be filed within 30 days of revocation order. 30 days of revocation order. Clear? Clear? So this is your time limit. So how many conditions we have seen? 8. When you look at the conditions, you'll find that first was registered, then business, then return, document, goods services, depreciation, fraud, time limit. Now it is your non-payment. It is your, rather, I will first take your 10th condition. Then I'll take 9th and 11th condition. 10th condition is a very simple condition. I can take the credit only if that invoice appears in my supplier will file GSTR1 or IFF, Italy or mini Italy, GSTR1 or IFF, and recipient will get that information in his GSTR2A, 2B. 2A is dynamic, will keep changing, 2B is static. So for taking the credit, what is relevant? GSTR2A or GSTR2B? 2B. You are my two suppliers. You file your GSTR1 on time. We are talking about April month. I'll get in my April month 2B itself. You file your GSTR1 late, after 2 days of due date. I'll not get in my GSTR2B of April. I'll get in my GSTR2B of May. So I can take the credit only in. But both your invoices will appear in GSTR2A of April. 2A will keep changing. So first it will show only this invoice. After a few days when you file, it will show second invoice. So credit is taken on the basis of 2B. 2B. Right. So I can take the credit only based on my 2B. Only on the basis of my 2B. Right. Also understand that for certain cases 2B is not relevant, which means even if that invoice is not appearing in my 2B, I can take the credit. It is an exception. What are the cases for which 2B is not relevant? If at all you are talking about RCM and supplier is unregistered, whether or not it comes in my 2B, I'll pay by cash, get in credit. I'll pay by cash, get in credit. So 2B, whether it is coming or not, forget about it. Then import of goods. Again, I'll pay import duty, BCD, SWS and IGST. I cannot take the credit of BCD, SWS, but I'll take the credit of. See, if you see these both the points, I am paying the tax, I am taking the credit. So 2B is not relevant. Then you are talking about invoices of ISD. Invoices of, we are not talking about head office, we are not talking about ISD. We are talking about branches receiving the invoice of ISD. Branches receiving the invoice of, whether or not it comes in my 2B, I can take the credit. Invoices of NRTP. We are not talking about NRTP. Rather, NRTP cannot take the credit except for IGST portion of import duty. We are not talking about NRTP. We are talking about customer of NRTP. You are NRTP. and I have not received in my 2B, even then I can take the credit. So we are not talking about NRTP credit. I am talking about credit for the customer of NRTP. Credit for the. So what are the 4 cases in which 2B is not relevant? RCM if supplier is unregistered, import of goods IGST, invoices of ISD, invoices of NRTP. We are not talking about ISD, we are not talking about NRTP, we are talking about customer of ISD and NRTP. These cases, even if it is not received in 2B, I can take the input tax credit. I can take the input tax credit. So ICA has tested a lot of times about 2B. I have purchased 5 items in April, but only 3 items have come in 2B of April. I can take the credit only on balance 2. I can take the credit, but not now. It will be postponed. It will be clear. So that is your 2B. So that's the 9th condition. Though it is written as 10, but we have discussed that the 9th condition. Now, what are the last 2 conditions? These last 2 conditions are not about availment. They are about reversal and reavailment. And this ICA time and again has asked, and time and again students have confused this. Time and again students have confused this. It is not about you taking the credit, it is about reversal and reavailment. Now what is this condition? If I don't make the payment of consideration to my supplier, consideration with tax, if I don't pay to my supplier, what I have to pay my supplier? Price plus tax. I am the recipient, so I have to pay you price plus tax. Correct? I have to pay you price because you have charged something, plus tax because you have paid tax to the government. I have to pay you price plus tax within 180 days. Please understand, the moment I get your invoice, I'll take the credit. I will see all the other conditions, I'll take the credit. If I make you the payment of price plus tax within 180 days, no worries. If I don't pay you price plus tax within 180 days, then to the extent of non-payment, pro rata basis, proportionately, I will reverse the credit with interest. Interest calculation is there in payment chapter. I will reverse the credit with interest. If I make the payment to you, price plus GST, within 180 days, I've already taken the credit, nothing will happen. If I don't make you the payment of price plus GST within 180 days, I have to reverse the credit with interest. Reverse the credit with interest and report in my next GSTR 3B. And the moment I make the payment to you, supposing I made the payment after 2 years, after 2-3 years, I can re-avail the credit. But interest paid will be cost. I cannot re-avail the interest. Step 1, I got your invoice, I took the credit. Step 2, I did not make the payment in 180 days, I reversed the credit with interest. I took 100 rupees, I repaid 100 plus interest. Step 3, I paid the supplier price plus tax after 2-3 years. Can I re-avail the credit? Yes, but I can re-avail only 100 rupees, not interest. And there's no time limit for re-availment. Time limit is only for availment, time limit is not for re-availment. And this entire concept or this entire condition is not applicable for RCM case. Why it is not applicable for RCM case? Because supplier is not paying tax. I pay the tax, I take the credit. I will pay by cash, I will get it in my credit ledger. So whether I make the payment of price to the supplier or not is not relevant. Government is not bothered. It is not applicable for RCM. It is not applicable for Schedule 1 cases because there is no consideration. It is not applicable for payment made by recipient to third party on behalf of supplier. Recall that in valuation chapter. I have to pay you 1 lakh, but I paid 10,000 to third party on behalf of you. I paid 10,000 to third party on behalf of you. What is assessable value? 90,000 plus. So you will charge GST on. Understand, to the extent of GST on 10,000, I will never be bothered because I have already made the payment. So this provision is not applicable. But to the extent of GST on 90,000, 180 days is relevant. GST is on 1 lakh or 90,000? Correct. So GST on 1 lakh, supposing 5% is the rate of tax, what is GST on 1 lakh? And if I split this GST of 5,000 into 2 on 10,000, 500 rupees on 90,000, to the extent of 500 rupees credit, I'm not bothered because I've already made the payment to third party on behalf of supplier. But to the extent of GST of 4,500, I have to make you the payment. I have to make you the payment. If I don't make you the payment within 180 days, I have to reverse the credit to the extent of 4,500. I should not worry about total credit. How much I have taken? 5,000. But I will not be worrying about, because I have already made him the payment. I have already made him the payment of 10,000. Clear? So logical points. Quite logical points. So this is payment by recipient to supplier of price plus tax in 180 days. I repeat, this is payment by recipient to supplier of price plus GST in why I am writing this? Because the last conditions will be a kind of similar. But last condition is what? The last condition is payment by supplier to government of only GST. Payment by supplier to government of only GST, and that should be within 30th of November of next financial year. What was this? Payment by recipient to supplier of price plus GST in 180 days. If recipient is not making the payment to the supplier of price plus GST within 180 days, I have to reverse it, then I can reavail it, etc., etc., etc. But here, recipient has taken the credit. If supplier tomorrow does not make the payment of GST to the government within 30th November of next financial year, recipient should reverse the credit. Recipient should. So, again, same way, the moment I get the invoice from you, you are my supplier, I am your recipient. I get the invoice from you, I will take the credit. I will not worry whether you have made the payment to the government or not. So, there are questions where ICAI asked, 7 or 6 invoices will be there. One of the invoice they will write in bracket, supplier has not made the payment of GST to the government. What is your emotional feeling? Can you take the credit or cannot take the credit? Out of 6 invoices, in one invoice, a note is written by ICAI in bracket, supplier has not paid GST to government. You purchased 6 items in April. One item it is mentioned, supplier has not paid GST to government. Can you take the credit or you cannot take the credit on that item? You can take the credit. You can take the credit. If supplier has not made the payment, I need not check now. I have to check till 30th November of. If supplier is not making the payment till 30th November of next financial year, till 30th November of. So, the moment I get the invoice, I will take the credit. If he has not made the payment till 30th November of next financial year, then I will reverse the credit with interest. And later on, I contact the supplier, see, you have not made the payment, please make the payment, I have reverse ITC with interest, I'll deduct amount from you. Then supplier after 2-3 years makes the payment of tax. Can the recipient reavail the credit? Yes, reavail the credit, but interest paid cannot be claimed back and there's no time limit for. Simple. People mix both. See, for both the cases, it is recipient who is going to reverse the credit and reavailment. Why are we discussing these two conditions in the end? These two conditions of 180 days or 30th November of next financial year is not for taking the credit. The moment I get the invoice, I'll take the credit. Whether as a recipient I have paid the price plus GST to the supplier within 180 days, I'll not be worried about that. I have to check later. I'll take the credit. Whether my supplier has paid the tax to the government, I'm not worried. I'll take the credit now. Later on, if they don't, the condition doesn't happen, I'll reverse with interest. And when the condition is finally happening, I will reavail it. But interest will be cost. And there's no time limit for reavailment. There's no time limit for. Out of 11 conditions, 9 conditions are for me to take the credit. So condition number 9 and 11 here, question will try to confuse you. Don't get confused. Ignore them. Ignore them. You can still take the credit because these conditions are for not availment. It is for reversal, and condition number 9 and 11 are not for availment of credit. It is for retaining the credit, for reversing and re-availing later. Balance conditions, apart from 9 and 11, all the other conditions are for availing the credit. Correct. And secondly, please understand all these conditions are applicable for both FCM as well as RCM. But there are 3 conditions which are not applicable for RCM. The last 3 conditions. 180 days condition, not applicable for RCM. 2B condition, not applicable for RCM. Supplier making the payment of tax to government within 30th November next financial, not applicable. RCM supplier will not pay tax. RCM will pay tax. Not applicable for RCM. So these 3 conditions, condition number, last 3 conditions, 9, 10 and 11 are applicable only for FCM, not applicable for RCM. So you have to be very clear with these 2 important aspects. Out of 11 conditions, what are the conditions which are required for you to take the credit? All conditions except 9 and 11. 9 and 11 is not for availing, it is for reversal and re-availment. Out of all the 11 conditions, how many conditions are applicable for FCM? All. How many conditions are not applicable for RCM? Last 3 conditions, 180 days, 2B and supplier paying the tax within 30th November of next financial. They are not applicable for RCM. And the last point is only eye-opening point. Please understand that most of the things I can balance myself. For few things I am dependent on the supplier. For 2B condition and supplier paying GST within 30th November of next financial year, it is not in my control. It is not in my, I have to call supplier. Please file your GST-R1, please file your IFF. Only then I will get the credit in 2B. So I am depending on supplier. Please pay your taxes. Now I am taking the credit, but tomorrow if you don't pay your taxes, I have to reverse it. I am dependent on the supplier. So this is only an extra fitting to make you understand the concept of credit. So these are all the conditions for you to take the credit. Right. So mind you, 180 days and supplier paying GST to the government within 30th November of next financial year is not for availing the credit. You can avail without checking those conditions. It is for reversal and re-availment. It is for reversal and talking about your block credit. This is also part of availment. So out of say 6-7 points that is asked in the question, maybe 2-3 points will be block credit. Please understand, if these 2-3 points are there in block credit, do not evaluate the conditions. Whether it is coming in 2B or not, forget about it. Whether invoice is proper or not, forget about it. Anyways, you cannot take the credit. Anyways, you cannot take the, forget about it. It is permanent reversal. Permanent reversal. So don't worry about it. Don't even worry about it. Now, what are the block credits? Block credits, the first category of block credit is dependent on your motor vehicles, vessels and aircrafts. Motor vehicles, vessels and aircrafts. The motor vehicles can be categorized into 2-3 parts. Motor vehicles for designed for transportation of goods, motor vehicles for special purpose, and motor vehicles which is for transportation of passengers. Now, when you talk about motor vehicles for transportation of goods or special purpose motor vehicles like your dumpers, tippers, they are only for certain special purpose. They are not for transportation of goods, they are not for transportation of passengers. If at all you are talking about motor vehicles for transportation of goods and motor vehicle for special purposes, always they will be used only for business. Take the credit. Take the credit. But motor vehicle for passengers, you will have a doubt. It may be used for business, it may be used for personal. Now split it. If motor vehicles is there for passengers and the seating capacity is more than or equal to 14, can you have a bus and use it for your personal purposes? Let's enjoy. Let's go for a party. Can you have that? No. No. You don't tell, no, sir, I have a friend who's having a joint family and they do that. That's an exception. Forget about it. But you don't have that in general. So can you take the credit? Yes. Where is the problem? Motor vehicle for passenger seating capacity is less than or equal to 13. You may use it for business. You may use it for personal. Government cannot find it out. So what they tell? We will not give you credit. Normally, we will not allow you to give the credit. Whether it is car for managing director or car only for business purposes, there are a lot of CA officers who will have 1 or 2 vehicles which is used only for your office purposes. Correct? But you cannot take the credit. You cannot take the credit. You don't tell that, see, I'm using it only for business. No. You cannot take the credit. They cannot find it out actually. But they give exception. Though it is a motor vehicle used for passenger where the seating capacity is less than or equal to, they give the credit. I'll give 3 examples. So if you can take Metupalayam Road or Avinashi Road. Automobile showrooms are there. Can you go to an automobile showroom owner and tell that you cannot take the credit because it is motor vehicle used for passenger less than or equal to 13? He'll give you left and right. He'll tell that this is my main item. You're telling I cannot take the credit on this. Without this, I cannot do my business. So if it is for further supply of such motor vehicle, it can take the credit. It can take the credit. Or if you're talking about, say, red taxi owner. Red taxi owner is having hundreds and hundreds of cars. Rather now it is, he has expanded into Chennai also with thousands of cars. Can you call red taxi owner and tell, sir, motor vehicle for passengers less than or equal to 13? You cannot take the credit. He'll block you. You cannot never use red taxi app ever. It is main, his business. Without red taxi cars, he cannot do business. So can he take the credit? Yes, transportation of passengers. Passengers. Not employees. Transportation of passengers. Now, there are a lot of driving schools. Say Chamundi driving school, Shanti driving school, etc. etc. Correct? Supposing you are going for 4-wheeler driving school and you are telling that particular person who is teaching you, you have tens of cars, but it is for passengers less than equal to 13 seating capacity. You cannot take the credit. They'll throw you out, kick you out. Can they take the credit for doing their business? They should have the. So if at all you're talking about training or imparting training on driving of such motor vehicles, they can take the credit. So 3 sectors, though it is for passenger, motor vehicles, seating capacity less than equal to 13, but they can take the credit. Further supply, transportation of passengers and training. And when you talk about further supply of such motor vehicle, they have explained in by way of circular that even on demo motor vehicles you can take the credit. Such motor vehicle does not mean that motor vehicle. Such motor vehicle means that type of motor vehicle. So it has explained that even every automobile showroom will have a demo vehicle. Can they take the credit on demo vehicle? Yes. Because seeing the demo vehicle, they will purchase that such motor vehicle. Such does not mean that. Such means similar types of motor vehicles. So they can take the credit even on demo motor vehicle. Clear? Clear? The moment you know the answer for your motor vehicles, you actually know the answer for your vessels and aircrafts. Excellent. In 5-star hotels, they'll have chauffeur, luxury. They'll be booking the cars for you. Right? Normally, if they're not charging anything, you cannot take the credit. Though it is used only for business purposes, they cannot take the credit. But if they are charging you, right, they can be covered by transportation of passengers. Normally, they don't charge. For pickup and drop, they do it as a part of activity to attract more and more customers. Rather, we'll be seeing a lot of points where technically you will feel you should get the credit, but you don't get the credit. Right? We'll be seeing about construction factory construction, whether it is for personal use or business use, you cannot take the credit. So don't go emotionally that no, it is only for business and all. See, they have introduced block credit only to tell you that even if there is 100% business connection, we are not ready to give the credit. We will not give you the input tax credit. Now coming back here, vessels and aircrafts. Same logic. What is the only thing that you don't have? The only thing that you don't have is that categorization of 14 or less than 14. And the categorization illa. If they are used for transporting the goods, they'll get the entire credit. If they are used for three business sectors, further supply, transportation of passengers, training, they'll again get full credit. Otherwise, if they are not covered by above, example, Mukesh Ambani, Reliance Limited purchasing helicopter for Mukesh Ambani, managing director. Can Reliance Limited take the credit? Though that helicopter is used only for business purposes, you cannot take the credit. Rajamouli Director Rajamouli is purchasing an aircraft for transportation of its crew members because he shoots his movies in a very distant location, remote location la shoot panvaga. Now that purchase of aircraft by SSR Rajamouli, is it for his personal use? But can he take the credit? Is he covered by any of these points? Is it for goods? No. Is it for further supply? No. Transportation of passengers? No. Crew members are not passengers. Crew members are not passengers. Is it for training? No credit. No credit. You cannot take the credit. Clear? Now, once you understand the logic for motor vehicles, vessels and aircrafts, now we are talking about related services. We are talking about related. See, please understand whether you purchase the motor vehicle, you have two options, either purchase or rent. So this was all about purchase option. This was all about. Now we are talking about renting option, renting, leasing, hiring. Renting, leasing. I could have purchased my motor vehicle, vessel, aircraft. Now I'm going for renting, leasing, hiring. If at all I would have purchased and credit is allowed, even if I take that motor vehicle on rent, credit is allowed. Credit is allowed. I'll give a very simple example. If I purchase a bus more than or equal to 14 seating capacity, can I take the credit? If I take the same bus on rent, yes. If I purchase a car, credit not allowed. If I take the same car on rent, not allowed. Not allowed. You got that? You got that? So, if I purchase something and credit was allowed, if I take the same thing on renting, hiring, leasing, credit is allowed. If I purchase something, credit was not allowed. If I take that same item on renting, leasing, hiring, credit is, but only one exception. If I purchase something and credit is not allowed, there's one chance that I can take it on renting. If it is obligation, if it is obligatory, statutory obligation. I'll give an example. I purchase car. Is credit allowed? Is credit allowed? Louder. I take the same car on rent. Not allowed. But if I take the same car on rent because of statutory obligation, supposing we are in the state of Delhi, and Delhi requires all the companies to take care of night transportation of their women employees. If I would have purchased 10 cars, I would not have got the credit. But if I take 10 cars for my night transportation of employees, because it is a statutory, can I take the credit? Can I take the credit? Sir, you explain the same example again with Tamil Nadu. Okay, I purchased 10 cars in Tamil Nadu. Can I take the credit? A company purchased 10 cars for its employees. Can I take the credit? No. The same company in Tamil Nadu does not purchase 10 cars, but take 10 cars on hire for its transportation of employees. But there's no obligation by Tamil Nadu government. There's no mandatory by it's not mandatory by Tamil Nadu government. What will happen? Whether purchase or hire, no credit. But in Delhi, if I purchase, no credit. But if it is on renting, leasing, hiring, statutory obligation, I will take the credit. I will take the credit. Right? And if at all it is any other case, renting, leasing, hiring, obviously you don't have any credit. So this is very normal step. So purchase, hiring actually goes same way. Exception is that statutory obligation. Now, understand another point. Whether I purchase or whether I take on hire a motor vehicle, whether I purchase a bus or take on hire a bus, I'll get the credit, I'll get the credit. Whether I purchase a car or take on hire a car, I'll not get the credit, I'll not get the credit. Whether I purchase or take on hire, there are two services which will always come. Repair and maintenance services and general insurance services. Repair and maintenance services and general insurance services. So when you talk about general insurance services or repair and maintenance services, if at all it is for a bus, if at all it is for a bus on which ITC is allowed, can I take the credit on repair and maintenance service of a bus? Yes. Can I take the credit on general insurance service of a bus? If at all there is repair and maintenance on a car, can I take the credit on car? Can I take credit on repair and maintenance service of car? No. Can I take the credit on general insurance service of a car? Simple. But again, there are exceptions. That exception is only for two service sector. One, manufacturer of motor vehicle. Other, general insurance service provider. Please understand with the example. These two exceptions are logical. All the exceptions are logical exceptions. Tata company is manufacturing cars. Tata company is manufacturing, say Tata company is manufacturing nano car. Whether Tata company will ever have purchase of cars? It will have purchase of iron and steel, purchase of plastic, it will have purchase of raw materials. Can it take the credit on raw materials? Yes. Yes. And Tata company will manufacture thousands of cars. Don't you think that in those thousands of cars, Tata company will take insurance service? Should it get the credit? Though it is for seating capacity less than or equal to 30, should it get the credit? Yes. Tata company will have repair and maintenance of these thousands of cars. Should it get the credit? Yes. So that is the first exception. Manufacturer of motor vehicles or vessels or aircrafts. Second exception, general insurance company. Now for this you have to understand main contract and subcontract. So that is general insurance. This will be used for all the other services coming forward. So we'll be using main contract and subcontract. So Reliance Limited is having a aeroplane on which it has taken insurance. And as the value of aeroplane is too high, general insurance company 1 goes to general insurance company 2 and tells that, see, my risk is too high. I'll share a part of risk which is called as reinsurance, so general insurance service company 1 gives insurance service to Reliance Limited and general insurance company 2 gives insurance services to general insurance 1. So this is called as main contract and this is called as subcontract. Now this entire thing was for an aeroplane purchased by Reliance Limited. Can Reliance Limited take the credit? General insurance company 1 will pay output tax. Can Reliance Limited take the input tax credit? No. It cannot take the credit. Why? Aeroplane by Reliance Limited, can it take the credit? No. So insurance on aeroplane? Can general insurance company 1 take the credit? General insurance company 2 will pay output tax. Recipient is general insurance company 1. Can it take the credit? When you are into subcontract, it is essential for your business to allow the credit. So whenever you have subcontract, main contract will not be eligible for credit, but subcontract will always be eligible for credit. You getting that point? Though it is for an aeroplane which is not eligible category, but subcontract always you will get the credit. Subcontract you will always. I will explain this with a lot of points. Next page you will be seeing food and beverages. ICI purchasing food and beverages for you to have snacks. Can ICI take the credit? No. Supposing ICI is having a mega event where thousands of students are going to come and I am the caterer. I will pay output tax. Can ICI take the credit? No. ICI cannot take the credit. Food and beverages, ICI cannot take the credit. Outdoor catering, ICI cannot take the credit. But I cannot make food for thousands of people. I give part of the work to Shankar. Shankar will charge output tax. Can I take the credit? Main contract, you cannot take the credit. But subcontract, why? My outward supply is catering my inward supply is also. It is essential for my business. See this example. My outward supply is, you only look at General Insurance Company 1. You only look at General Insurance Company 1. My outward supply is insurance. My inward supply is, it is very essential for my business. Allowed credit. One more example. Plastic surgery for actor or actress. I'm a doctor. I'm giving plastic surgery to an actor or actress. Can that person take the credit? You'll see it is there in block category. It cannot take the credit. Right? But I am owning an hospital, but technically I'm not operating for plastic surgery. I call a specialist. Who will come to my hospital and operate it. Oh, he'll be charging for me. So I am giving plastic surgery services to actor or actress. Can he take the credit? No. But the same expert, specialist is giving me the services. Plastic and cosmetic surgery. Cosmetic and plastic surgery. Can the hospital take the credit? Yes, subcontract. Last example. Because we are seeing, next page we are going to see all these points. So automatically I'll just only use one word. What is the word that I'm going to use? Subcontract, take the credit. Tata Limited is setting up its factory. I am building the factory. Can Tata Limited take the credit? Though it is only for business, but it cannot take the credit. Now, factory is too big. It is spread in hundreds of acres. I cannot do alone. I give the subcontract to Shankar. Right? So, I charge 100 crores rupees from Tata Limited. On that 100 crores, I charge GST. Tata Limited cannot take the credit. Part of the work I give to Shankar. He is going to charge me, say, 30 crores plus GST. Can I take the credit? Yes. What is the common thing in all the examples that we have discussed? Main contract may not be eligible for credit, but whenever it is subcontract, because it is essential for the business. Right? So when you see the following points, next category, motor vehicles category, we have completed. Motor vehicles category, we have completed. Next category is your employees category, personal use, personal consumption category. So if you see personal consumption category, what are the items that are coming here? Food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, rent a gap, life and health insurance, membership of a club, membership of health and fitness center, travel benefits to employees on vacation, not on business trip, it is on vacation, leave or home travel consideration. Normally in all these cases you cannot take the credit. You cannot take the credit. What are the list? Food, beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery, rent a gap, life insurance and health insurance, membership of a club, membership of health and fitness center, travel benefits to employees on vacation. If it is on business trip, allowed. All these cases, no credit. What are the two exceptions for all these cases? SS and both the points we have discussed. If it is because of statutory obligation, take credit. Normally, no credit. But if it is because of statutory obligation, example, you have to provide food to laborers in a factory because of Factories Act, take credit. If it is due subcontract, I guess we have taken a lot of examples. Food and beverages to ICI cannot take the credit. But I cannot give entire food and beverages or outdoor catering to ICI. I take the help of some other person. Can I take the credit? Yes. Subcontract? Yes. Clear? That is your personal consumption. Second category. Third category is immovable property related services. See, for an immovable property, that can be two scenarios. Either I can ask one person to give this entire immovable property ready, be it plant and machinery or be it this building, which is called as works contract. He'll purchase the goods and he'll give the labor, which is called as works contract. Which is the definition of works contract. During the execution of works, Both goods and services are given by the same person. Same? Or I can do one more thing. I'll purchase the goods. I'll purchase sand, I'll purchase cement, I'll purchase bricks, etc. And from the builder, I'll take only labor. I'll take only. So either it is works contract service, or I purchase the goods and I get the service of construction separately. It doesn't make any difference. If it is not allowed, it will not be allowed for any category. If it is allowed, it will be allowed for any category. Correct? I have two options for making this building ready. Either works contract or taking goods separately and construction service separately. And in either case, if it is immovable property which is ready, and if at all you're talking about a scenario where the same is capitalized in relation to construction of an immovable property, it is not allowed. If at all I am going to capitalize it, I gave an example of factory for Tata Limited, spread on 100 acres. For sure, it is only for business, but it cannot take the credit. No paisa. But see the irony. Government tells construction of factory which is going to be capitalized, no credit, big amount. But after factory is ready, small repairs and maintenance. Kuti repairs and maintenance, which is not going to be capitalized. Enjoy the credit. So it tells in a very big amount, no credit. Small amount not being capitalized, take credit. That is first point. And one exception which we have discussed always, subcontract. See, it is for Tata Limited. When I am constructing the factory, Tata Limited cannot take the credit. But if I am taking the service of another builder, can I take the credit? So whenever you are talking about subcontract is defined to be what? Both inward supplies and outward supply are the same. So subcontract, always I can take the credit. I repeat, if at all there is an immovable property split into two. Civil structure and plant and machinery. Civil structure will include telecommunication towers and pipelines outside the factory. Because plant and machinery is defined to exclude, this has been tested by ICAI, plant and machinery is defined to exclude telecommunication towers and pipelines outside the. So pipelines outside the factory and telecommunication towers are treated like civil structures. Now, if the same is capitalized and same is taken to profit and loss account, capitalized to balance sheet or charged to profit and loss account. If at all you are talking about civil structure or pipeline outside the factory or telecommunication tower, if the same is capitalized, big amount, no credit. If the same is taken to profit and loss account, small repair and maintenance, take credit. Plant and machinery, they don't talk nonsense. Whether it is capitalized or whether it is taken to profit and loss account, they don't talk nonsense. They tell that, okay, take full credit. There's a big spinning mill unit, there's a big machinery. Whether capitalized or taken to P&L, you can take the credit. Are you guys clear with this understanding? But mind you, pipelines outside the factory and telecommunication towers. We are talking about, say, Reliance Petrochemicals, pipelines outside the factory. Jio or Airtel, telecommunication towers. Technically, they are plant and machinery. But for GST law purposes, they are not plant and machinery. So they will be covered by the first category. And whenever you are not allowed the credit, there is always one exception. What is that exception? If it is subcontract, you take the credit. So me to Tata Limited constructing a big factory, Tata Limited cannot take the credit. But another builder is helping me out, I can take the credit on that particular portion. Clear? So that is about your immovable property. And finally, all the other points. you see the other points, they're all point number 1, 2, 3 and all is self-explanatory. It is already discussed in the earlier category. If composition tax is paid, can I take the credit? Because the composition scheme dealer cannot even charge tax on bill of supply. Obviously, I cannot take the credit because no, he cannot charge tax. He will give me a bill of supply, he cannot charge. I cannot take, it's only a clarification. It's only a, can I take the credit for the goods which are used for personal use? No. Can I take the credit where the supplier has committed fraud? Section 74, now additional to section 129 and 130. I cannot take the credit. So these 3 points are actually by default covered. What are the new points? Can NRTP take the credit? Just few minutes back we discussed NRTP cannot take the credit except for IGST on import of goods. IGST portion of customs duty. Only on import of goods will have BCD, SWS and IGST. So NRTP can take on credit only of that IGST portion on customs duty. On any other credit, NRTP cannot take. And goods or services which are used for the purpose of corporate social responsibility. Every company has to fulfill the obligation of CSR in terms of section 135 of Companies Act, mainly listed companies, correct? If they spend any amount for that CSR activity, they cannot take the credit. They cannot take the, and finally, the last category where you cannot take the credit because you are not going to pay output tax. If out of 100 laptops I purchased, I took the credit. One laptop is lost, stolen. I have to reverse the credit because I am not going to pay output tax. 2 laptops are destroyed. Destroyed means broken in front of me. Technically it is different. I cannot take the credit because I cannot sell it. I will not pay output tax. 3 laptops are written off. Very old laptops. Outdated. They are written off. I took the credit, but I cannot take the credit. I have to reverse the credit. And say 4 laptops are given as gifts or free samples. I cannot take the credit. I have to reverse the credit. And if I don't reverse the credit in the fourth case there is 2 options. Either I reverse the credit, I need not pay output tax, or I retain the credit, I have to pay output tax, deemed supply, para 1, schedule 1. Para 1, but in all these first 3 cases, very simple thing. I am not going to pay output tax. I have to surely reverse the credit. I have to surely reverse the credit. So in case of lost, stolen, destroyed, written off, I don't have an option. Reverse the credit. If you have taken the credit, but in case of gifts or free samples, either reverse the credit, don't pay output tax, or have the credit, deem supply, pay output tax. That is everything about your blocked credit. How we discuss block credit? 4 parts. Motor vehicles, vessels and aircrafts related, personal consumption related, immovable property related, miscellaneous. Now what is happening when you read it in block? You will not miss a point. Normally, I am sure you would have referred some other material or ICA material, but everything is mixed and given. You don't know how to segregate it. What we have done is segregated it. Motor vehicles related category, personal consumption category, immovable property category, others. It's easy to remember all the points of your blocked credit. Are you guys clear with this understanding? Your availment of credit question is complete only when you understand block credit along with conditions. Along with how many conditions you will see for taking the credit? You will not see 11 conditions. You will see only 9. 180 days and payment of by supplier of tax to government within 30th November next financial year. You will not see today, you will see later on. You will see it's not about availment, it is all about reversal and re-availment. Reversal with interest and re-availment. Right. So those conditions read along with block credit will give you a clear picture of what is your ITC available for that month. Are you guys clear with this understanding? your last part of ITC for today's discussion is all about your utilization of credit and proportionate credit. Utilization of ITC and proportionate ITC. So utilization of credit. Credit cannot be utilized in any sequence. There's a proper sequence where which you have to go with it. First, what is the credit that you are going to use? IGST. First it is IGST. So first IGST credit you are going to make it 0. IGST credit will be used for paying IGST output tax first, then CGST output tax, SGST output tax, any ratio, any proportion. Credit usage is for paying output tax. You cannot use credit in whatever way you want. First it is IGST credit used for IGST output. Then if there is a balance IGST credit used for CGST output and SGST output, any ratio, any proportion. Here you have to be careful, you have to do trial and error. You have to do trial and once it is 0, then you will touch CGST credit. CGST credit first will be used for CGST output. If there is a balance CGST credit, then it will be used for IGST output. But CGST credit will never ever be used for SGST output. CGST input tax credit can never be used for SGST output tax. If that is usefully, the last thing to touch is SGST credit. SGST credit first will be used for SGST output. If there is balance SGST credit after using it for SGST output, then it will be used for IGST output. This is the sequence of using the credit. What is, and by the way, whenever you are presenting your answer, please do not follow always your ICA method. Always go with this option, output tax, and when you are writing the heading, it is always I, C and S. Don't go with CSI. Less input tax credit. So this is I in IGST output tax, CGST output tax and SGST. When you are using the credit, always write in 3 lines. IGST input tax credit, then CGST input tax credit, then. So this sequence is now what you first it is IGST input for IGST output, then CGST output, SGST output. There you can play. You have to manage. At times you have to see carefully and adjust. The only one place where you'll have trial and error, do not split it 50-50 always. At times you have to carefully use it. At times you have to carefully use it. Right. So this is an area where you have to be very cautious. Then CGST credit for CGST output, then IGST output if there is a balance, but never for. Then SGST input for SGST output if there is a balance, but never for. So this should be the presentation. 3 line items. 3, do not write 1 line. Write the 3 line items, and the only area where you have to apply your mind and carefully balance. Why? Only when you do this, you will get net output tax to be paid in cash ledger. Do not stop the answer here. Always write the answer as ITC carry forward. ICA generally never writes this answer, but you are expected to write this always. So if there is any ITC carry forward, you will know whether you have worked out correctly or wrongly. It is not that at times you will pay by cash, but still there will be some ITC carry forward, which you cannot help out. There is no other way. So you will get answers where you are paying something by cash, but there is something in credit. You will feel it is incorrect, but that may be right answer. But where you have to be cautious. If you have not properly planned here, because of that also it can be a scenario where you are paying something by cash, but there is credit ledger also. If at all you are adjusting this, you will pay lesser in cash and your credit will become 0 or lesser. So here there is a planning. There's and ICA normally asks a question, optimum utilization of credit. Optimum utilization of, so this you have to be very, very careful. Right. And when you talk about proportionate credit, generally it is discussed at final level. You don't have rule 42, 43. But one thing you have which is there in your syllabus is proportionate credit for banking sector. For Sir, why do you have proportionate credit? Because your few outward supplies are taxable and few are exempt. And there are common inputs, input service capital goods, which are used for your taxable sales as well as exempt sales. Right? So you will be using proportionate credit. See, there is taxable output and exempt output. If there are few items which are used only for taxable output, take full credit. If there are few items which are used only for exempt output, no credit. But if there are common items, common input, input services, capital goods which are used for taxable output as well as exempt output, you will go for proportionate credit. And proportionate credit is a detailed discussion in 42-43, which is normally applicable for all the industries, but a very lengthy calculation, which is not there at inter syllabus. So one way is going for rule 42-43. But banks have given a special option. Banking sector, your banking company, financial institution, and non-banking financial companies have a special rule called as Rule 38, where it is said that banks can go and follow normal Rule 42-43, which is quite complicated. Or they can ignore complicated Rule 42 and 43. 42 is for input services, 43 is for capital goods. They can ignore it and they can go for a simple option. And the simple option is very simple. Very, very simple. What is that simple option? For all the common inputs, input service, capital goods, do a very simple thing. If at all these common items are covered by block category or non-business category. Block category. Block category means zero credit. Anyone will get zero credit. Even banks will get zero credit even when they are going for special option. Right? And then you are talking about branch to branch. Branch to one branch of a bank to another branch of a bank. Mumbai branch of HDFC Bank is providing services to Tamil Nadu branch of HDFC Bank. So output tax is for Mumbai, but input tax credit is for Tamil Nadu branch. If that is the category, for branch to branch, you take 100% credit. If it is an item under block category, it is always zero. Or non-business, always zero. If it is branch to branch category, 100%. Balance. Neither block nor branch to branch. 50%. Very simple. You split into three categories: 0, 50 and 100. Block, 0. Branch to branch, 100. In between, balance, 50%. That's it. Actually, ideally speaking, when ICAI said that 42-43 is not applicable at inter-level, they should have equally said Rule 38 is also not applicable at. But if at all question comes in this, be happy. Very simple. Right? Block credit, there will be 1,000 rupees credit. But what will be the input tax credit? 0. Branch to branch, there will be 5,000 rupees credit. You will take entire 5,000. Balance, there will be 1 lakh credit. You can take only 50,000 rupees credit. Simple. It's very, very simple answer. Right? So that is everything about your utilization of credit sequence and the concept of your proportionate credit to the extent of banks, financial institution, and non-banking financial companies. Now, what was left out in your input tax credit? You're talking about your special cases of input tax credit. It is nothing but mainly a section 18 that you have. Now, section 18 le totally 4 scenarios irukku. One scenario is all about conversion, that you're converting from one place to another place. Now, what is that conversion? Right, you're converting from regular scheme to you're converting from composition scheme to regular scheme. So you're ceasing to be under section 10 means composition scheme to regular scheme, or your supply was earlier exempt. Now it has become taxable. What is ulta of that? It's like composition scheme to regular scheme, exempt supply to taxable supply. What is ulta of that? What is ulta of that? Regular scheme to regular scheme to. Now you are opting for composition scheme. Ange velila poringa, inge ulla varinga. What is another ulta point of that? Taxable supply becomes exempt supply. Clear? So first scenario is your composition scheme to regular scheme.
exempt supply to taxable supply. Here it is exactly ulta. Regular scheme to composition scheme. Your taxable supply becomes your exempt supply. One more scenario is that here you're talking about you're taking new registration. You're taking new registration. When you're taking new registration, there are two possible scenarios. One, you're taking voluntary registration. One, you're taking voluntary registration. Other, you're not taking voluntary registration. You're liable for registration and you should have applied for registration within that 30 days is very important. Otherwise, you'll not get this benefit. You are liable for registration and you're applying for registration within 30 days apply பண்ணலாம் இந்த benefit கிடைக்காது. Right? What is ulta of taking registration? What is ulta of taking registration? Cancellation of registration. Actually, if you look at the points here, one scenario you will be taking the credit, another scenario you will be reversing the credit. Which is the scenario you will be taking the credit? Left hand side is the scenario where you will be taking the credit. Now look at the left hand side properly. You can take the credit only when you are registered, only when you are under regular scheme, only when your outward supply is taxable supply. All these are the criteria for taking your input tax credit. You can take the credit only when you are registered, only when you are under regular scheme. Under composition scheme, ITC is not allowed. Only when your sale is taxable supply. You pay output tax, you get the credit. If your outward sales is exempt, you don't pay output tax, you don't get the credit. Correct. Here, it is all about availing the input tax credit. Availing the input tax credit. What about this scenario? Here, it is all about reversal of input tax. Why? Now we have gone under composition scheme. Composition scheme, you are not allowed the credit. Or your sales has become. So if you are not paying output tax, you cannot take the credit. Or you have cancelled your. So if you have cancelled your registration, you are not registered person, you cannot take the credit. So now exactly ulta is happening. Right. So are we talking about availment of credit and reversal of credit by this special scenario? We are not talking about old purchases or new purchases. Old purchases. Okay, let me take on your left hand side first. Old scenario, if you are under composition scheme, if your sale is exempt supply, if you are not registered, you are not allowed the credit. Now you will be taking the credit. We are not talking about your old purchases because you are not allowed the credit. We are not talking about your new purchases because you can take the credit. We are talking about stock contained from old purchases. On the stock contained from old purchases. So this availment of credit is on what? Stock, not all old purchases. Stock which is contained from your old purchases. Stock which is contained from your old purchases. Likewise, this reversal of credit is on what? See, in the reverse scenario, earlier you are taking the credit. You are under regular scheme, you took the credit. Your sale was taxable supply, you took the credit. You are registered, you took the credit. Now, obviously, you cannot take the credit because either you are under composition scheme or your sale has become exempt or your registration is cancelled. But when you shifted, there was some stock of inputs and capital goods where you have to reverse the credit. So it is not about old purchases entirely. It is obviously not about new purchases. It is about stock of inputs and capital goods which is out of old purchases, not entire old purchases. It is only stock. Whatever is the available stock. Clear? Government will love availment of credit. Your left hand side scenario or reversal of credit. Your right hand side scenario. Loud and clear. Loud and clear. Because a lot of answers will be dependent on that. Government loves availment, government hates. So what government does? If at all you are availing the credit, in the first two scenarios, whether you are talking about composition scheme to regular scheme or your sale was exempt, now it has become taxable, you can avail the credit on inputs as well as capital goods. But when you are taking new registration, this has been repeatedly tested by ICAI also. When you are taking new registration, you can take the credit only on the stock of inputs. You cannot take the credit on the stock of capital goods. When you are, actually you can avail the credit. But if it is composition scheme to regular scheme, on inputs as well as capital goods. Exempt supply to taxable supply, on inputs as well as capital goods. Taking new registration, only on
Only on? Only on? But for reversal, it is not the story. For reversal, whether it is regular scheme to composition scheme, it is you have to reverse on inputs as well as capital goods. Your taxable supply becomes exempt supply. Reverse ITC on inputs as well as capital goods. You have cancelled your registration. Reverse on inputs as well as capital goods. So, when you take new registration, you can take the credit only on inputs. But when you cancel the registration, you have to reverse the credit both on inputs and capital goods. See, there's no difference between regular scheme, composition scheme to regular scheme to composition scheme. Both inputs, capital goods. Exempt supply to taxable supply to exempt supply. Both inputs and capital goods. Difference is where? Registration. When you take new registration, credit is allowed only on inputs, not on capital goods. But when you cancel your registration, reversal is there both on inputs as well as capital goods. First difference. Government loves availment of credit or government hates availment of credit? Government hates availment of credit. So when government hates availment of credit, government tells that when you're taking the credit, stock should not be older than any stock for any scheme. Whether it is composition scheme to regular scheme, exempt supply to taxable supply, you're taking new registration. Stock should not be older than 1 year. But whether government will take the same language for reversal? No. When you are reversing the credit, whatever is the stock date, they only tell that if at all an invoice is absent, you might take the help of market value of the goods. That's the only thing. But stock age is not relevant, which means stock can be 1 year old or more than. No such point. If you are availing the credit, stock should not be older than 1 year. Both inputs as well as capital goods. When I tell stock, it is all both inputs as well as. But when you are reversing it, any age, whether it is 1 year old or more than 1 year old, right? When you are availing the credit, you have to file a special form ITC 01 within 30 days plus extension, if at all given by commissioner. And if at all amount is more than 2 lakhs, they tell that no, we don't trust you. You are availing a big amount of credit. Take CA and CMA certificate and come. So when you are availing the credit, come soon. Otherwise, forget about it. 30 days plus extension. When you are availing the credit, amount is more than 2 lakhs. Please come with CA, CMA certificate. But when you are reversing the credit, government doesn't have any problem. So when you are reversing the credit, you have to file either ITC 0 form, the special form, or GSTR 10 when it is cancellation of registration. Forms are different. Form numbers you need not remember. You have to file a form. Whether you file it on time or after time, no worry. You have to reverse it. If you're filing after time, reverse with interest. Reverse it. But availment, come within 30 days. Otherwise, forget about it. Reversal, if you do late, pay with, reverse with interest. Availment, amount more than 2 lakhs. Come with CA, CMA certificate. Reversal, CA, CMA certificate is only required if you have doubts in the market value. Otherwise, no need of CA, CMA. No need. Forget about CA, CMA certificate. We'll take care of it. We will take care of it. When you are availing the credit, amount of credit will come and sit in your electronic credit ledger. When you are reversing the credit, can you use your credit? Reversal of credit is nothing but payment. Can you use the credit? Supposing you have to reverse 10 lakhs. You have credit ledger of 7 lakhs. Can you use it? Can you use it? Yes. So balance 3 lakhs has to be paid by cash. But what if you have to reverse 10 lakhs? Available credit is 12 lakhs. Can you use the credit? Yes. You can use the credit. I have to pay 10 lakhs. I have credit ledger of. Can you use the credit? How much to pay by cash? 0. I have to pay 10 lakhs. I already have. So how much I have to pay by cash? But extra 2 lakhs irukala. That excess 2 lakhs amount in your credit ledger go in the lapse. You can use your credit ledger. I gave 2 examples. Let us recall both the examples. I have to pay 10 lakhs. I have credit of 7 lakhs. Can I use the credit? Yes. How much to pay by cash? 3 lakhs. I have to reverse or pay 10 lakhs. I have credit ledger. Can I use the credit? I have to pay 10 lakhs. I already have 2 lakhs. Can I use it? Yes. How much to pay by cash? But extra 2 lakhs? Adu poich. That will lapse. Government loves reversal. Government hates Very different. So when you avail, things are, I'll just highlight the differences, right? And most important, the last few differences are not so important. Two important differences which will be tested in your exam. One, when you go for new registration, you can take only on avail credit only on inputs. But when it is about cancellation of registration, reverse both on inputs and capital goods. First important difference. Second is not only for registration, it is for composition scheme to regular scheme or exempt supply to taxable supply or new registration. When you are taking the credit, you can take only if the stock is not older than 1 year. Only last 1 year of stock you can do. When I tell stock of both inputs as well as, so same is applicable even for, so if capital goods is more than 1 year old, you cannot take it. But when you are reversing it, regular scheme to composition scheme, taxable supply to exempt supply or cancellation of registration, whether the stock is 1 year old or more than, you have to reverse it. You have to, other differences are there that when you are availing, come fast, 30 days plus extension. If the amount is more than 2 lakhs, CA/CMA certificate. But when you are reversing it, come any point of time. If you are coming late, with interest. And no need of CA/CMA certificate even if the amount is more than 2 lakhs. These are not so important points, right? Now the most important point is calculation of your credit, how to calculate it. So what I'll do, I'll give one set of example to make you understand both. So supposing you have stock of inputs 1 lakh units. 1 lakh units and amount per unit is, ITC per unit is 10 per unit. ITC per unit is 10 per unit. And you have one capital goods on which credit is say 1 lakh. This is GST portion. So this is also GST portion. We are talking about tax portion, correct? This is also GST portion. Let us evaluate. Right, I'll be making few changes in the end to make you understand the difference. Let us evaluate it first. Supposing you're talking about, and stock as on the previous day. So if you're converting today, stock as on the date of previous day. So let us take one example where it is all about, say, composition scheme to regular scheme. And here let us take another example where it is taxable supply becomes. So this is all about availment of credit and this is all about reversal of credit. And for capital goods, you have to give extra information. This capital goods was purchased on, say, 30th of May 2024, and all this conversion is happening on, say, 1st of April 2025. This conversion is happening on, rather we'll go logically, that dates will be random dates, correct? It cannot be first and all. So we'll go with say 20th of April 2025. Composition scheme to regular scheme, you can go out any point of time. Regular scheme to composition scheme, you have to come from 1st April of next financial year. So I'm just taking normal dates. Right. And let us also give a date. Understand that out of this 1 lakh units, 80,000 units are less than 1 year old and balance 20,000 units obviously are more than 1 year old. Rather less than 1 year old or more than 1 year old, they will give the base as 20th April 2025, which means if you go backwards, if they are purchased till 20th April 2024, they are within 1 year. If they are purchased before 20th April 2024, they are more than 1 year old. And capital goods have made sure that it is purchased within 1 year. If you have taken care of things properly, conversion epo agudu. And when the capital goods was purchased, 30th, is it more than 1 year old or less than 1 year old? It's within 1 year. I have taken care of it. This is not relevant for reversal, but this is relevant for availment. Now, calculate the reversal. Calculate the availment and calculate the reversal. What would be the answer for your inputs? when you are availing it? What will be the answer? Availing means whether 1 year is relevant or not relevant. Louder. Louder. So how much units I can avail?
Simple. It's 80,000 units. Whatever you have read, please try to apply it. Multiplied by 10 per unit. How much? 8 lakh rupees. When you're talking about reversal,
1 year is relevant or not relevant? Whether it is within 1 year or more than 1 year. So what will be the answer? Entire 1 lakh units multiplied by. So what is the answer? Clear? This is for inputs. Over. What about capital goods? What about capital goods? Capital goods for availment goes with subtraction method based on your quarters, and for reversal goes on multiplication method based on your number of months. Right? So one is subtraction method, one is multiplication method. Right? Capital goods life is always taken as 5 years. So how many quarters will be there in 5 years? 1 year, 4 quarters. So overall it will be 20 quarters, right? So that keep in mind. And how many months will be there in 5 years? 60 months. So that is the basis. Right? Now, when you talk about your capital goods calculation, what is the credit amount? 1 lakh. Is it within 1 year? Yes. We have taken care it is within 1 year. 1 lakh. Subtraction method is 5% subtract 5% per. Why? 5% per quarter means how many quarters were there totally? Totally 5 years, how many quarters? So 20 multiplied by 5. So finally it will become 0. Correct? So 5% per quarter. But wait, how many quarters? For availment, we go with quarters, subtraction method, and we go with quarters. And these quarters are calendar quarters. These quarters are calendar quarters, which means April to June 1, July to September 1, October to December 1, Jan to March 1. So, how many quarters are there? Technically speaking, if you have seen quarters, you would have found only 4. But it is not so. It is how many quarters are there? So, May 24 till June 24, 1 quarter. One part will be treated as 1 quarter. Then, July to September. Then, October to December. Then, Jan to March. Then, April. April will be April to June. Part of the quarter. So, how many quarters? How many quarters? So, totally you will have 1, 2, 3, 4. How many quarters? Normally, you would have taken 4 quarters. But here it is 5 quarters. So, minus 1 lakh. 5% per quarter. How many quarters? So, what is the subtraction? 25%. But 25% is not the answer. Subtraction. So, what is the final answer? What is the final answer? 75,000 rupees. Don't worry. The same will be used for sale of capital goods. I am not going to take the example again. The same will be used for sale of capital goods. Subtraction method. I will only tell subtraction method. How to calculate quarters? You know. What quarters? Normal quarters or calendar quarters? GST always is based on. So same one part of capital goods will be this portion. Simple. Over. But when it is all about availment, but when it is all about reversal, capital goods calculation will go as per multiplication method, and multiplication method you focus on months and normal months. No calendar months. Normal. Normally what you think about months, you will go with normal calculation of months. Now, multiplication method means what you will do? You will take 1 lakh multiplied by something divided by 60. And you will take balance months. Now, how to calculate balance months? How to calculate balance months? First, find out what is the completed months. What is the completed month? From May 24 to April 25, how many months are over? 30th June, July, August, September, October, November, December, Jan, Feb, March and April, 20 days. So 10 full months, 10 point something.
the 10 point something will be treated as 11. Whether it is 10.1 or 10.2 or 10.5 or 10.6 or 10.8 or 10.9 will be treated as. So it is not because, okay sir, April 20 days, adukku vendi 1 month. Illa, April 5 naal kuda nandalu, it will be treated as. So what are the completed months? 10 point something, which will be treated as. So what are the balance months? Balance எவ்வளவு இருக்கு? Balance is 49. So completed months is 11, but we are not focused on completed month. We want to see the future for reversal. So balance எவ்வளவு இருக்கு? 60 total months இருக்கு. அதுல 11 months முடிஞ்சிருச்சு. So balance எவ்வளவு இருக்கு? 49. So take your calculator. 1 lakh multiplied by 49 divided by 81,000. புரியுதா? What is the total availment? 80,000, 8 lakhs plus 75,000. What is the total reversal? Purida Vidyasa, I say to an extent, they have not fully gone through it. Piecemeal கேட்டிருக்காங்க, but not fully. Potential என்ன இருக்கு, என்ன கேட்டிருக்காங்க, it's not matching. But now, ICI is coming to that level, it may very soon ask all these points. Clear arka? Clear arka? That's all about this particular calculation. So when it is availment, subtraction method or multiplication method? Availment, subtraction method. Quarters or months? Quarters. Calendar quarters or normal quarters? When it is reversal, multiplication method. Reversal is multiplication method. And reversal months or quarters? Calendar months or normal months? Normal. You'll go 30th May to 30th June is 1 month. So normal calculation. Normal calculation. Clear? Clear? That is your calculation for this particular thing. Now when you talk about your, if I change this example and if I tell that it was all about registration, if I change this example and if I tell that it was all about taking new registration, what would have been the change? Left hand side, if I tell that it is not composition scheme to regular scheme, it is taking new registration, what would have been the change? I could not have taken on. So my answer would have been Purida. Purida. And if I tell that there is cancellation of registration on the right hand side, what would have been the change? No, that would have been one change. Answer would have been 10,81,667 or deemed supply value or output tax payable on deemed supply, whichever is higher. So when cancellation of registration is there, it is deemed supply. VJ registered is different from VJ unregistered. We both are different persons. So it is deemed supply. It is deemed. So when you talk about your reversal of credit, when you talk about regular scheme to composition scheme or taxable supply to exempt supply, the answer is simple what we have discussed. It would have been 10,81,667. First two cases. But when it is about cancellation of registration, answer, one part of the answer will be 10,81,667. But compare with deemed supply. Assume that these inputs and capital goods were sold. Assume that these inputs and capital goods were sold. You would have given some values, notional values, as per valuation rules, and that would have been a rate. So that you have to calculate. Don't worry, this question will never ever come for you because how to calculate the value is at final level. How to calculate the value is at final level. Clear? So difference irukku, but not relevant for inter so much. And what is the difference? I have explained to you. It is deemed supply. So one part of the answer would have been 10,81,667 or assume that these inputs and capital goods were sold. That would have been a value multiplied by the rate of tax on those inputs and capital goods, whichever is higher. Whichever is, that's all about this. And ICI க்கு புடிச்ச question என்ன இருக்குன்னா, it's all about registration, taking new registration. Taking new registration. And ICI plays with this beautifully. They tell that your supply was exempt. Therefore, you never took registration. Look at this question carefully because repeatedly this question has been asked. You are dealing only with exempt supply. So you never took registration. Suddenly your supply has become taxable. So now you are taking the registration for the first time. ஒரு doubt இருக்கு. should I look this question from the angle of exempt supply to taxable supply, or should I look from the angle of registration? If I look from the angle of exempt supply to taxable supply, I can take the credit on inputs as well as, but if I look from the angle of taking new registration, I can take the credit only on the basis of, what is the answer? I have to take from the angle of new registration. I have to take from the angle of new registration. Because when you talk about your exempt supply becomes taxable, they assume that you are already, technically speaking, there's an answer in the law, but forget about it. If the question is in such a way that you are always dealing with exempt supply, you had 100 crores turnover, but you are not registered because of section 23. Now your sale has, your outward supplies become taxable. Therefore, you are applying for new registration. Question Patana, you will be confused. Should I treat this as exempt supply to taxable supply because I can take the credit on inputs and capital goods, or should I treat it as taking new registration because I can take the credit only on inputs, not on? So which is the answer? New registration. So you can take the credit only on? You can take the credit only on? Slightly, I say change it one time. They ask the same question that you are dealing with exempt supply, now it has become taxable supply, but the question has one change. You are already registered. You are? Then what will be the answer? Exempt supply to? So you can take the credit only on, both on inputs and capital goods. Clear? What is the favorite question of ICI in this entire thing? Sale of capital goods. Sale of? So when you are talking about sale of capital goods, very simple calculation. Sale value multiplied by rate of tax, one answer. Sale value multiplied by rate of tax, keep it on one side. Normal sale, if sale value is say 8 lakhs multiplied by rate of tax. See, when you are selling something, treat it as normal sale. Don't treat it as sale of capital goods or plant and machinery. Normal sale, what would have been your GST? Supposing I purchased capital goods for 10 lakhs, now I am selling for 8 lakhs. What would have been my GST? What is my sale value? Multiplied by the rate of tax. Just like any other normal sale. Just like any other, keep it on one side. What is the other side? ITC availed on purchase of capital goods minus 5% per quarter or part thereof, and quarter is calendar quarter. Keep it on the other side. Whichever is, I'm not going to work out ITC minus 5% per quarter or part thereof because we have already worked out just a few minutes back. Just a few minutes back. Whatever is the credit on that purchase, purchases of 10 lakhs. Credit would have been, if at all it is say 18%, credit would have been 1,80,000. So 1,80,000 minus 5% per quarter or part thereof. One part of the answer. Second part of the answer. Second part of the answer is normal answer. Your sale value multiplied by, first don't treat it as capital goods sale. Normal sale, what would have been the answer? Selling price multiplied by. So that is tax on transaction value. That is tax on. The other part of the answer, ITC minus 5% per quarter or part thereof. Whichever is, the answer is there in front of you. Clear? But for certain special capital goods, they make the life simple. They tell that don't go to this complication of ITC minus 5%. But for whom? Only for refractory bricks, molds, dies, jigs and fixtures when they are sold as scrap. When they are sold as, because you cannot find out the identity. When you have purchased, you cannot never find out. When you can never find out when you have purchased, you can never find out what was the input tax credit. When you can never find out what is the input tax credit, you cannot calculate ITC minus. So they tell, forget about that complication. What would have been your normal answer for any sale? What would have been a normal answer for any sale? This tax on transaction value is nothing but selling price multiplied by. Tax on transaction value means what? Selling price multiplied by. Finish. Done. Over. But when? Refractory bricks, molds, dies, jigs and fixtures, when they are sold as, not when they are sold newly, when they are sold as, then they tell that forget this ITC calculation, treat it as a normal sale, take the selling price multiplied by rate of tax. That is the answer. That is the answer. This is rarely asked. What is normally asked? This area, normal capital goods, normal plant and machinery,
Selling price multiplied by rate of tax. Keep it as first answer. A. Then calculate B. ITC minus. At the time of purchase, you would have taken some input tax credit. Don't take the purchase value. Take the GST value. ITC is the ITC minus 5% per quarter or part thereof. Take the second answer. Compare both. Whichever is higher. Done. And the last part of the special cases. Your transfer of ITC in case of transfer of business. Very simple calculation. I will be asking question one by one. You please give me answer one by one. I am selling my company to Praveen Jain. So VJ Limited is selling business to PJ Limited. I have a credit balance 10 lakhs. Can I give to PJ Limited? But there's a condition, two conditions. I should transfer my liabilities. So PJ Limited should be ready to take my liabilities, and there should be a CA/CMA certificate irrespective of the amount of credit, whether it is 1 lakh, 2 lakh, 10 lakhs, CA/CMA certificate. Simple. Why I am transferring my credit? Because credit otherwise is of no use for me. When I am cancelling my registration, if I have a credit, can I take refund? No. Credit refund is allowed only in two cases: exports and inverted duty structure, detail of which is there in final and all. So you cannot take the refund. But can I give it to some other person? Yes. When I am selling my business, I can give it to the purchaser. Transferee. Condition? Two conditions. I should give all my liabilities tomorrow. Whatever is my liability will be his liability. Second, CA/CMA certificate. Right. First, over. Second, it is about merger. So VJ Limited, PJ Limited merges into VP Limited. VJ Limited has 10 lakhs credit. PJ Limited has 20 lakhs credit. What will be the total credit which will be taken by VP Limited? Simple addition. 10 plus. Can both of us transfer the credit to the newly amalgamated company or merged company? Yes, but same condition. What are the same two conditions? Both of our liability will be taken by new company VP Limited plus. So there will be CA/CMA certificate. I will be filing a separate form CA/CMA certificate. PJ Limited will be filing a separate form CA/CMA certificate. Simple. Over. Normal sale, one person to one person. Second is amalgamation merger. Third is special, demerger. VP Limited is now split into VJ Limited, PJ Limited. What is ulta? VP Limited is having 30 lakhs credit. Can it give to VJ Limited, PJ Limited? Yes or no? Yes, same two conditions. Liabilities transfer, CA/CMA certificate. Question is, how to give that 30 lakhs? What amount to give to VJ Limited? What amount to give to? See, if it is amalgamation merger, it's simple, addition. But if it is demerger, it cannot be subtraction. How can it be subtraction? It cannot be subtraction. Subtraction now, what to be subtracted? I have to give it to them. Proportionate. Proportionate is always based on multiplication. But what proportion? Based on the value of assets given to VJ Limited and PJ Limited by VP Limited. Proportion of what? Value of, and important point, value of what assets? All assets or assets only on which ITC is taken. Though you are transferring the credit, but only don't see the assets on which ITC is available. Total assets. So VP Limited assets are 100 crores and 40 crores is given to VJ Limited, 60 crores is given to PJ Limited. So what is the proportion? 4:6. So 30 lakhs will be split between VJ Limited and PJ Limited in the ratio of 4:6. Or you can simplify it further, 2:3. Whatever it is. Then what you will do? You will take 30 lakhs multiplied by 4 divided by 10. Give it to VJ Limited. 30 lakhs multiplied by 6 divided by 10. Give it to PJ Limited. Demerger. Simple. Questions will never be asked, but just these are the areas where they can test the question. But what assets you are going to take? So don't look at only those assets on which ITC is available. Total assets, entire assets, whether ITC is available or not. Similar to demerger, that's a question, there is a concept called as taking multiple registration. Taking multiple, it's technically not demerger. There are no multiple companies. I have a company VJ Limited. It had one registration in Tamil Nadu. Now it is taking 3 registration. Now it is taking. So can I go for multiple registration in the same state? Yes, it is my option. I can go. I had 30 lakhs credit in my credit ledger. It is similar to demerger. Now one registration is split into 3. One registration is split into, but there are some differences. First difference, there is no condition of transfer of liabilities because it is VJ Limited. Now also it is VJ Limited. Earlier one registration, now there is no condition of transfer of liabilities. There is no need of CACMA certificate. There is no need of. Third difference, I can decide in whichever ratio I want to give. I can decide registration 1 keeps entire 30 lakhs credit, or registration 1 gives entire 30 lakhs credit to registration 2, or registration 1 gives entire 30 lakhs credit to registration 3, or registration 1 shares 30 lakhs credit between 1 and 2, or it is shared between 1 and 3, or it is shared between 2 and 3, or it is shared between 1, 2 and 3. Purida. That option is not there in demerger. Conditions are there in demerger. Here there are no conditions. Demerger, there is no option. You have to give in a particular ratio. But in case of multiple registration, what I can do? Either keep it myself, or give it entirely to 2, or give it entirely to 3. So when I'm keeping it myself or giving entirely to 2 or entirely to 3, there's no problem. 30 lakhs with myself, no change. 30 lakhs given to registration 2, give it fully. 30 lakhs given to registration 3, give it fully. But when I'm deciding to share between 1 and 2, or 1 and 3, or 2 and 3, or 1, 2 and 3, it has to be on the basis of value of assets. Value of Purida. There can be multiple answers. See, what is the technical difference between demerger and this case? Demerger, VP Limited splits into VJ Limited and PJ Limited. But when you talk about this case, VJ Limited registration 1, now it is registration 1, registration 2, registration 3. So here there are conditions. There are 2 conditions. Here there is no need of 2 conditions. What are the 2 conditions, by the way? No need. Liabilities anyways of VJ Limited. What is the other condition? No need. It is among themselves. It is registration 1 is also VJ Limited, 2 is also VJ Limited, 3 is also. These 2 differences. That is first thing. Second, here it has to be given to both of them. VP Limited cannot decide to give only to VJ Limited. It cannot decide to give only to PJ Limited. It has to give proportionately. But here there is an option. Either you have it, or give it to 2, or give it to 3, or share between 1, 2, or share between 2, 3, or share between 1, 3, or share between 1, 2, 3. Whenever you are sharing, value of assets. Value of assets. Right? Great amount of scope is there to ask questions. Not ask. Forget about it. So entire thing. What was the important scenarios? 2 important questions are repeatedly asked by ICA. 1. New registration merged with exempt supply to taxable supply. Second, sale of capital goods. So focus on these 2 areas. Questions are repeatedly asked from these 2 areas. That's everything about your input tax credit.